Good morning, everybody. Welcome to the stream. So there is some negative news out there. Obviously, it was expected, higher than expected. CPI numbers are here. This is Consumer Price Index. Prices jump 5% in May, fastest pace since the summer of 2008. This is not good. Headline consumer price rose 5% year over year in May, the fastest pace since August 2008 and higher than Wall Street expectations. Excluding food and energy prices, the 3.8 gain was the strongest since May 1992. Surging used car prices helped drive much of the inflation gains. Initial jobless claims totaled 376,000, a touch higher than the estimate. So this is negative news. Markets are still actually stabilized and in good standing, which is surprising. Um, if we look at the bonds are slightly rising. This is the indicator here of inflation here. Um, it's rising by 0.027. It's at 1.516. So last month when it rose to point 0.1, when it rose from not sure for exactly where it was at, but it rose to 1.75. Markets went down, so this was extremely negative news. And right now, futures and the VIX looks okay. Uh, I guess they haven't digested information, or if the markets are just going to totally ignore it this time. Not exactly sure what's going on here. Let's see the VIX here. Um, let's see. And for on the flip side, we have Wish here gapping up after hours at 11:13. Let's take a look at the VIX. VIX not showing here. Um, let's see here. US VIX. And VIX not acting. Oh, VIX is slightly up here. Let's take a look at 5 day. Okay, so the VIX is rising. It's at 17.92. Um, so just be cautious out there. Last month, I might be adjusting some of my positions. Um, oh, also, if you're wondering, I added more money into my account. I didn't make money overnight. So, for those of you that have been following my stream, um, so this might be something where we're gonna see a pullback for the next few days. I mean, this is what happened last month when the numbers came in, and just be cautious out there. Um, so it's gonna be interesting to see what happens today. We're just a few minutes away from the open. We're about 4 minutes away from the open here. Let's just take a round and see what the stocks are doing. So we're slightly up here at 11.16. We have Clover Health here bouncing here from the yesterday's close. Clover Health $1 up from yesterday's close. Wendy's bouncing. So we're seeing a bounce right now from yesterday's close here. AMC slightly lower. AMC at 47.90 now. GameStop lower. Sundial Growers slightly higher here, just 1 penny, so it's pretty much flat. Workhorse slightly lower. GoEV pretty much flat. GTT flat. BlackBerry lower. Let's take a look at the overall market. S&P 500. S&P 500 gapping up here. This is odd. I mean, this is bad news, and S&P 500 slightly up. Let's look at the Qs. Yeah, we have like a bounce here. So just be cautious out there, guys. At the open, I don't know. Um, I believe last time CPI numbers came out was here, and we can see what happened there. And we're here again, once again, all-time highs. So we are about 2 minutes away from the open. So it's a mixed bag once again. Some of the meme stocks, some are down and some are bouncing up. Um, let's take a closer look to the 5-minute chart. So we're seeing here about $10 being a support line here. Wish holding up above $10. I have a few contracts around Wish, and that's what we want to see. We want to see Wish holding above $10 if we have any hope to go higher.
Many as 100 MAX jets. The United Fleet Management this past couple weeks has been fascinating.
Yes, it sure has. A great interview this morning with Phil LeBeau about all the things that United's doing. Then, of course, Andrew and Joe talk about how much debt they have, for heaven's sake. But look, my Chapel Trust owns Boeing. I don't think this is going to be a good quarter. I mean, they get these orders, but they need far more than orders. They need certification from China, and they're not certified. They get certification from China. That's when I think you start getting excited. And I saw that there was a little movement between our country and China last night. Kind of not a rapprochement by any means, but maybe the suggestion that we could go back to being co-opetition rather than just have something that amounts to just pure Cold War. But I thought the United thing was important for Boeing, but still not enough. Still not enough to really move the needle here.
Right. But it is a reflection of what they believe will be long-standing support in traffic.
Yes,
right.
And the Southwest Air was first, and you don't want to be the last guy because they're going to be able to raise prices eventually, probably get a good deal from Boeing. But I think it has much more to do with travel in the Roaring '20s. I think that everyone's afraid of getting, in the airlines, afraid of getting caught not having enough planes for the great reopening, where people are going to start going to Europe very soon. There's going to be a rush of people. Hey, Scott Gottlieb, the fantastic doctor, he's willing to go to Europe.
Well, Biden and Boris Johnson are going to be talking about that as well later this morning.
It's big.
In terms of sort of a reopening for regular travel, so to speak.
I'm going to Italy.
Countries.
I'm going to go to Italy. My daughter lives in Spain, but she's coming back. But, geez, my daughter lived in Madrid. That was a tough city to live in. Well, but yeah, I think there's going to be a lot of travel. And it's going to get very hard to get reservations because they've all cut back. But they're going to, especially into Asia. But it's coming back.
Yep. As the opening bell at the big board here, it's Zeta Global, a cloud-based marketing technology company celebrating its IPO at the NASDAQ. Also celebrating an IPO, Monday.com, maker of workplace management software. We'll have the co-CEO on Tech Check. You know, you're talking about Europe. Vaccines are important. Apparently, the Times says you have until, if you work at Goldman, you have until noon today to tell your boss whether you've been vaccinated or not. And it's legal to ask.
Well, here we get asked. I've always felt that would happen, but it is a big violation. A lot of people feel it's just big violation of civil liberties. And
we're getting a nice pop here on Wish. Getting a nice run here on my account. So right now we're at 11:32. Let's see if we get some volume here compared to yesterday. If we look at yesterday's volume on Wish on the 5-minute chart, we had a lot of activity. Right now, this is not looking as strong as yesterday, but we can slowly creep up there over some time. So let's see what is happening here. Let's see some of the gainers right now. We have Wish and Clover Health slightly up here. We have Wendy's slightly up here, but giving back. It looks like a dud here. GTT slightly up, not by much. This looks like it might be short-lived, and most of these trending stocks that I have in my watch list are red. Oh, okay. Some look like they're switching back to green. And interesting that CPI numbers were bad. This is the S&P 500, and there's more inflation coming with more potential of higher interest rates, and market's not really doing much. Last month they threw up, and right now it's steady. Not much of reaction so far. So this is a QQQ, pretty much flat at this open. Let's look at the S&P 500, up again. Let's look at the VIX. VIX gapped up slightly and now cooling off. I mean, this is odd. I mean, this is difficult to predict here in the market for now. I mean, I'm invested. I haven't changed any of my positions, but yeah. Let's keep looking here. Let's see the 5-minute. Not a lot of volume. Markets look Like it's missing some activity here, but I'm fine with not a lot of volume if we can hold up and just trail back up.
In yards, that's a huge amount of space.
Yeah, well, how
that they
about-
committed to in August.
Well, how about the Salesforce Tower, the largest building in San Francisco? I mean, geez,
So-
they got the Ohana room up
Is it
top.
going to be empty? I mean, what's going to go on in those
Maybe
buildings?
lease them to other people. I don't know. I still think that Manhattan is surprisingly strong versus how many people and buildings are kind of a bit empty.
Right. So, it'd be interesting to see. Now, younger people who are in New York or in a major metropolitan area probably don't want to be home, I would think. If you're a programmer, maybe
Right.
but it depends.
Or if you're a
I'm sure.
loner. I mean, this has
You're a
been
loner.
one of the greatest times for introverts.
I guess.
He said, looking David square in the eye.
I am not. What I realized is that I
You like
play
people.
introvert on TV, but I am not.
Really?
Yeah.
Holy cow.
I go out every single night.
I thought this was the
I got a
halcyon
call
time.
last night. I was sitting on my couch, 6:30. They said, "Come on over, have a drink." I was like, "Done."
Really?
Here I am. Yeah.
You just did it.
I just did it.
I'm impressed
That's
with
the
that.
beauty of New York.
I'm impressed with that.
Yep.
And was it at the Time Warner Center where you could shop and eat?
No, it was on Madison Avenue. Very nice.
I got to hand it to you.
Yeah.
The Mark? Did you go to the Mark?
No.
I went to
didn't.
I went to the
walked
Mark
by
the other
there.
day.
The Mark is wide open for
That
business.
place is busy.
Yeah, it's really busy.
Bring your checkbook because it's
God.
not cheap.
No, bring it. No,
By the
have
way,
the other
everything is
person
more
bring it.
expensive
Yeah.
now.
Yeah.
Eating out.
Oh,
is-
everything.
yeah.
Everything.
Bring your
Eight-
Bitcoin because you're going to need a lot of it.
Yeah, $8 beers.
Jim, we got an S&P record high.
Wow.
And we got almost every Dow stock in the green. Why, in the face of a hotter than expected inflation number?
Candidly, I think there were a lot of people who held back, wanted to see the hotter than inflation number, which they expected. And now they said, okay, now that's over with. Let's do some buying. Because they've been on the sideline and they want to get in. I don't think that's actually unusual these days because there's still so much buying power out there. People want in, and not just in meme stocks. They want energy stocks because oil's going up. They want healthcare stocks. That one I don't get at all. But
Hey, Brett. Good morning. Yeah, so if we take a look at Wish, I just explained a little bit earlier, the volume is very weak today. So it's going to be interesting how markets move. Also, the CPI numbers were hotter than expected. That was kind of obvious. They're going to come in at that level, at these levels. But if we compare, this is a 5-minute chart on Wish. If we compare yesterday until today's open, this is yesterday's open. We see a lot of activity, a lot of volume, and we saw big moves. And right now it's a dud. We don't have much of activity here. Volume's very low. So not to say that it can't move or that volume won't come in later, but it's a weak opening right now for these stocks. Let's look at Clover Health. Yeah, it's a very weak opening for the board across. Let's see most of these stocks. Let me see AMC. AMC still has some activity here. It's not bad. AMC has some pretty good numbers here. Yeah, so Wish, it's looking a little bit dry here right now.
Line was somewhat unique in that also what it was going to be transporting, right, was
right, and Canadian crude,
tar
but
sand
the
oil,
worst
wasn't it?
bituminous create.
Yes.
You know,
I mean, it wasn't-
no, thank you. Okay,
not right. So
But-
it's not pipeline coming from the Permian.
no, not at
No.
all. No, not one
was-
bit. But you know, I happen to like One OK. One Oak is a very good stock to own. I think Kinder Morgan's going to make a big comeback. KMI, not a it's a C corp. I like. I'll tell you, there's a lot of these. You might want to even be in MMP, which I have not recommended in ages. Magellan Midstream, which is 52-week high with a 7.8% yield and run by Mike Mears, who is a fantastic guy who knows the FERC better than anyone. Used to come on the show. A lot of these guys have kind of been in a fallout shelter for a while, but I keep continuing to say that Pioneer, Scott Sheffield is a genius. Sheffield is a genius.
Meanwhile, ExxonMobil's right at a 52.
Well, that's no longer. That's now a.
It's more than a double.
I mean,
from its low of 30 of 31.
Well, that
Coming
poor-
off, by the way, that We talk about it a lot, but it was potentially a seminal moment where
we should talk about that
Engine
more.
One got those three directors. I think they're going to make it official, I think, as soon as tomorrow.
But those people are against fossil fuel. Exxon, as we know from that great book about Rockefeller, that was actually founded on the concept of fossil fuels.
Yes, it was.
And then it stayed that way.
Pennsylvania.
Yes, exactly right. Oil City. Wow. You're in your game today.
Oh, yeah, baby. Titan's a great book.
But Exxon's an oil company with a board that looks like Greenpeace.
That is overstating it, I believe.
Yes, so?
I think.
So for those of you following SPACs, we have a new definitive agreement here just announced right now. Venus Acquisition Corporation announces proposed business combination with VE Algorithm. I'm not familiar with VE Algorithm. The ticker symbol here is VENA for this SPAC merger here. Let's take a look at what that looks like here. Let me pull that up. And let's see where it's trading. Here we go. So I pulled up the chart, and there's maybe I'm missing something here. New York Venus Acquisition Corp, Vena. I pulled Vena and Vena stock. And let's see here. So Vena stock here is at $9.94, and Vena is a publicly traded special purpose acquisition company, and VE Algorithm, a Cayman Island exempted company operating in China and controlled by Wimi Hologram Cloud Inc., announced today that they have entered into a definitive agreement. A newly created merger subsidiary of Venus will be merged with and into VE Algo, with VE Algo being the surviving entity and becoming a wholly owned subsidiary of Venus. Okay, so it's an algorithmic company of some sort. I'm assuming finance, and the ticker symbol is VENA.
But Signet shares, Jim, up 16% as they
Janet,
crush numbers and raise the guide.
Janet Droso, she just sent me a fantastic. She's unbelievable. Now, here's another one of these CEOs nobody talks about they should be talking about. She is delivering numbers. By the way, Signet is doing good business in omni-channel. I mean, she has turned these stores around. Should I tell them what they are?
I know what they are.
What? Name one.
Hey.
Every kiss begins with Faber.
Nice job, Dave.
Yes, absolutely. K.
Right?
Zales, yeah.
Yes, I got it.
Piercing pagoda. You know what a piercing pagoda is?
No.
It's
where you
the
get
one
your
in the
ears
middle
pierced.
of the.
Piercing pagoda?
Piercing pagoda's doing well.
That sounds scary.
It's doing well, the
No,
piercing
I know.
pagoda. But she's done it. She's coming on the 3? She's my guest.
Apparently, she's Sarah
I'll
Eisen's
see. I
guest.
gotta go see what this is about. No, I'm not kidding. This isn't right. She's in the Eisenhower? I discovered her. She's from Georgia, University of Georgia. She's a Bulldog. All right.
No, but it's close to a 3 or 4 year high.
And it should
today
be. And
on
it used to
Signet.
be a pawn shop, basically. It used to be a Shylock. It was a merchant of Venice. And remember what they did was they made all their money loaning to you. Now they make all their money selling jewelry. And she did it. She cleaned the company up, pairs of brilliance, and she's brilliant, and she's great, and she's not coming on Mad Money. and so I'm not getting my stuff there.
Sadness now reigns.
Well, I'm a competitive
We've gone through a
person.
gamut of emotions this
I'm
morning
little-
already, and we're only 41 minutes into the show.
I like to win.
Yeah, nothing wrong with that. As we said, S&P record high, Dow's up 270, 10-year 1.5 again. Let's get to Rick.
Yes, the again is the important salient word in that sentence. Again, let's look at some charts of CPI, shall we? Year-over-year headline up 5%, and you see on that chart, takes us back to 08. Actually, the previous number of 4.2 took us back to '08. '08 was one of those big up CPI year-over-year years. And if you look at core, up 3.8, haven't been there since Jan of '92, as you see on the chart. Now, back to that 10-year. Let's look at it intraday. Let's start that about 6 a.m. Eastern. You can clearly see, definitely we had some volatility 8:30 Eastern when the data was being released. But as Joe said, as Druckenmiller has said, that the signals to the Treasury complex, indeed any sovereign, is hugely distorted due to policies of central banks. Even Christine Lagarde today at her central bank meeting said, whoa, hold the phone. It is way too early to stop this bond buying, and bond buying distorts the signals of the market. So it is hard to tell what the Treasury complex thinks of today's numbers, but what we can tell you is that investors are going along with the Fed to some extent. They're not going to fight it. It has not been very profitable to fight it. Does that mean that they believe there is no inflation and it absolutely is transient? Not necessarily. They're just going along with the market till they see something that they can act upon that will make it through the clouds and through the smoke and actually get a signal out. And there will be those sessions of Treasury trades. Now, if we look at another measurement of inflation that is being scrutinized these days, it's the break-even 10-year, the comparison between a coupon 10 and TIPS, which is Treasury Inflation Protected Security. And that relationship in the 230s, you see on this chart, has been moving down. That's a month-to-date chart, a daily month-to-date chart. And at that point, it is now the lowest rate in 2 months, going back to April. So that's a good thing, but remember, there's distortions because TIPS really don't trade very aggressively. So that pricing point, you can't put a huge amount of faith in it, but the general trend has been a bit lower. And finally, I mentioned Christine Lagarde. Look at a 2-day of the euro. Yes, it's off its worst lows, but definitely bond buying means, well, it means a weaker currency. Carl, Jim, David, back to you.
All right, Rick, thank you very much. Rick Santelli. All sectors are green. You got the VIX back below 17. At this point, it is the largest gain for the Dow since May 14th. We're back in a moment.
Okay, just a word of caution. I don't know if you guys heard him. I agree with him. It is just weird. Maybe because everybody was anticipating higher than expected numbers, and it was to no one's surprise. And the markets like to make a fool of the most of people. So everybody was expecting higher than expected numbers for the CPI, which we got last month. Last month it was surprisingly higher, and the markets threw up and tanked. And this month everybody was expecting a higher CPI number, which we got, and markets are reacting normal as if nothing happened. So it's just weird what is happening. These kind of things, anomalies that happen, you'll see a slow reaction where we're going to see a reaction in the markets by tomorrow or next week. But who knows? Maybe we don't this time. I mean, markets are not reacting too bad. S&P 500 is at all-time highs, basically, breaking all-time highs on this negative news, which is odd. But look, we're going higher here. We're at 425. Me personally, I'm risk on. I'm invested. I haven't moved my positions, and it's just odd, but just staying optimistic and riding the wave until it ends. I'm gonna wait maybe another day or two before I start adding some new positions, and but unless I feel compelled to, I see something amazing, and then I'll jump in. But I'm pretty invested right now, heavily on some of with some options. So I'm just going to be cautious for now. Another thing I want to pull out here that I just saw right now, I'm going to pull up the short interest on Wish. So now Wish is getting interesting. Now we're getting some big numbers on Wish. Big numbers where we can see a further move up, unless this influences for the stock to go down. So this is the Wish. This is a Wish short volume ratio numbers. So yesterday we got pretty high numbers here, the highest in the past maybe 2 weeks. We got a short interest, obviously, because the stock ticked up. We got a short interest of 26.25%. And if we look at the graph, this is what the graph looks like. It looks like we're going higher as Wish is at these levels. And this could create a further move higher, but it might take a while for this to develop. So I was very surprised here of how much short interest went up there, because this is a stock that's also owned by a lot of institutions. But the numbers here look higher here for Wish. So big jump here. We'll see where Wish stands at the end of today.
Public on the NASDAQ today, price 5.75 million shares at about $20 a piece. Joining us now, first on CNBC, is David Rosenblatt. He is the CEO of First Dibs. And David, good to have you. Congrats on the IPO. And let's get right to the business in the short time we have. You know, your growth rate increased dramatically over, let's call it, the last year. I think you grew 16% from 2019 to 20. But, you know, March of 20 to March of 21, that quarter, up 43%. Can you sustain that kind of growth, or was that perhaps more the result of people at home as a result of the pandemic who are now, you know, not on their computers as much?
Yeah, listen, David, first of all, thank you very much for having me on the show. You know, from my perspective, we certainly did benefit from work from home and COVID in general. On the other hand, you know, I think it's pretty clear that COVID simply accelerated a long-term trend that was already in the midst of happening. Furthermore, you know, we're super early in the adoption cycle of this industry by digital. You know, we have a tiny percentage of the market which has begun to move. And secondly, when we look at a more bottoms-up, from a more bottoms-up perspective, at the behavior of the customers we've added since the onset of COVID, those customers have demonstrated better engagement metrics than the cohorts of customers we added prior to COVID. So I think, as with many things that have to do with digital, the world is not becoming less digital, it's only becoming more digital.
Yeah. All right. So for those people who are watching today, who are new investors, obviously, in a public company, what are the metrics that you feel that are most important? Is it engagement? Is it average price? Is it having more and more sellers on the marketplace?
Yeah, I mean, what we optimize for is growing GMV. We're hired by our sellers essentially to produce digital demand for them. And so that's, you know, we're in the business of generating GMV. I think secondarily, we also focus on adding new customers to benefit from this secular shift that I described.
387 million in GMV for the 12 months that ended with the March quarter. David, what kind of growth rate can you point to here?
Yeah, listen, I think we're super early in the conversion of this industry from offline to online. You know, we did roughly 345 million or so of GMV last year. We operate in a $129 billion industry. So I think we've got a very long road ahead of us, and it's extremely early innings. That conversion digital has been accelerated by COVID. But again, as we see from the engagement metrics of those customers we've added since over the last 15 months, they're healthy, they're engaged, and we expect that to continue.
Yeah. Finally, David, you're no stranger to the capital markets in a way. Obviously, you sit on the boards of Twitter and IAC. I'm curious, I would assume you were approached to go public via SPAC, but you chose the traditional route. Why?
So we evaluated both direct listings and SPACs. In the case of direct listings, it was important to us to be able to raise primary capital in addition to simply being public, and that isn't possible right now. In terms of SPACs, we did take a look at it. We felt, though, that there were a lot of benefits associated with the traditional IPO process. Specifically, internally, we felt that we would benefit from the higher diligence requirements of going public via IPO. And externally, we felt that the business and we would benefit from educating the buy side. And we've done that through hundreds of meetings over the past weeks and months.
All right. Well, we look forward to following the progress of the company, David, and certainly appreciate the brief time we had with you this morning. Thank you.
Thank you.
We will get Stop Trading with Jim in just a moment. Don't go away.
So we have Clover Health here at a support line from yesterday's gap up. So this is an interesting level here. Let's see if Clover Health holds here. If not, we could see it filling up this gap, going down almost 4 points if it can't hold this level. So we'll see what Clover Health does here at this area. We have Wish holding up nicely here at $11. We see the 10-day period moving average here. And Wish gapped up and holding here on the 5-minute chart. Let's see if Clover Health, sometimes they do a fake out where it breaks down the support and, goes a few cents lower or, a few ticks down. And then you'll see the recovery after that. I'll give Clover Health up until $16 to see if it holds above that area for it to go back up.
Out the door. Fantastic story. Okay, service now. McDermott did a great job in the last quarter, but people didn't think so. Now Goldman goes to conviction buy. I think this is really, if you want to know the growth stock that has fallen that shouldn't have, it's service now. He's doing a great job. A lot of big deals they're talking about, and a nice reset. I would buy it right here, right now.
That's one of the big calls today that we've been watching.
Yes.
What do you got tonight?
Okay, I've got PerkinElmer, which does a lot. You might have had the rapid fire tests for PCRs. I have Matthew Boss talking about who really won, who's coming out, and then Chewy. Sumit Singh, I just got a really good collar for my dog, for Marley, from them. I love those guys. And remember, the co-founder of Chewy, but is not at all involved with Chewy, is none other than
Ryan Cohen.
There you go, Ryan Cohen.
It reminds me what Baird said today. Games aren't dog food, and investors deserve more than memes to value companies' fundamental long-term prospects. I mean, it's Baird, but
no, it doesn't. That's pretty. I like that.
That's strong. GameStop is down 11%.
Good-o. He's good-o.
All right. Well, they was waiting a long time then.
Yeah, right. Yeah. Good-o's never really showed.
No, he didn't.
That was a terrible play. I mean, this.
You didn't like it?
No.
Which one?
Waiting for Godot.
Yeah.
Iceman Cometh.
Iceman Cometh was a good play.
That's too long.
It is very long. I actually saw it. Yeah, it was like 7 hours.
Yeah, I know.
Yeah, went on
longer than The Ring. Anyway.
Good one. Good work today. Yeah, we
good
got a lot done.
Good show. I'll see you at the 3. I'm interviewing
Cigna.
Are you going to hang around and like force Sarah off the set?
No, I love Sarah and Wilf. You kidding me? I think they're doing a great job stealing all our guests.
I love Sarah
Stitch
and
Fix
Wilf.
the other day.
That
was really.
Will not be showing up this hour. They've disappeared suddenly.
We'll see you then, Jim.
Okay.
Coming up in the next hour, the president is in the UK for a bilateral with Boris Johnson. We'll take you there live as we do have a record high on the S&P.
So we have Clover Health here fighting, defending itself. It's holding here. Let's see what the low was on this candle. The low here was 1632, so we're below that area right now. Just got an alert. Asana getting a lot of activity. Asana, this is a name that I traded before. They're doing stock buybacks. It had good earnings, and it's off to the moon. It's breaking all-time highs. Asana was a move from about $26 now to $44, almost making a $20 move in the course of 3 weeks. Massive move. They killed earnings, and then they added stock buybacks. Yeah, this is a great ticker. Clover Health here kind of defending itself at 1635. Hey, Shri, I just got your message. I'm a swing trader, so I'm not as active. I'm not taking crazy amount of trades per day. But I do post my day-to-day trades real time here, and I put my alerts on Discord. So if you go to Discord here, link is in the description. I have a lot of news and information all day and tweets going on throughout the whole day. So you're always up to date with the latest news of what's going on with stocks, memes, and SPACs. I have here for trades. I put my alerts here, some of my positions, pretty much what I'm making. This is, when I buy and sell. So I put all my orders here. I also have an investment portfolio when I buy there. This one's a little slower portfolio, and I put my alerts when I buy there too. So yeah, I put my real-time trades on Discord.
Low 1.5. Let's get over to Morgan.
That's right. So we're 30 minutes into the trading session. Here are three big movers we are watching this morning. A couple of retail names that are on the rise. RH surging after reporting a better than expected quarterly profit. The company formerly known as Restoration Hardware also raising full year guidance. People keep spending on their homes. Those shares are up 15% right now. Then Signet Jewelers. EPS nearly doubling street estimates as same store sales surged more than 100% from a year ago. Signet raising its revenue guide for 2021. The CEO will be on Closing Bell today, starting at 3 p.m. Eastern. Actually, I'll be there as well. Lastly, Fastly. Those shares are moving in the opposite direction. The cloud computing company lower after Oppenheimer downgrades to perform from outperform. Fastly experiencing numerous problems this week, leading to widespread internet outages. Stock is now down 40% on the year. As you can see, it's down 4% right now so far in this morning's trade. Carl.
All right, MB, we'll see you back here on set. Meantime, a hotter than expected inflation number this morning. Steve Leisman breaking down some of the internals and what it all means. Hey, Steve.
Good morning, Carl. Yeah, blockbuster inflation number. But looking at the market today, it looks like investors have made their peace with inflation and are ready to move on. But a look at the numbers gives fuel to the debate about whether this is all temporary or if some of this is maybe more permanent here. Let's take a look at the headline numbers. Up 5%. That's the highest since 2008. That's year on year. Take out food and energy, up 3.8. The highest since 1992 on the month, up 0.6. And ex-food, up 0.7. Diving into the details, yeah, there's some temporary stuff in there. Used autos, up 7.3%. Reflecting the chip shortage. Airline fares up 7% after 10% last month, but we're still 6% below where we were before the pandemic. Natural gas surging Apparel also up, and food up 0.4%. That doesn't look like a lot, but it is a lot for the food component. The hot take we got this morning from economists shows there's a robust debate about whether this is all going to go away in the months ahead or if high inflation numbers will linger. Rubila Faruqi from High Frequency writes, the pace should stabilize and moderate as reopening effects fade and once supply catches up. But Ellen Zentner over at Morgan Stanley, not so sure. She writes, the more persistent components like rent and OER, owner equivalent rent that is, firmed up as well as much more than expected, pointing to a firmer source of foundation for the inflation data as the transitory factors begin to fall out of the figures. And Ian Shepperson with a good line from Pantheon, the Fed better be right about bottlenecks. And that may be the most important point of all for investors. They've embraced the Fed explanation that inflation is transitory. The risk, if the Fed is wrong, would mean a sharp turnaround in what is now very easy policy and expectations that any meaningful tightening is far off. David, have you made your peace with inflation?
No, I'm not sure that I have, Steve. For now, of course, and we can see this reflected in the 10-year yield. Perhaps the market has, and Powell has the upper hand. But this is still going to be the key question as we head deeper into this year, Steve.
I think it is. So you're not David Chill when it comes to inflation. I get it. And I don't know that the market has this right, but I'm astonished looking at the 10-year note. I have been astonished for a long time looking at the 2-year, which is probably the better look at, the better expectation of the market when it comes to what the expectation is for the Federal Reserve. When I look down the road, David, at the Fed probabilities, I don't see the first hike built in until early 2023, at least not fully built in. So the market is not signaling its concern. When I look at implied inflation rates, it seems to be pretty chill out there when it comes to those guys trading Fed probability. So I don't want to second guess the market here, but the risk is certainly that the Fed would have to tighten more quickly than it currently anticipates.
Yep, and right now that not, as you point out, not being reflected as an overall fear the way we've seen it, and even in days and weeks past. Steve, thank you. Steve Leisman.
Pleasure.
Well, ahead of the G7 summit, President Biden is meeting with the UK Prime Minister Boris Johnson. Steve Sedgwick is live in Cornwall, and he has more for us. Steve.
David, I want to show you something that shows just what a showman Boris Johnson is and how important the relationship between Joe Biden and Boris Johnson is. Just look over my left shoulder. Look over out to sea. That is the brand new aircraft carrier in the Royal Navy, and its name is the Prince of Wales. Why is that important? Because the Prince of Wales was the ship that the Atlantic Charter was signed in August 1941 between Winston Churchill and Franklin Delano Roosevelt as well. And of course, it set the path for a lot of post-war institutions, including the UN, NATO, and the GATT Treaty as well. And of course, what Boris Johnson is trying to do here today in the bilat ahead of the G7 meeting, he wants to actually restore relations and what as many have called the special relationship between the United Kingdom and indeed the United States by having a new Atlantic Charter, which will basically set a path of cooperation between the British and.
So I got some alerts here, some unusual options activity on CYH. CYH, Community Health Systems. CYH getting a lot of bullish activity right now on the options market. We also have some activity here on RGLS. RGLS also getting some bullish activity in the options market. And lastly, we have Google with some bullish activity here. Google with some bullish activity. Let me double check this RGLS. RGLS looks pretty interesting. RGLS. Need to do some research on that. I'll take a look. Wish holding up nicely here at $11. Even though the volume is low, this is a good sign. Just waiting to see what Clover Health does here at this support area. Does it hold, or does it melt away and fill this gap? Going to do some more research on that RGLS. It looks pretty good.
Quite a departure from prior visits to Europe. Steve Sedgwick. We're about half an hour into trading. Dow's up 219. As long as the Dow's up 185 or better, it will be the best gain for the Dow since May 14th, despite the hotter than expected CPI number this morning. Art Cashin joins us, UBS Financial Services Director of Floor Operations. Art, great to see you. Good morning.
It's my privilege to be here. Thank you.
I guess once again we're asking whether or not bond vigilantes belong on the side of a milk carton.
Yes, they certainly have disappeared. There are several puzzling possibilities, and what we're referring to, obviously, is the recent disconnect between the yield on the 10-year, which had a great influence on where equities traded on a daily basis, intraday basis even, and the past several days, in which yields went down, but stocks didn't go up in reaction. And there are several different theories there. One is reinforcement of this whole transitory concept. And a few, a deep minority, believing we may even begin to see some deflationary influences after the collapse in things like lumber and down moves in copper and whatever. Others are saying simply, no, it's the fact that the Biden proposals, the economic proposals, infrastructure, et cetera, are getting pushback. And that may mean lower expenditures and therefore less demand for money and less upward pressure on those interest rates. And then finally, there is some people who feel that there's offshore influence, and they claim, and I don't want to get too arcane here, but that there are some indicators in the Chinese banking statistics that indicate things may be tightening up there. Now, that doesn't make a lick of sense. They're having a new resurgence in COVID. The ports are beginning to back up, shortages going out. You would think that with that physical threat, the Bank of China would be pumping money in hand over fist. Their numbers are difficult to come by. They have sometimes months-long lag leads. So we'll keep an eye on that. And for me, however, it's a little tough. It's a little tough to buy this Biden cutback proposal.
So can I pin you down on the 10-year? Which comes first, 1% or 2%?
Boy, I would have bet you 2%. But if any of these disinflationary, deflationary moves become evident, then I would have to back up. I think we might, again, start to move lower. A critical area will be the area around 135. If we get down there and move through it, then that will tell me that there is something going on here, that people are saying inflation. No, not at all. So we're going from transitory to possibly deflationary. Questions wide open out there. I think maybe you'll hear from me and very few other people, even the word deflation, but it's something I'm going to watch out for.
Art, I realize we've been trading in a very narrow range where the S&P is concerned in recent weeks, and we weren't that far from a record high to begin with. But the fact that we did just touch a new all-time high today, are you surprised by that?
Not entirely. You know, we've been trading in this up and down rectangular range for weeks now, Morgan. And when I check the slide rules, they indicate that we're going to be testing that range. We wrote in the morning comments. We are now up at the first level of resistance. They look like they're not only at highs, but obviously being at highs, about to break out from that rectangle. But so far, no sign. I mean, the market is a great tease here. They go up, they look like they're breaking out, and then they hesitate, and they have pulled back into that rectangle. So we're going to give it a couple of days of testing and see what happens. You would like to believe that when you punch through the upside of a market pattern, that inspires both breakout buying and in some cases short covering. So you should see a kind of burst after you move out. No burst so far, and without that, then you've got to say the moves are slightly suspect.
Art, on some of these meme-related names, We've been asking the last couple of days whether it's a function of having no earnings season in progress, waiting for rare, important macro data points like today's. What do you think it's about?
Well, I think it's about the new game, the influence of social media. You know, the chat rooms. You know, Carl, you know well. You have heard me say again and again that it is my belief that what they do is get into a chat room with a big following, and these days every chat room has a big following, and then they enlist themselves with the retail no-vote traders, if you would, and say, let's look at this. We're going to move up. I think there are, in fact, some people who are operating as counter spies, if you would. They get in there, they say, hey, I'm one of you. Wall Street's against us. Hedge funds are against us. Let's get back at them. They find some stocks with reasonably high short positions, and then they get everybody excited. They talk, ever since Lehman, there's a new game they play, and that's the out-of-the-money options. They get in and say, hey, look, somebody just bought options that are 10% higher in AMC or 10% higher in GameStop. And they must know that this thing is going to go up 10% in the next 15 days. And then they buy a little, and that turns into a bit of a stampede. You know, it's a bit of a confidence game. I've seen this time and time again over 60 years. It, you know, takes different formats. But I think we're back in the game. I am very suspect of it. I wish the people at GameStop well, but you saw it sell down after they hired two very competent people. I guess they thought they were going to hire Albert Einstein. And when his name didn't show up, there was disappointment.
Yeah, that being said, Art, I do wonder what you make of the comments we got from SEC Chair Gary Gensler yesterday about the closer scrutiny he's taking at some of these market structure issues that could have potentially wide-ranging effects for the underlying structure of the way things are traded and how different entities make their money on those order flows.
Morgan, I thought it was an absolutely brilliant interview. And the Fed chair encouraged me because he was talking about all the right issues. You know, I have said from the beginning when these things broke out that if the SEC can do it, they need to go into the chat rooms and see if they can find a way to identify Mr. X, who was really Arthur Cashin, who was saying, oh, I just saw these trade up. Oh, we don't care if we lose money. We're going to break Wall Street, things like that. And then go and check what kind of positions he had. It is my rather pessimistic opinion that you will find a couple of pretty big players, not retail Joes, pretty big players in there taking big positions and riding the wave that they create in the chat room. And I thought he was excellent. And his other point is something, again, over 60 years you learn. There is no free lunch. And it's not really free trading. It's trading at no commission, but you pay for that lunch somewhere else.
That's exactly what Gensler said to Kelly and Tyler yesterday, and Pisani. Art, great to see you. Thanks so much. Important guidance on a day like today. Art Cashin. Still ahead is Ashford Hospitality, the next meme stock. We're going to talk to the CEO next. And as you saw, the president sitting down with British PM Boris Johnson. We're going to take you there live in just a few moments. Dow's lost some gains, up 192.
Okay, so we're seeing a bit of a pullback here. If you see the trending watch list that I have here, a lot of red, and anything that's up, it's not really up significantly. So we see the S&P 500 at all-time highs here. We see the NASDAQ upticking here, actually, pretty nicely, close to all-time highs. So this is the third time S&P 500 is going up to all-time highs. It went here, all-time highs, slightly broke it, but got rejected. But it is making higher highs and lower highs. So it will be interesting to see if this can break slightly higher up here in the short term, and close up above before we see another pullback. If not, if it can break these all-time highs, it could be a big failure to the downside. So we're gonna have to wait and see with that. Clover Health here breaking down now at 1545. It looks like it wants to gap fill here, going all the way down to around 11.50, $12. It's looking bad for Clover Health right now. Wendy's already doing massive down move to the gap fill. AMC holding up pretty nicely. It's been holding at the $50 range. Good news for AMC. It's still looking strong. We look GameStop. GameStop at a decent level at 272. We have a Sundial Growers here going down to 109. Sundial Growers down to 109, pulling back from the action. Let's look at Workhorse here, holding up nicely at $16. That's pretty bullish there. Go EV making a huge down move yesterday and pretty much trading within a small range today. GTT giving away, gap filling there, cooling off. BlackBerry also another one holding just like AMC, holding around the $15 level. That's pretty good. Tilray, so with a slow uptrend. This is still bullish.
Payday. Our Dom Chu has more. Hey, Dom.
Good morning, Carl. So GameStop is tapping two former Amazon executives for its top roles. We're talking about Matt Furlong, who most recently led Amazon's Australian business. He's going to take over as the CEO of GameStop on June 21st. Mike Recupera will become GameStop's chief financial officer in mid-July. Now, he most recently served as the CFO of Amazon's North American consumer business. But it's not all bad news for the outgoing executives that they are replacing. CEO George Sherman is going to walk away with more than 1 million shares of GameStop, worth more than $300 million as of yesterday's close. Now, those shares are going to invest when he exits the firm, as will the shares of 4 other executives as well upon their departures. Now, a few things of note here in the whole GameStop realm. The company formally naming Ryan Cohen as its chairman during its investor day yesterday. Cohen has, yes, been a bit of a hero to the Reddit community and Wall Street Bets over the past several months. Now, yesterday he told shareholders that a new era was being ushered in at GameStop, but did not really offer many details on that strategy. Some analysts, though, are honing in on that, with Baird calling the turnaround plan a mystery, and analysts at Wedbush telling Reuters that every day Cohen doesn't reveal his strategy, quote-unquote, weakens the meme. Now, in the company's better-than-expected quarterly results, GameStop also noted that the SEC has requested documents and information related to that stock's wild trading over the last month or so, along with that of other companies, but it does not expect the probe to adversely affect the company overall. And, folks, we see GameStop slip further today. It's also down. It's also worth noting that the company floated the possibility of another 5 million shares being sold at some point in the future to raise capital. But still, right now, Morgan, we're talking about 10% losses, roughly 2.9 million shares of volume. It's traded on a full day, Morgan, over the last 10 days, an average of 12.25 million shares. So we'll see if that pace picks up later on today, Morgan.
All right. No dearth of news where GameStop is concerned. Dom Chu, thank you. Welcome back to Squawk on the Street. The meme momentum continues. Ashford Hospitality Trust shares are up 130% in the past month, so we're focusing in there. Let's get over to Seema Modi, who joins us now with the CEO of that company. Seema.
Morgan, thank you. CEO of Ashford Hospitality, Rob Hayes, joins us now. Rob, thanks for joining us. Call it a comeback. Just 6 months ago, your company was on the verge of bankruptcy, and now riding this new wave of investor enthusiasm. And you're taking advantage of it, right, with a number of stock sales. You've raised nearly $100 million so far through stock sales this year. Would you say that this new investor...
Just on the side, this is the latest from AMC. AMC insider sell another $4 million in share. So just something to be, just something to know out there. Another $4 million of shares are being sold by the insiders of AMC, by the chief executives. So we've been seeing a lot of insider selling and cashing out of the executive of AMC. So we see another $4 million being sold here today. We see the VIX now cooling out to 1670. AMC holding still at 50 as the selling continues. We see Wish here pulling back, big red candle here, going back down to yesterday's close. We saw Clover Health here looking like it wants to gap fill here, going down to around $11, $12. We look at Wendy's also giving up all those gains, and it looks like we're having a pullback here. Possibly the CPI numbers kicking in, and we're seeing markets react now.
Advisor and a real estate investment trust, your former CEO, Monty Bennett. What about your employees, though? 7,000 employees before COVID hit. You had to lay off nearly 95% of them. Do you plan to bring any of those back?
We're trying to bring them back as fast as we possibly can. And we actually have hundreds of spots that are open at hotels across the country. And so we are excited as travel is coming back. This recovery is real and it's accelerating. And we need to get people back into the hotels, both customers and our employees. So we're doing that as fast as we can.
Faber back here at the NYSE. You know, to what do you attribute that investor enthusiasm? Can you cite a triggering moment? Was it simply a large short position in the stock, or perhaps something else that you're aware of that we're not, that lit the match, so to speak?
Yeah, David, that's a magic question. I don't know. I mean, in some ways it seems like they choose you. You don't choose them. I think we had some trades in the fall when we were doing a preferred exchange that created a little bit of volume, but it was something that we saw some investors on Twitter, and this really wasn't as much even the Reddit community. It was on Twitter, and the guys like Zach Morris and Will Mead and others who were guys I didn't know and hadn't heard of that saw something in our stock, saw something in our name months ago, and slowly built up this community that I didn't really know existed. And then once you see it as a CEO in this modern era of communication, you either choose to embrace it and use it for the sake of the company and the shareholders and our employees, or you become a silent CEO. And I chose to lean into it a little bit, and we'll see what happens.
Yeah, we're seeing a lot of leaning in. I have to say, Rob, it's Morgan. The fact that you just joined Twitter in the last 24 hours as well, the fact that you are looking to directly talk with this individual investor base that is gaining steam right now. Are you yourself, as a CEO, adopting a new playbook? What do those discussions look like with your board, with your C-suite, et cetera?
It's a good question. And yeah, it is completely different. I was talking with one of our investor relations people, and how years ago, 5 years ago, 10 years ago, we used to be a 80-90% institutional shareholder base. And now that's completely flipped. We're probably an 80 or 90% retail shareholder base. And that changes the way you approach things. And the reality is that we've got to be able to engage with those shareholders and both listen to them, know that we appreciate them. And so, yeah, this would not be my preferred path. I'm not a big Twitter guy. I've not been out there for a long time, but given where we are now and what the future of this retail game looks like, I've got to do it. And I think it's what's in the best interest of our shareholders.
Yeah, so you just released some documents as well in those last 24 hours on Twitter. In terms of your forecast and the path to full recovery, lay that out for us.
So Blue Apron here, seeing some aggressive options activity here. Pretty decent options activity, and we're seeing a big pop here on Blue Apron. Wow, I remember when the stock IPO'd. Jesus. And it had a stock split. Let's see that. I had a 1-to-15 stock split. Wow. This company was raging when it IPO'd in 2017. I remember this. Wow. It's down to 658 with a 1-to-15 stock split. Wow, that is crazy. I just saw the options alert on it with unusual activity on the call side. Getting some nice big run here. It's right now at 653. Might be a little too late to jump into this one, but one to keep an eye out for. we're seeing blood. We're seeing blood now. So possibly now the market, let's see the overall market. Just a minor pullback. Let's see. These are the overall markets. We see the VIX. Okay, so overall, we're seeing lower cap stocks and some of these meme stocks having a pullback here. Wish pulling back here. Let's see. Go EV here. We're seeing a lot of red today. Clover Health looks like it's going to gap fill there. It's at 1533 now. Let's see. A good price target to keep an eye out for is $10 on Wish. Let's see if it holds above $10.
Let's take a breather to start the year. Shares of its sixth largest holding, ServiceNow, though, rising this morning. And that is giving lift to the ETF overall. ServiceNow's up 4%. Conviction buy list is what it was added to at Goldman. They cite improving near-term fundamentals and the ability to accelerate subscription revenue. We'll be right back.
ETF Spotlight is sponsored by Invesco QQQ, Invesco Distributors, Inc.
So right now we're seeing Wish here holding yesterday's low here at around 1020. So let's see if it holds here. And if it holds above $10 overall. We'll see Lordstown Motors yesterday. Some negative news and immediately came back up and right now holding around the $11 mark. That was a nice catch the knife kind of intraday swing, intraday day trade here. So AMC, the only one that's green here, and Virgin Galactic, the only one that is green here in this watch list. We also have IVR. So this was a name that I put up in the watch list yesterday. We saw a lot of options activity on IVR. It's a real estate mortgage company. They do loans. Melted away here in the pandemic, and I don't know. It went up from, it went down from 1833 to now $4, and it didn't really recoup. A lot of stocks recouped from the pandemic until now, and this one looks like it's a little late to the train, but it is green today. Clover Health now at 1519. AMC here at 49. Wish at 1047. Let's see some news here. Let's take a look at the news to see if there's anything going on right now. What's going on with Bloomberg? Let's see the most recent here. Goldman set a deadline to noon Thursday for employees to report their vaccination status. Let's see here. Yahoo Finance. Stock rose Thursday as the traders digest a key print of inflation, which showed, okay, we already know inflation. We just went over the news. 4 million shares sold. AMC, insider selling. Let's see here. Stock trade at record. Yield steady after CPR markets wrap. Okay.
That for us.
Nothing new so far.
Hey, David. Good morning. Moderna is asking the FDA for an emergency authorization to allow its COVID-19 vaccine to be given to adolescents aged 12 to 17. Pfizer's shot is already being administered to that age group. And Amazon could be fined more than $425 million for violating European privacy laws. The Wall Street Journal says that is the recommendation of EU regulators. Former United Auto Worker president Gary Jones has been sentenced to 28 months in prison. Last year, he pleaded guilty to stealing more than $1 million from the union and apologized to its members for betraying their trust. And just after sunrise this morning, along the U.S. East Coast, a partial solar eclipse. Check that out. The next eclipse is coming in October 20th through the 23rd. It will be visible in parts of the western United States. Guys, and Carl, specifically, back to you.
Okay, Kate, thanks so much. As we go to break, we haven't mentioned crypto too many times this morning. Kind of got crowded out by some of the macro data, but Bitcoin is rebounding a bit as JP Morgan yesterday suggested it needs to increase its share of the overall crypto market, and it is, in fact, one of the few coins that are up today. Back in a minute.
Squawk on the Street. I'm Morgan Brennan, along with Carl Quintanilla and David Faber, live from Post 9 at the New York Stock Exchange. We are about an hour into the trading session. The S&P at a new record high. Let's get over to Bob Pisani for a look at what's moving this morning. Bob.
Morgan, good morning. CPI a little hotter than expected, but people have convinced themselves that things like airline tickets, a lot higher in the last month, is going to be at least moderating in the following few months. That's at least the meme right now. The Fed is right, and essentially it's going to be transitory. We'll see, but the market believes that for the moment. The important thing is, remember 42.32? That was the old S&P high. That was May 7th, the closing high. We've been struggling for 6 weeks to get over that. Finally, we're there. Now, we'll see if we close there, but that's the new closing high. Anything over 42.32 is the closing high. And we're being helped by an interesting swath. Remember, there's a lot of debate about whether growth is going to outperform value in the second half of the year. It's an interesting discussion. Right now, technology is helping, but also healthcare has been strong today. Energy, we got oil over $70. Heavens, when was the last time you saw that? Oil is one of the big movers. We've got new highs in a number of those oil stocks. But interestingly, industrials, materials, some of the more cyclical side of it has been holding back a little bit recently. So there's a very interesting debate about whether we, those cyclical sectors that powered us forward in the first part of the year on the reopening story are going to continue in the second half. I'd say the story still out on that. In terms of new highs, a few tech giants that are out there. Interestingly, Cisco and when would you thought IBM new high? Yeah, believe it or not, 52-week high. Google consistently, Alphabet consistently hitting 52-week highs recently. eBay also, but a number of new energy stocks that are there. You know, you got ConocoPhillips, Hess. These are what you call sort of high beta energy stocks. They tend to move a little bit more than the market does on days when energy is up. 52-week highs, Marathon Petroleum as well, sitting at a 52-week high. Now, a lot of debate about the value versus growth story. You heard Kathy Wood pushing it. You heard Marco Kolanovic. Jim was talking about it a little while ago. I point out the usual facts about value versus growth. First, difficult category to describe. You do have a lot of groups in this that are things like oil companies, some of the retailers that are in it. But you also have, in the growth category, companies that you didn't necessarily think were growth companies a couple years ago, like Caterpillar, for example, and Deere. So these are difficult categories to describe. Value has outperformed this year. Growth has been coming back just recently. But the index guys constantly point out to me, Bob, you want to knock yourself out with this? Go ahead. But if you just will own the S&P 500 this year, up 13%, you wouldn't have had to worry about the value versus growth story. And it is very typical that in a year like this, when value outperforms growth, S&P 500 is right in the middle, and you essentially split the difference. So guys, it's an interesting debate to have. The question is whether the peak story is correct. If the peak story is correct, that we are now peaking in the second quarter, and we're going to have the mother of all earnings reports in the second quarter, it's going to be fantastic what we're seeing, 60% up from last year for the S&P 500. If this is truly the peak, then there is an argument you can make that going back to the growth stories, going back to the tech stocks is not a bad idea, but that's still out right now. Guys, back to you.
I mean, it's such a big question, and it gets to exactly what we're talking about with Art Cashin on the show just a little bit earlier, and that is the fact that there has been, in recent days and recent weeks, a disentanglement, if you will, between the bond market and equities, too, when you look at the rate picture and the effect that has had on stocks.
Yeah, it's almost like the market got the story wrong. So remember the narrative. The narrative for the second half of the year is interest rates are going up. Inflation is going up. The question is how much of a problem that's going to be. And we're going to have an enormous reopening story that's going to benefit all of what we call the reopening stocks, particularly industrials, material stocks. And the market story has sort of been wrong. And now we're sort of struggling to explain, wait a minute, why are interest rates actually lower? They're not higher. That's not part of the narrative that we had a month or two ago. And why are the reopening names struggling more and growth is coming back a little bit more? That's not part of the narrative either. So the short answer to the question is the market often gets the narrative in its head going, and then the narrative essentially changes because either facts change or the way people look at the future changes a little bit. And I think this peak story is the key story that everybody's starting to understand, that the second quarter is the peak, certainly, of earnings acceleration growth. Earnings are still going to be up in the third and fourth quarter, but they're not going to be accelerating in the way they were in the fourth quarter, the first quarter, and the second quarter. So you see the market has these narratives, and they change the narratives in the head as the facts change on the ground.
Indeed. And one reason why some of those year-end targets aren't quite as aggressive as they have been in the past, Bob. Great insight, Bob Pisani. Speaking of changing narratives, Dow session high was up 290. We're up 112 now as we take a look at some of the losers on the meme front. We're back in a moment.
So we're seeing Wish here holding at 1030 here. That's more or less yesterday's lows. Yesterday's low was 1026. So now it's going to break yesterday's lows, and we want to see Wish hold up above $10 here. We see blood on the street right now across the board. Let's see some of the SPACs and other stocks here. Let's take a look at some CCIV. CCIV here cooling off at 25.21. Not bad though from its recent rallies, hitting almost 28.29. You know, staying above 25 is a good sign for CCIV. Another ticker that I've been looking at lately is VUZI. VUZI here, ticker symbol VUZI. Pulling back here slightly at 1857. Clean Spark here at 1821. Clean Spark. And then we have SMPR here. This is Volta Charging. This was one that I was trading a lot, and it's just been sleeping lately. SFTW, another one that I was trading before, and it's holding here at $10. So you see some of the volume and activity in some of these specs just ran out. There's not much juice there at the moment on some of these names. AGC Grab Holdings. This is 1145. We have SPCX. This is a SPAC ETF here, and it's giving us an overall view of SPACs in general, what they're doing. And SPACs are currently on a rise, as you can see, since February's highs. It's slightly waking up. If SPACs continue to rise, we have a long way to go and plenty of gains to gain here before we go back to all-time highs. So some positive news there on that side. We have the Russell 2000 IWM. This is small caps here, cooling off here from all-time highs.
Finding out who will be headed to space with Jeff Bezos next month. Blue Origin flying its first astronaut crew past the edge of space on July 20th. It has been auctioning off one seat aboard that New Shepard capsule. The three-phase online auction enters its final stage on Saturday with this final round of live bidding. Today is the last day to register for that by 5 p.m. Eastern. And in the meantime, that current highest bid for Blue Origin's site, or on Blue Origin's site, it's $4 million. The proceeds are going to go to the company's Club for the Future Foundation, supporting STEM initiatives for kids. And we'll continue to keep a close eye on this suborbital space tourism market that is emerging and really starting to get some traction, especially when you think about Virgin Galactic and those spaceflight plans that are taking shape for this summer as well. Well, sticking with aerospace, let's take a look at shares of Howmet Aerospace. It is up more than 130% over the past year. It's poised to ride the recovery in aviation, and with it, demand for aircraft, not to mention ongoing defense spending and the impact there. For more on all of this, joining us now in a CNBC exclusive is John Plant, Executive Chairman and Co-CEO of Howmet Aerospace. John, welcome to the show.
Morning, Morgan.
All right, so you've reinstated guidance, you've resumed share buybacks, you're planning on paying a modest dividend starting in the second half of this year. We're seeing the balance sheet strengthen as well. How much of this is the beginnings of the fruits of the restructuring that you've put in place in the last 2 years finally materializing versus the recovery we're seeing in some of these key markets like aviation?
I think the journey of the last couple of years has been quite momentous for the company. Clearly, the separation into a pure play aerospace company and a pure play aluminum rolling mill company has paid dividends, plus the repositioning of the balance sheet and the fundamental improvement in performance and cash flow all have led to the current healthy outcomes for the company.
Yeah, I mean, we heard from Honeywell's CEO earlier this week about the recovery that that company is seeing right now, not only on the domestic side where air travel is concerned, but also internationally and the expectations there. As we do see 737 MAX orders, for example, begin to rebound right now. I mean, today we have reports that United is poised to purchase upwards of 100. I know you're a supplier on that aircraft, among others. How is that trickling down to Howmet right now?
Let me start with the leading indicators, whether it's searches for flights, ticket prices, flight takeoffs and landings. Everything that we see, certainly for domestic travel, leads us to believe that the next few years are going to be very healthy for aerospace. If you assume that international flights begin to recover starting this summer, and then supplement the narrow body growth with wide body growth in a year or so's time, then I think we're set for 3 very healthy years of outsized growth in the aerospace industry. And then maybe by the mid-decade, reverting to the more norm of a 4 or 5% growth. So healthy times indeed.
Yeah, what are your expectations on the defense side, since I know you also contribute parts and components to things like the F-35 strike fighter? How much did that help, I guess, buoy the company last year in the midst of COVID? And what are your expectations for growth in that part of the portfolio?
The health in defense clearly helped us. Our defense sales were up double digits last year. Also, our industrial markets in industrial gas turbines were also very healthy. For us, the solidity of that defense business, which is about a quarter of our sales, was quite important to us during the last year. We see it remaining steady and growing. It grew again in the first quarter of this year. And then when we look forward, say, just at the F-35, it's about 40% of our defense sales. Then we note that Lockheed planned to build more aircraft in 2022 and 2023, more than in the last couple of years. So that's good for us. And also, clearly, with the fleet of F-35s that will be installed around the world, then the spares market for that aircraft, for our engine parts, is going to be really important as we get to the middle of the decade.
Inflation in focus again today, given that very hot reading that we got, consumer price index reading that we got for the month of May. Commodities have been a key piece of this, including aluminum, which has gained double digits this year. What have you seen? What are you experiencing in terms of those raw material costs, and how much of that are you able to turn around and price out in your end markets?
Okay. Nickel alloys are the probably most important commodity that we purchase, combined with then supplemental, I'll say, things that go into super nickel alloys like cobalt and rhenium. We also do buy aluminum. That's the smallest of our raw material buyers. We've experienced very significant inflation in each of those commodities over the last few months. We're in the position where essentially we pass those costs through to our customers by way of agreements of escalators. Most of those escalators being dealt with inside the quarter that is relevant to them. We're about 95% covered in terms of all input material inflation. So then that's a good condition for us in these inflationary times.
And finally, you joined the company in 2019, but this is a company that has been in flux for a number of years. I mean, it was spun out of, or I guess split off of, Arconic last year in the midst of the pandemic descending upon the world. 4 years before that, it was spun out of Alcoa as Arconic. What are your expectations for what this company looks like and that growth trajectory now over the coming years?
I think the trajectory from now is really solid. I look at not only the say immediate recovery post-pandemic, but you look at the long-run cycles of our end markets, particularly in commercial aerospace and defense over the next few years. I just see a solid, uninterrupted period of revenue growth going out certainly during hopefully the next decade, even though that's a bit of a hostage to fortune, but it's the way I see it at the moment.
John Plant, thanks for joining us.
Thank you.
Coming up in the next hour on Tech Check, Affirm's Max Levchin partnering with Shopify. A lot of the details you'll get at 11 a.m. Eastern Time as Squawk on the Street continues and as the Dow's gains are awfully close to being gone.
We see Wish here at 1027, just very low volume. We see here in the 5-minute chart, but overall volume for the day, it's already at 46 million out of 71 million. So it's going to probably break the average volume for the past 10 days for Wish. But intraday compared today into yesterday, it's pretty dead if we look at these bars down here. So very slow trading right now on Wish, holding at 1025-ish, which is a good sign. It's staying above $10, but really not going anywhere right now.
Dr. Fauci did with big media and Chuck Todd what he did with big tech and Mark Zuckerberg. And of course, he ridiculed what I had to say. But you know what, Stuart? He never refuted what I had said. Right. And what we do know is that he worked with Mark Zuckerberg to create a PR campaign. We do know that he was aware of concerns around gain of function research around this Wuhan lab. But he didn't share those concerns with Congress and the American people. I'm not sure he shared those concerns with President Trump. We do know that the Department of State and Secretary Pompeo tried to launch an investigation on this lab, and we know that some of the careers over at the State Department tried to stop all of this. So those are the things that we know. And I will say this about big media. We also know that NBC Universal has that Universal Studios, all of that there in Beijing, and if you're doing business in a big way in China, you are there with the Chinese Communist Party.
Former President Trump told us that if it is conclusively proven that the virus came from the Wuhan lab, he would be looking for $10 trillion worth of reparations. And if the Chinese don't come clean about what they were doing back then, he'd hit them with 100% tariffs on everything that came in. I don't know whether you could hear me over the top of that noise there, Senator, but what do you make of former President Trump's demands for reparations or heavy-duty tariffs?
I look forward to talking with President Trump and finding out what he did know. What was Dr. Fauci telling him? Because it appears from the emails and from the exchanges and the information that we now have that it was his agency, the NIAID, who was sending money over to this lab in Wuhan. Taxpayer dollars. We also know that neither the WHO or our diplomatic scientists were allowed into this lab. And Stuart, we also know that the Chinese Communist Party put a sanction on me, Senator Cotton, Senator Rubio. They wouldn't let us in the country. We were banned from the country and we were sanctioned. So they were hiding something. The other thing we know is that the Chinese Communist Party locked down Hubei province, where Wuhan is located. If you live there, you could not leave and go anywhere else in China. However, you could go to Wuhan International Airport, you could get on a plane, and you could travel around the globe. So is the Chinese Communist Party culpable in this? Should they come clean? Should they tell us? Should Dr. Fauci have said to the American people, we don't know exactly what we're dealing with. We do know this lab does coronavirus research. We are very concerned that there was gain of function in research done and that there may be an appearance of an engineered component for this virus, and we're going to get in behind this and figure it out and keep you safe. We will tell you what we know as we know it. That should have been the response.
Well, come back and tell us what you know and when you know it and how far this investigation.
It is definitely a red day, a good day to buy, but not necessarily heavily because we don't know what the future holds with this interest rate. So big red day today. We see everything sliding off and giving up a lot of gains across the board. We have skills here melting away. Let's see what the dailies look like. We have a red day here. The overall market is pulling back. But we see some of this lower cap stocks making bigger moves. So let's look here. Clover Health now at $14.91. So it looks like the bears are winning the battle for now. Wish here holding pretty steadily above $10, which is good. AMC now at 47. AMC now at 47. Let's look at some GameStop. GameStop at 265. Wish getting a small uptick here. Volume not so fantastic. So let's see if it's short-lived here.
Some retail names that are on the move this morning. You can see a couple of them right there. Let's get to Courtney Reagan for more on that. Courtney.
Hi, David. Yeah, the retail rebound continues from diamonds to couches. Let's start with Signet Jewelers, reporting a much stronger profit than the street had expected on stronger revenues and comparable sales. Signet is the parent of Zales, Kay, Jared, and more. It saw comparable sales grow nearly 107% across the board, with strength in North America's stores and online, up 118% and 113% respectively. International comps, though, did fall in total and in stores, though some strength online. Margins improved markedly from a year ago, 40.2% from 24%. Now, sales guidance is above the street for both the current quarter and the full year. Signet shares are up sharply here this morning and up about 400% year over year. Now, RH also beating by a wide margin on earnings and revenue, with strengthening operating and gross margins. So CEO Gary Friedman actually quotes LVMH's Bernard Arnault and says his margins are now stronger than the luxury conglomerate. The furniture seller gave a stronger than expected sales forecast for the current quarter as well. Shares of RH are up here 15%. Friedman also said, quote, the unmasking of the general public could lead to a roaring 20s type of consumer exuberance. The strength in the U.S. housing market and renovations, record market highs, low interest rates, and the reopening of the economy all suggest good times are to come for RH, according to the company. The high-end furniture seller is also going to expand in England next spring, and that would be its first international market. RH says it's also considering some new services like landscape architecture.
We are fading the gains this morning. The Dow's now up only about 56 points, or 0.1%. That's going to do it for Squawk on the Street. Tech Check starts right now.
Good Thursday morning. Welcome to Tech Check. I'm Carl Quintanilla with John Ford and Deirdre Bosa. A big day today. Why GameStop has an obsession with Amazon, plus some news from Microsoft that Ryan Cohen is not going to like. Then, if you can take the heat, get out of the App Store. Creators feeling the pressure from Tim Cook and are fighting back. And then later, put a sock in it. Bill Ackman makes a pitch to retail investors. Dee?
He does indeed. Also ahead this hour, PayPal Mafia member Max Levchin, as his company Affirm announces a partnership with Spotify this morning. Plus, the tech stocks to watch this AM as the street makes calls on Clover Health, Zoom, Fastly, ServiceNow, and more. John?
Yeah, but first, some news out of Microsoft that can only be bad for GameStop, announcing Xbox is actively working with TV manufacturers to embed a cloud-based gaming experience into smart televisions with no additional hardware needed to play outside of a controller. Basically a Netflix for gaming, and a development that could push gaming business beyond the console, and that could make GameStop in particular, despite its relatively strong earnings last night, look more and more like Blockbuster Video, as Ryan Cohen and company continue to rely on sales of hardware, either in-store or online, not software, to supply growth. Carl, what we've increasingly seen happen is, whether you're talking about Microsoft or Amazon or, I mean, down the line, Google, others moving to this streaming model for gaming, trying to bring it to the cloud. That cuts out the middleman. I mean, look at Unity, look at what we've seen Tim Sweeney doing also with Epic. I mean, all of this is fitting into this new gaming economy, which would be bad for GameStop. They get cut out.
It's true, and it's part of the reason we've spent part of the morning, Dee, talking about the street's reaction to Ryan Cohen's memes. Webbush and Baird at least saying, look, they've gotten you this far, and that's great, and you have very little debt, and you've raised some money, and you got an enthusiastic shareholder audience, but it's not enough. As Baird said, memes are not dog food, and investors deserve more in order to put a long-term valuation on your business model.
Okay, well, let me put this out there then. If I'm trying to think like a Reddit investor, is this necessarily bad? I mean, GameStop, its whole transformation isn't built on it being a middleman necessarily. It's built on increasing its software, its e-commerce service. So if Microsoft speeds up this sort of shift to the metaverse and GameStop is able to position itself for that next era, could this be a benefit, John? Look at its collectibles business, up 91% in the past quarter, and they said that they want to go into NFTs. NFTs will likely be needed in a future metaverse, something that Microsoft is going to be selling. That's not going to be left behind.
I mean, how many Funkos do you have to sell to make up for the margin that you miss from selling a $500 Xbox? Like, if you're not selling the Xbox and then people aren't coming in and getting loyalty to buy games because they're streaming them directly from their TVs, that's bad. You become either Blockbuster or Quickster, right? I mean, because remember, Netflix had that e-commerce business before and went direct. That's GameStop's future, unless they figure out some way to get into the business that, I don't know, AppLovin is in, that Unity is powering. And right now, based on what they've said so far, I don't see it.
Okay, then let me, and I'm just playing devil's advocate.
The devil
I'm taking
needs
a
an
page from
advocate
you on
this
the other
morning.
hand.
Yeah, go for
John, there we go. Okay, I'll go for it. Why can't it be an Amazon? I know a lot of the believers, the hodlers will say this, but Amazon started with books and transformed its business. And I know we hear this from many, many companies, large and small, that they have an Amazon-like model to justify huge losses or businesses that aren't yet growing at the pace they think they should. But just saying, the gaming industry is ripe for this kind of disruption. We talk about it all the time. GameStop now has capital behind it, Ryan Cohen, as well as a bunch of Amazon executives. Why can't they make that transition? I think the question would be, can they create their own cloud gaming platform? Do they need to become a gaming studio? Do they need to become like a Zynga, right? Or a Jam City? I mean, if they can become a game publisher somehow and make money on that end of it, if they can assemble gamers on their platform and leverage them, if they can become like a Discord, then I see that argument. But that's not e-commerce. Now
that's
you're
not
thinking like a Reddit investor.
You know, Dee, it's interesting. It's going to be interesting to see whether this Amazon diaspora that is migrated to GameStop is going to be the version of Frasier after Cheers or after MASH after MASH, because those were two very different stories.
I have to say, I don't really understand either of those metaphors, but I know where you're going with it.
I was afraid.
I know. I'm sorry. Well, keep them coming, though. Keep them coming.
Just
I'll do my
Canadian.
research. We will continue.
A different generation than we are, in a way, Carl. At least half generation.
I will look that up, though. Meantime, guys, moving on. Apple finding some new critics, this time from content creators. Fan House founder Jasmine Rice, she went full attack mode on Twitter last night, calling Apple's commission fee, quote, theft and exploitation. Other companies like Cameo also joining in. And there is, of course, Epic Games, which is suing Apple over the fees that it charges within the App Store. Apple insists that this is just the cost of doing business and keeping a safe marketplace intact. And we have had several high-profile CEOs take Apple's side on this program. Here's Snap's Evan Spiegel with us just a few weeks ago.
Snapchat wouldn't exist without the iPhone and without the amazing platform that Apple has created. And so in that sense, I'm not sure we have a choice about paying the 30% fee. And, of course, we're happy to do it in exchange for all of the amazing technology that they provide to us in terms of the software, but also in terms of their hardware advancements.
Then there is Unity CEO and former EA chief John Riccitiello. Have a listen.
I know this is hard to reconcile, but we're actually really friendly with Epic and Tim and the team there, and we're friendly with Apple. They're an important business partner to us. The second thing I think is step back for a moment from the perspective of the app stores. That 30% take rate across the range. Pretty much every app store is at about a 30% take rate, from the console companies to PC distribution stores and the app stores.
And now we're going to hear from the other side. Here to break it all down, two critics of Apple's App Store, FanHouse co-founder and content creator who I just mentioned, Jasmine Rice, and Cameo CEO Stephen Galanis. Good morning to you both, and thank you for being here.
Good morning. Thank you for having us.
To Spiegel's point, and Jasmine, I'll go to you first. Would FanHouse exist in its current form without the App Store?
I think this is tricky here. It's yes and no. Directly to your question, current form, no, right? A lot of our creators rely on this app to be able to connect to their fans, to be able to sell their content to their fans, and to be able to make an income, because we know everyone is on their phones. And without being on the App Store, this would hurt creators' revenues for sure.
Okay, Stephen, same question to you. Would Cameo exist in its current form without the App Store?
Yes, it would. And interestingly, Cameo today, over 80% of our revenue comes from web versus app. Part of the reason is, like Jasmine, we were actually kicked out of the App Store for 3 years ago. And, in our business, we have a 25% take rate. So effectively what's happening is any cameos that are booked on iOS, the creator is getting 52.5%. Cameo makes less than Apple from Cameo's business. The big issue here is that if Apple continues these policies, it's really putting a tax on creators. Imagine if Uber drivers or Airbnb hosts had to pay a 30% take rate for their physical labor. The big difference that Apple had looked at digital creators, they really thought that this was a digital good, like a coin in the game where there's no marginal cost. But on this side, this is real people doing real work. And as you're seeing, a lot of the biggest platforms in the creator economy, a lot of the real work now is happening on web. You look at companies like OnlyFans or Patreon, Twitch, most of revenue is coming from web. So if Apple continues this, the big issue they're going to have is that the creator economy is going to be built on web and off platform.
So that's pretty fascinating. Jasmine, I wonder if you can sort of speak to the psychology of a content creator in the wake of what Epic and the stand they've made, all right, what they've done. Where is the willingness right now to simply walk, to say, look, we can do this elsewhere unless you bring your fees down? Is that a conversation that creators are actively having?
I mean, we've talked to all of our creators, and I am, as mentioned, a creator myself, and we can exist on web, but it would just be so much harder, right? In-app notifications brings people to opening the app. It brings people to consuming the content there. And Apple knows this. Apple knows that it's kind of running a monopoly here, and that's why it's taxing 30%, and it's kind of like, we'll pay this or you're out. And for small developers and small content creators who are just people, there's really no choice here, and that's why, I use the words that I used. I said that this is theft, this is exploitation, because it's very much oppressive when you're not giving people a choice.
Jasmine, I hear you, and I hear so many small businesses who have what sound like legitimate beef with, especially Apple's inconsistencies sometimes in the App Store. But what I don't get is why people think they have the right to decide how much Apple charges for placement in its own store. I mean, you called it a monopoly, but then you've both said that the web is an option at the same time, which suggests to me it's clearly not a monopoly. It's just a really nice store, and you'd like to be there. I mean, right, OnlyFans is very successful. I think you yourself made $35,000 in a month there in a sanitized way on OnlyFans, I should point out. And it's over the web, right? So what's the problem?
Correct.
So the issue...
Sorry, that was to Jasmine.
I will say OnlyFans and FanHouse model is very different. And to be explicit here, right, OnlyFans is pornographic content. That's a completely different consumption structure where you go when you have the need, versus FanHouse, where it's an interactive community where people are messaging the entire time, right? And it does rely more on in-app notifications for that. That being said, right, if you're comparing, Apple to the web, the web doesn't charge people to have browsers on it, or it charges your domain fees, it charges your developer fees, but none of that fees becomes 30% of an individual contractor, similar to what Steven said, right? Like, we don't think about charging Uber drivers 30% for every drive that they do. That would be ridiculous, because we believe that that's their labor that they deserve to be paid for. And I think Apple needs to learn some creator literacy and think about how these creator content is a real job, and it's income that people rely on, same as just Uber drivers.
Stephen, your creators are celebrities that are able to increase their earnings thanks to your platform. I wonder, do they care about the 30% commission? Do you think that you can harness some of them and perhaps some of their celebrity and star power in this argument that you're making against Apple? Perhaps not a legal battle as we're seeing from Epic, but more of a PR one, or appeal to Apple's, senses in terms of getting more people, especially high-profile ones, on board with this fight.
Look, we hear about it all the time, and one of the other issues that isn't talked about as much with the limitations of an in-app purchase that affects Cameo, for example, is that in-app purchases limit a creator from charging no more than $999. Now, on Cameo, there are actually a lot of top talent that aren't even able to be in the app for us, which, obviously it creates a worse customer experience. And look, there's so much, to Jasmine's point, there's so many great tools that you can build in the app. And look, Cameo's got a 4.9 star app. We are doing our best to work within the system, but it's putting an unfair tax on creators. And, we hear about it all the time.
And last one, Stephen, are you prepared to then have your app taken off the App Store? You said at the beginning that Cameo would exist in its current form.
We had done that, and one of the issues when we were out of the App Store for a while, it was a limit. It was really a situation. It's not that we were out of the App Store, but we actually disabled bookings in the app. So imagine, DJ, you're talking about our business and you're describing Cameo to someone, and people say Cameo is an app that, right? But you can't purchase. Our app went down to 2 stars. What we ended up doing was putting bookings back in the app. As I mentioned, it's about 20% of our business right now. And, we're a 4.9 star app today. We're happy to be in there. We just love to work with Apple. And again, this is not about Cameo. This is not about FanHouse. This is about the creators. And this is about making sure that creators are getting more than 52.5% of the work that they do on a lot of these platforms.
Yeah, and if I
Well,
can
it's really
chime in
important that you guys bring us this angle. Yep, Jasmine?
Oh, sorry. I know you mentioned earlier too that it is fair, and from the statements of the people that you showed, that they do provide value, and I think we absolutely agree. I think Stephen and I would both be happy to pay Apple something from our revenue share, right? We take 10%, Cameo takes 25%, and creators can still walk away with the majority of their income if we get to pay our profit. But the way Apple's policies apply takes 30%, right, of the entire thing.
Yeah, one last thing I'll mention.
A really important distinction, Jasmine.
Yeah, one last thing that I'll mention too, that is really part of the crux of this problem, is that the App Store doesn't allow you to download an app off Apple. So, our creators are paying a 3% take rate to Stripe, on web bookings, and it's literally 10x higher to be in the App Store. So it really is a big tax on the creators, and we're just trying to stand up for the creators and make sure they're getting as much of their hard work as they deserve.
Well, we really appreciate you bringing the creators angle to this, which is really important. We've talked a lot about the developer angle. Stephen Galinis and Jasmine Rice, thank you very much.
Thanks, guys.
Thank you.
We mentioned it before, GameStop's obsession with Amazon, Affirm CEO Max Levchin, and Monday.com goes public on a Thursday. We got a big hour of Tech Check, and it's just getting started.
now just an extreme demand. We're seeing growth in all sorts of places, and which may be sort of counterintuitive, but all the learnings that people have had about working out in their home or cooking more often because you can't go to a restaurant is not slowing down, which is quite interesting. I'll actually touch on inflation since you brought it up, and it's a really interesting topic. I think obviously inflation fear is something that you have when you have an accelerating economy. The thing that's interesting about Affirm, we become more valuable in a higher interest rate environment because more than half of our volume is interest free, and 0% is that much more compelling if you are a shopper looking at a price that just went up.
Yeah. No, we were just talking to some creators about the Apple's App Store, right? And big platforms have become such key players in the digital economy. Amazon on the e-commerce side for sure. Shopify, though, attempting to provide tools and options to smaller business, a different option perhaps than being a third-party merchant through Amazon. How much of this is about that flexibility, giving it to merchants, giving it to small business, and applying technology tools? How important is that going to be?
That's exactly right. Shopify is fundamentally about bringing modern top-end technology tools to their massive merchant base. There are hundreds of thousands of merchants that are eligible for Shop Pay installments that we're announcing today, and lots of other really great tools, both by Shopify and by the developer ecosystem they have created. And these are, most of them are anyway, tiny little businesses that would never have access to these kind of tools. We're very excited to partner with them. The reason they chose us is because we are a technology-first, technologist-led company. And bringing these tech tools to these businesses that would normally be disadvantaged is just a huge part of their mission, and we're super excited to contribute to that.
Hey, Max, talking about the consumer's willingness to spend in the face of rising inflation, Bank of America's got a chart out today looking at existing home sales, where growth has obviously slowed, versus furniture sales, which are now echoing that slowdown. And I'm just wondering if you got the consumer starting to think about how things may be more expensive in the future, do you think at what point does that start to suppress the instinct to spend all the savings that you have accumulated?
If I knew how to forecast consumer sentiment, I'd probably be doing. I can't complain. I think Affirm is doing fantastically, but it's always very hard to throw that particular dart against the wall. That said, we're not seeing a slowdown in our homewares category, especially things like connected fitness and lifestyle. So my guess is that things are going to keep going strong, although I'm sure some of these things are unevenly distributed.
Good morning, Max. It's Deirdre. Another buy now, pay later fintech, a European one. Klarna raised money, announced it raised money this morning at a nearly $46 billion valuation. Its CEO says that it plans to use the capital to further expand in the U.S., where it says it is already leading among merchants. Why should merchants choose Affirm over other players that may have a bigger footprint also overseas?
I think U.S. merchants, my guess is probably want to go with a U.S. leader, and I respectfully disagree. I think we are the U.S. leader, and I think with this launch on Shopify with hundreds of thousands of U.S. eligible merchants and hopefully millions to come, we're solidifying that position. That said, we are different. The thing that makes us quite different from the rest of the BNPL pack is we don't do others will, and we can do the things that others won't. We've never charged a penny of late fees and continue abiding by this extremely pro-consumer total transparency stance, and that's something that is fundamental to us and a huge part of our brand and our value promise, and that is why Shopify partnered with us. And as I said, we are a tech company first. We build things that we see missing in a marketplace. And so the thing you can expect from us as a merchant, as a customer of ours, we will continue innovating and creating things that are very new, that have not been seen before. And if you want to partner with a leader, I think Affirm is the right choice.
Max, but before we let you go, I got to talk about, we're talking about interest rates a bit. Savings. A few days ago, I was shopping around trying to figure out where you can still get a decent interest rate on savings. Happened to notice that Affirm has a savings account option as well. How does that financially interplay with the loans that you also do within the structure of your business?
So the reason we launched savings account, and thank you for considering being a customer or becoming a customer if you are, is because we've seen that engaging deeper with the customers helps us retain them better, helps us be there when they need us, and actually helps them make more responsible financial decisions. Telling them, hey, we have tools for you, many cases interest-free, never late fees, never deferred interest, never gimmicks, but also, by the way, here's a tool to save, has been really great. And if you look at the engagement levels and customer satisfaction levels among those that open an Affirm savings account, they're even higher than our already, what do you think is a very, very impressive Net Promoter Score. And so primarily it's there to help our customers, and we are excited to offer an excellent rate as well.
Yeah, I couldn't help but notice your rate's a little higher than Goldman Sachs, Marcus, even. Max Levchin, thank you.
Thank you so much.
Redefining Moneyball with the Oakland A's and Dogecoin, that's coming up. But first, watch Clover. B of A has seen enough after the meme surge to start the week. They downgrade the stock today, says the valuation no longer supported by fundamentals, target at 10, and it's already well off the high from yesterday of almost $29. Tech Check, back in a minute.
All right. Okay, let's take a look here at some of these stocks. There's not much to look at. It's blood on the streets right now. It's red across the board. And actually, Wish, only one holding up right now from all of the stocks right here. We have Wish, we have Virgin Galactic, we have Nvidia, and IVR. So we have AMC down to 44.20. So AMC down ticking here at these levels. Let's take a look here. We're going down to new lower lows here from the previous few trading days. So not looking so good right now. Let's take a look at Wendy's. Wendy's gap filled already. Looks like that's about done.
Tech Check. I'm Carl Quintanilla with John Ford, Deirdre Bosa, and Julia Borston. JB's got more on Tim Cook today and the businesses that Apple is putting on edge. But first, a news update with our Seema Modi. Hey, Seema.
Hey, Carl, here's what's happening at this hour. We're starting with inflation hitting a 13-year high. The consumer price index up 5% since last May. The one-month gain of 0.6% topping forecast. Used car prices are showing some of the biggest gains. Bond yields are largely unchanged on this news. Jobless claims continuing their decline, falling to another pandemic low of 376,000. Continuing claims posting their biggest drop in weeks and fell below 3.5 million for the first time since March of last year. Signet Jewelers wowing investors with earnings that were 75% above estimates and same-store sales that more than doubled. The company raising guidance. Signet shares rose as much as 22% this morning and now up about 10% at this hour. RH building on its gains from before the bell. The home furnishings retailer beat Q1 estimates and sharply raised revenue guidance for the next quarter. The company citing the hot housing market and the record stock market. RH shares are up now about 140% in the last year. John, I'll send it back to you.
Seema, thanks. Now, we talked earlier about creators' issues with Apple's fees. Julia Borston's got more on why so many industries are feeling pressure right now from Tim Cook, not just video creators. Julia?
That's right, John. Well, Apple's expanding the options in its ecosystem and building the walls around its garden higher, and some companies are pushing back. As you just heard, just yesterday, FanHouse joined the list of companies not wanting to pay Apple 30% of the payments that people give creators through its iPhone app. Now, this is another, albeit small, company supporting Epic's lawsuit against Apple for those fees that Apple charges. Now, this is just the latest example of how many different industries are on edge about Apple's broadening reach. We just learned this week that Apple is launching its paid podcast tool, putting it further into competition with Spotify and other music podcast platforms that will launch next week. Now, Spotify filed a complaint back in 2019 about Apple's power in the App Store, which prompted the EU to investigate competition concerns. And Apple's recent announcements are spreading concerns to new industries as well. The ad tech industry felt a blow from Apple unveiling ramped up privacy tools that will limit ad targeting. Journalists now warning that Apple's mail blocking of email metrics could threaten the newsletter boom. And of course, device tracking system Tile accused Apple of anti-competitive behavior, saying Apple was preventing Tile from continuing to track locations while its new rival AirTags have access to more data. And the security industry, including Google Nest, is watching the new Apple HomeKit-enabled smart thermostats and security cameras. This all comes as Democrats circulate drafts of antitrust bills following a year-long investigation into Apple along with Amazon, Facebook, and Google. The drafts could change, but they could limit the ability of Apple along with Amazon to operate marketplaces for products and apps where they sell their own goods and apps. So, John, this is going to be a fascinating space to watch.
Yeah, it is, Julia. But, you know, I like to argue with people. What can I say? I think it brings out the facts and helps people consider different angles. When it comes down to it, there are more web browsers out there than there are iPhones. There are more Android phones out there than there are iPhones. People seem to like the way Apple has curated the iOS and App Store experience so people feel safe spending money there. So these creators have said, yeah, we could do it on web, but we want the bells and whistles that Apple adds into its ecosystem, but we don't want to pay for them. Do you understand that? Does that make sense?
John, look, I'm in agreement with you in that Apple offers a huge amount of value to consumers. Apple might make my life easier by integrating all the different services of theirs that I use and I pay for. So I do think that Apple's arguing that it's giving consumers what they want. It's improving its tools for consumers, and that also it offers app makers and small businesses huge value in connecting them with so many consumers on this platform. And as you mentioned earlier in this hour, a lot of big app developers such as Snap CEO Evan Spiegel, I mean, he told us that they wouldn't exist without Apple. So I think that Apple has a very strong argument when it comes both to antitrust competition and also what it's offering consumers. But it's just fascinating now to see all of the ways Apple is spreading out across the map and moving into all of these different businesses. I mean, even look at the way Apple's improving Notes. That's its alternative to Google Docs, and trying to make sure that it's easier for users to stay within its own version of Google Docs rather than switching over. So I think it'll be fascinating to see how more of these companies react to this as Apple's power grows and its functionality improves for people like us, John, who love to use all those tools.
Yep, as its power and functionality grows, also does the controversy. Julia, thanks for expanding that out for us. Meantime, guys, want to ride the retail wave? Well, be sure to get out in about 2 weeks. Read the reasons why only at CNBC.com. In the meantime, watch Zoom. Argus upgrades it this morning, takes it to a buy price target of $4.40. Says the pivot to hybrid work should work out for shares in the long term. Shares are up about nearly 2.5%. A lot more tech check straight ahead. Stay with us.
Interested in Ethereum? Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more about Grayscale Ethereum Trust at grayscale.com.
Wondering what actually goes into your multivitamin? At New Chapter, it's innovation, organic ingredients, and fermentation.
Fermentation?
Yes, formulated to help your body really, truly absorb the natural goodness. New Chapter, wellness well done.
Start your day with all the support you need in Skechers Arch Fit sandals. Skechers teamed up with podiatrists using over 20 years of data to create a sandal that provides foot and arch support for all-day comfort. Podiatrist certified arch support for men and women.
3 meetings and 3 stops today. There's just never enough time. If you've ever considered flying private jets, you have to check out One Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over.
It was a Saturday. Chris was a good dad. His water practices, not so much. Hey, Chris.
Hey, Culligan. Got a water pitcher for the fam. Pretty safe, huh?
Well, basic water pitchers are passable, whereas a Culligan reverse osmosis system can reduce lead, arsenic, pesticide runoff.
You realize these have filters?
Chris, pour it out.
It's not going fast enough. Just done with that.
When your water's right, so is your world. I wrote that!
How does Apartments.com maintain the superhuman levels of productivity necessary to help more renters get into new homes than any other site? It's really as simple as taking that old power nap once in a while. Beep, 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 beep. And cock-a-doodle-doo-ski, wakey-wakey. That should clear out the digital cobwebs for a few months or so. Apartments.com, the most popular place to find a place.
Patented dynamic variable lumbar support. Once someone experiences our XHMT heat and massage chair, it's almost impossible to get them out of it. But don't worry, you don't have to share because you can get $100 off any model on our website. Plus, for a limited time, you can also receive a free footrest. Just use the code on your screen. Your new normal? Incredibly comfortable. Call or click to order today and receive a 30-day risk-free trial and $100 off.
Is Doge hitting a home run? Ask the Oakland A's, who recently made sports history by giving Doge holders the chance to buy tickets this season. Have a listen.
Play ball!
Nothing says summertime quite like a day at the ballpark. And nothing says peak 2021 like purchasing those baseball game tickets using Dogecoin.
We added the ability to buy tickets with Dogecoin. We had 50 transactions just the first day.
California's Oakland Athletics Club recently making history by becoming the first Major League Baseball team to sell game tickets in exchange for the meme cryptocurrency.
When we saw the opportunity to support the A's and support Doge, we jumped on it.
Earlier this year, the pro baseball team made full season suites available for 1 Bitcoin, becoming the first MLB team to price a ticket offering in cryptocurrency. But the question on many fans' minds, will transacting in digital cryptos be a grand slam across the field of sports? It seems crypto's steady advance into the mainstream is no swing and miss just yet.
You're out! Translating the dollars.
For the entire piece, take out your phone, scan this QR code. It will take you to our website, cnbc.com/techcheck, where you will find an entire treasure trove of content just like this. And John, they're serious about this. The Oakland A's, they're holding on to their cryptocurrencies that they're taking in from payments.
Yeah, first money ball, now they're playing some Doge ball. I like it, D. Roblox, meanwhile, facing a huge suit from music publishers this morning after allegedly letting game creators use unlicensed songs. Read that story on CNBC.com. Plus, watch Fastly. Oppenheimer downgrades the stock this morning, removes its $85 price target, saying the recent outage could lead its customers to look for alternatives. We will, of course, watch that. Tech Check is back in 2.
Wondering what actually goes into your multivitamin? At New Chapter, it's innovation, organic ingredients, and fermentation.
Fermentation?
Yes, formulated to help your body really, truly absorb the natural goodness. New Chapter, wellness well done.
I have big news. You can now brush and floss at the same time. This is Waterpik Sonic Fusion. It's twice as effective as regular brushing and flossing. Go online or ask your dental professional about Waterpik Sonic Fusion.
Today, global markets are challenging traditional assumptions like never before. There is a new, accelerated sense of responsibility, sustainability, and social equity. At NASDAQ, we call it the era of impact, and we're at the forefront of it, innovating technology, data, and insights to help you deploy an ESG strategy to be seen as the company you aspire to be.
Enterprise artificial intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready, cleaner, safer energy, all thanks to 1 billion predictions per day. C3 AI is AI at a global scale, harnessing the power of data to build a better future. C3 AI. This is Enterprise AI.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job, you immediately get your short list of quality candidates whose resumes on Indeed match your job criteria. Visit Indeed.com/hire and get started today.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-523-6900. Coventry Direct, redefining insurance.
Wondering what actually goes into your multivitamin? At New Chapter, it's innovation, organic ingredients, and fermentation.
Fermentation?
Yes, formulated to help your body really, truly absorb the natural goodness. New Chapter, wellness well done.
GameStop's outgoing CEO is getting a diamond parachute on his way out. Kate Rooney explains, Kate, the end of an interesting era for him.
That's right. Diamond hands, diamond parachute. Love the analogy. GameStop's outgoing CEO, George Sherman, may turn out to be one of the biggest winners in this meme stock era. GameStop announcing his successor yesterday. That's Matt Furlong, a former Amazon executive. He'll take the CEO job at the end of this month. And despite Sherman effectively being pushed out by GameStop's biggest shareholder, Ryan Cohen, as part of that e-commerce turnaround strategy, he is set for a huge payday if he sells. Sherman's exit agreement calls for his 1.1 million GameStop shares to vest faster than usual, meaning he can sell those when he leaves. And based on where the stock is trading or where it opened today, Sherman's shares are worth more than $260 million. Big payouts for these departing executives aren't unusual, guys, but it is usually tied to performance. And as we saw in earnings yesterday, GameStop's financial performance has not quite kept pace with its 1,400% rally in the stock this year. Sherman joined GameStop back in April 2019, a few months after the company had failed to find a buyer. He was GameStop's 5th CEO since 2017. He had also pledged to turn the company around, and the company did reduce costs and debt while he was there, but revenue fell by more than $1 billion in his first year alone, and losses topped $680 million in the past 2 years combined. Guys, Sherman's not alone. We have 3 other executives, including the CFO, with that same accelerated vesting period. The question now, will they sell? Guys, back to you.
Wow, that's quite a development, Kate. I appreciate that. And speaking of which, as one group of executives leaves, another crop comes in, and they're all from the same place. We just told you GameStop named Matt Furlong CEO and Mike Recupero CFO. Both previously worked for Amazon's consumer business. For those counting, that's now 5 former Amazon executives in the GameStop C-suite, with their COO, CTO, Chief Growth Officer, all having previously worked for Bezos and company. Back when Ryan Cohen was with Chewy, he said of his management hiring strategy, quote, "We use a special proprietary tool called LinkedIn, and we look for people with very relevant experience at companies we respect." Apparently, that search begins by typing Amazon in the search bar. You know, Dee, years ago, it was GE executives who, when they figured out they weren't going to help run the company, were highly courted by other management to come run their business, and that's clearly a generational shift now that's gone to Amazon.
Right. We don't know how senior exactly these guys were in the grand scheme of Amazon, but we have seen this management shift at the top over the last year. Of course, Jassy coming in to take over from Jeff Bezos, a few other of Bezos's lieutenants leaving, one coming back, John. I'm curious about the compensation package, right? We have seen actually a number of Amazon executives leave the company, mostly for Silicon Valley startups or venture capital firms. Interesting to go to GameStop. You wonder what they're offering in terms of pay and incentives with that incredible run this year already.
Well, it's not like Jeff Wilke is going to GameStop. These aren't like the top Amazon executives that Amazon is losing. But, you know, I got to say, if you're an investor, I would wonder about the strategy here. Is GameStop, even with these hires, skating to where the puck is, or to where the puck is going to be? I mean, e-commerce, you're still selling physical goods and maybe individual software, packaged software titles. You're shipping them maybe instead of people coming into store. But as we were talking about at the beginning of the show with this Microsoft Xbox move, is that business going to be there in any significant way in 5 years, say? I think that has yet to be seen. We'll see what the strategy really is. Okay, moving on. The CEO of Monday.com is next as that company goes public through a traditional IPO. We will ask why after the break. In the meantime, watch shares of ServiceNow. Goldman adds the stock to its conviction buy list, saying accelerating subs revenue should improve near-term fundamentals. Price target there, $6.95. Bill McDermott told the story here on Tech Check not long ago. See it there, up more than 4%. Tech Check is back in 2 minutes.
Our retirement plan? Well, our advisor chooses mutual funds he likes and invests in them. Simple as that.
Yeah, he knows about this stuff.
Yeah.
That's nonsense. A bunch of mutual funds is not a retirement plan. Mutual funds often have layered fees, cost more in taxes, can leave you over or under diversified, and aren't tailored to your specific goals. You may retire, but you can do better. Do you know the downsides of mutual funds or what other options are available? Call Fisher Investments for your free copy of 6 Pitfalls of Funds. We'll also send you a bonus, the definitive guide to retirement income. Call 1-800-611-8899. You're unique. Why have cookie-cutter investments? If your portfolio is $500,000 or more, call us at Fisher Investments. It's your retirement. You can't afford to listen to nonsense. Call 1-800-611-8899.
Never forget that the floor is ultimately a supermarket, with the merchandise being...
At Westcom, we think your bank should be all about you all of the time. That's because we're not a bank at all. We're a credit union, a not-for-profit financial co-op owned by our members throughout Southern California, people just like you. So we're all about finding new ways to make banking easier, better, and more rewarding, all to help you build a better financial future. Bank where it's all you all the time. Open your account today at westcom.org/welcome.
Since the day he was born, Michael was unable to hear. Ryan's seizures kept him from driving until they came to us. Keck Medicine of USC, beyond exceptional medicine.
Used Ideal Agent 2 times. Ideal Agent guided me through the entire process, every step. You want to have the best agents, but you want to get the best deal. Using Ideal Agent with both properties, I've saved over $30,000.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
Call it a case of the Mondays here on Thursday. Productivity platform Monday.com goes public at the NASDAQ this morning in a traditional IPO as we continue to await the opening trade there. It's a competitor to Asana. With us this morning, talk about the company, the origins. Monday.com CEO Aaron Zinman is with us. Aaron, welcome. Good to have you.
Thanks for having me.
This company's got a fascinating backstory. It was actually a spin-off from a prior company back in after 2010. Can you talk about how you got to this point and sort of the space you're trying to carve out in workplace management?
Yeah, sure. So it's been an exciting journey since we started the company. So we started with a mission basically to give people the power to control their own software. If you think about it, people have been using software for a very long time. Usually the way people use software is in a very specific way. A software is built to serve a very specific use case. With Monday.com, we created a new type of a type of people that basically allows you to use software in any way you can imagine. So you control kind of your own workflows, how you visualize information, so essentially giving the power to our users.
The number of customers, I think, is over 100, almost 130,000. Is this a small customer model, or are you trying to attract large enterprise?
So we try to attract both. Through our marketing campaigns, we get both SMBs, but also large enterprises that use our platform. We have customers of over 7,000 people using Monday One platform, and as we grow, we manage to enable the platform to accommodate more and more enterprise companies.
And among those that have agreed to purchase some of the shares in a private placement at the IPO price includes Zoom and Salesforce's venture arm, some pretty big names. Can you talk about the relationship that you have with those two?
Yeah, so we have very long relationship with both Salesforce and Zoom. We actually have an integration in our platform for both. So it's been a long relationship. And I think that investment is a testament to the fact that they both believe in the company and its future. So it's a great addition to our IPO process.
We will watch for the opening trade. Aaron, congratulations to you. Look forward to talking to you in the weeks and quarters to come. Thanks.
Thanks for having me.
And up next, Bill Ackman pulls an Adam Aaron and gets weird with a puppet. We will explain after the break. Meantime, watch UPS shares this morning. JP Morgan ups it to overweight today. Price target raised to 243. Tech Check is back after one more quick break.
Welcome to my deaf family.
Brendan leaves the house, then enters the office. He signs subtitles.
One of my favorite
parts of working here is not in my job description.
I'm part of a group.
I'm part of a group of people with disabilities. We work together to make sure that everybody has the same opportunities. I want to create a more inclusive and accessible world. Points to his wife and kids. For you and you and you. Amazon logo.
Do you struggle with occasional nerve aches, weakness, or discomfort in your hands or feet?
Introducing Nervive Nerve Relief from the world's #1 selling nerve care company.
As we age, natural changes to our nerves occur, which can lead to occasional discomfort.
Nervive contains B-complex vitamins that nourish nerves, build nerve insulation, and enhance nerve communication, and alpha-lipoic acid, which relieves occasional nerve aches, weakness, and discomfort.
Live your life with less nerve discomfort with Nervive Nerve Relief.
Keeping your oyster business growing has you swamped. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job, you immediately get your short list of quality candidates whose resumes on Indeed match your job criteria. Visit Indeed.com/hire and get started today.
3 meetings and 3 stops today. There's just never enough time.
If you've ever considered flying private jets, you have to check out One Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 4,000 jets in one place. When I land, there's always a car waiting for me, courtesy of One Flight. What's your time worth? Badging.
Why are hundreds of thousands of investors getting help from Motley Fool Stock Advisor? Well, it's simple. Our average stock has returned 580%, and that's 5 times the return of the S&P 500. When you become a member of Stock Advisor, we'll send you 2 new stock picks each month. If you go to fool.com/TV, you'll see a special introductory offer that's 50% less than thousands of our members have happily paid. Don't look back with regret. Just go to fool.com/TV now.
Wondering what actually goes into your multivitamin? At New Chapter, it's innovation, organic ingredients, and fermentation.
Fermentation?
Yes, formulated to help your body really, truly absorb the natural goodness. New Chapter, wellness well done.
Lots of expert help lined up tonight to help us get through the news.
I mean, no other people were involved.
They're now going to debate it again and vote again.
We have to be very, very precise.
What he did today was word perfect. One more thing, Bill Ackman, whose SPAC, Pershing Square Tontine Holdings, last week announced its intention to acquire a 10% stake in the upcoming Universal Music Group public offering for $4 billion. Well, he tweeted out a link to a Reddit video explaining the deal.
You will get shares before Kanye himself. How? Because Bill Ackman can do magic. This dude stole Brad Pitt's girlfriend and married her. This is Bill Ackman's world, and we're just living in it. Bill did that with $4 billion. He still has $1.5 billion left. So he's included another $5.25 share of this mystery company. No clue what it is yet, but knowing Bill, we probably own Canada.
Guys, I gotta say, did not ever expect to see something like this on CNBC, but despite playing to the Wall Street bets crowd, the stock, as you can see here, still down nearly 8% since the announcement, though it's up about 1% today. I don't know if you guys watched this, but despite all the profanity and some of the jokes, or maybe because of it, I actually thought it was a pretty good take on why you invest in a SPAC and sort of teasing out some of the nuances, and what a way to speak to a new cohort of investors.
Yeah, I mean, are there disclosures in there? I don't know. Do there have to be, Carl?
He did tweet a disclosure.
Yes, he tweeted a disclosure. But Carl, overwhelmingly, what I really want is now for Carl Icahn to make a sock puppet video that responds to it and like tries to take it down. That's what I really want. Probably not going to happen, but that's what I really want.
Yeah, I don't know, John. I've got very little to add other than I can't wait to ask Gary Gensler about this one.
This is certainly going to be one of those things, like the sock puppet before it from Pets.com, where we thought about it showing kind of the sign of the apocalypse before the .com bust. Whether this is a bust or not, I don't know. This is another sock puppet that we are going to remember. Okay, anyway, meantime, Tesla planning to roll out its new Model S Plaid today at the Fremont plant in California. The higher-end version of the Model S will cost just under $120,000 and can go nearly 400 miles on a single charge. Elon Musk also saying the car can go from 0 to 60 in just 2 seconds. Carl?
All right, guys, before we go, got some stocks on the move this hour to mention. Some remote work, some stay-at-home names are back in the green, led higher by Zscaler, Zoom, Adobe, Twilio, and Roku. Chips also participating. ASML Holdings leads that sector higher by just about 2%. We did get some. Were they, as Art Cashin said, maybe the discussion turns into more of a story of deflation versus transitory, and we still don't know which comes first, 1% or 2% on the 10-year. Let's get to the half.
All right, Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, a new record for stocks, even as a read on inflation comes in hotter than expected. So what does that say about the prospects for a summer sizzle? We'll debate that with our investment committee. Joining me for the hour today, Josh Brown. Brenda Vangello is the CIO of Sandhill Global Advisors. Steve Weiss, Pete Nigerian, along as well. Let me check the markets. We did mention that new record high for the S&P, brushing off that CPI report. In fact, anything over 42.32, that's the number you want to keep your eye on today, because that will be a new closing high. We're going to discuss that and that question we raised at the top about a summer sizzle. But first, let's get to Steve Leisman. He has some breaking news on the economy. Steve?
Scott, thanks very much. The Federal Reserve reporting that household net worth rose to a record $137 trillion, up by $5 trillion in the first quarter. There were big gains in real estate, big gains in equity holdings by households. Corporate debt also is on the rise again. Maybe that's a good sign. Companies are borrowing. A record increase in real estate wealth. Equity holdings by households up by $3.2 trillion. Real estate holdings up, I believe this is a record. I can't go back any further, up by $1 trillion. Debt overall up 5.8%. There were gains in household debt, business debt, and federal government debt. But there's a big number here. Real estate equity, the percentage of equity by households is up to 67%. That's the highest level since 1990. Bottom line, Scott, as of the end of the first quarter, households had an awful lot of money.
They sure did. The wealth effect times a lot, Steve, throughout a whole swath of the economy. We appreciate it. Steve Leisman, thank you very much, our senior economics reporter. Let's bring in the gang now. Steve Weiss, this is a bullish sign. And if you take what happened today, if I told you the CPI was going to run hot and everybody was waiting for that number and rates would tick lower, we're at 147 on the 10-year as we have this conversation here, and stocks higher. The S&P hits a new record. I don't know. Maybe you would have said, I don't think that's going to be the case. But it is, and I wonder what that means to you.
Yeah, I definitely would have said that's not the case. I was worried about a hot number, hotter than what we saw. I think the number that came out, even though it was above expectations, was already absorbed into the market. Nobody's surprised it's running high. What it means to me is that with rates coming down, is that we have a market that's going to continue to rise into the end of the year. I don't think you'll see an explosive move up in the indices, but I think that if you're very picky in terms of sectors, in terms of individual stocks with idiosyncratic stories and risk, that you can do very well and far outperform the market. So we've said it so many times that the stock pickers market, it'll continue to go, it's panacea. And the best news about all this is that the Fed has tremendous credibility. And I buy into the thesis that inflation is transitory, and the market's buying into it. So it's tough to see any real bumps coming along here, because anything that comes out can be transitory. Now, if it goes on for 6 months, that's a different story. But I don't think that's what's going to happen, because supply chains are coming back to life. And we had VW coming out today and saying, third quarter, we'll get our semis that we need. So I think it's Goldilocks right here. So I'm nearly fully invested.
I think you nailed it. I mean, I really do. Brenda, that's what this is all about. It's a fact that the market trusts the Fed, at least for now, and that's good enough because, okay, so inflation's going up. Market thinks it's going to be transitory. Should we buy stocks now?
I think there's certainly an argument for owning stocks here. I mean, the stock market, if you look back over the last 3 months, the S&P really hasn't done much of anything, and it's been against a backdrop of improving fundamentals, incredible earnings growth. So we've had a lot of positive things happening, and the market hasn't really reacted. We've been kind of in this wait and see moment, I think, with regard to inflation, because that's all anybody has wanted to talk about. But here we are, and we're getting the real numbers, and we can see, looking through, that some of the categories that have experienced the most increase, it's not sustainable over a longer period. So perhaps some of it is transitory. I think only time's going to tell, though, as we move throughout the year, whether some of these price increases will stick or not. But I agree that this is not a bad moment to be invested in the stock market. Certainly, if we look at alternatives, within the bonds being the alternative, it's definitely a better place to be. I mean, even though rates have ticked lower during this time frame, we just think, against the backdrop of improving economic growth and inflation getting at least back to normalized levels, that rates are not likely to stay where they're at today.
So, Josh Brown, Steve Weiss used the word Goldilocks. Is this how a summer surge in stocks begins, because of how the market reacted to what the inflation read was today, and it didn't seem to be all, in a fuss about it?
Well, we talk all the time about whether or not the Fed believes inflation is transitory or some aspects of inflation is transitory. The market believes that inflation is transitory. And the market may end up being wrong, but that is the only read-through that I can give you based on price action in reaction to the news that we've been getting really since April. One thing I would point out, though.
Forgive me for interrupting you. Forgive me for interrupting you real quick. You're the one who, and I'll give it back to you, please. Forgive me for doing this, but you're the one who always says price is the thing, right? Believe in price.
Yeah.
You can say whatever you want, but price tells the story.
Well, yeah, because price is people voting with money, right? So the world is filled with people who write newsletters for a living, and there's no money behind it. So what is the money saying? And again, the money can change its mind. So the market is dynamic, but at this current moment, the market is saying, yes, higher prices will stick, but we're not going to see 5% year over year price growth for as far as the eye can see it. It probably moderates this fall. Why will it moderate? Well, a combination of manufacturing coming back online. They're not going to be shipping trucks without chips for very much longer. Some aspects of construction and building. We're starting to see buyers for new homes get sticker shock because of price increases over the last 6 months. So that might cool that market off. But then there are elements of inflation that are here to stay. And by the way, as we've talked about, forget the comps year over year, which is what these headline numbers are. Let's just look at comps versus 2019. We're still above what the Fed thought its target for inflation should be for a long time. If you go May 2019 versus now, it's about 2.5% growth per year. So it's 5% over 2 years. That is inflation above the Fed's target. So even if we pull out the base effect stuff from 2020, we're still running a little bit hot here. And that's undeniable. So it's not that we shouldn't worry about higher prices. It's that clearly the stock market is and has been processing those higher prices in the economy. And on balance, it's saying this is not ruinous.
Pete, you're with me on the phone. We're trying to work on your feed, and I hope we get that taken care of. But in the meantime, you've heard the conversation here. Are we going to have a summer surge for stocks, given where rates are and where sentiment seems to be, and that tremendous wealth effect that Steve Leisman laid out at the very top of our program today?
Yeah, I do think so, Scott. I think there are plenty of opportunities out there, and especially with the fact that when technology, specifically the FANG names, start to pick up a little bit and be a participation in this rally in a much more meaningful way than they have, like they were in the latter part of 2020, I think we have a great opportunity in front of us for that potentially. But we have, of course, absolutely are watching this the transitory side of inflation and what we're looking at there and what that really is meaning. But the economic growth is clear, and I think that we see ourselves on a pretty interesting path right now. And take a look at the volatility. I mean, Josh was just saying, you know, price matters because that's where money goes. Well, that's exactly what the volatility index is telling us right now as well, because people are betting with their money, and with their money they're pressing down where the volatility was when we were up in the mid-20s and even the low 30s for a while. And over the last couple of weeks, we have found ourselves really into a 52-week low end of the VIX, which is in the 15s, and somewhere maybe call it 18. So 15.5 to 18, that's the range where we are right now, and that's the movement of the S&P that moves that volatility index. So we are seeing it at these very depressed levels, at least relative to what we'd seen in the past. So I do think that there is great potential there for the possibility that we could have a heck of a summer, actually, that really could heat up. Now, a lot of that does have to do with where are we in inflation in the next couple of weeks, couple of months, and as we get towards the end part of the year. But certainly as of right now, it looks like people are feeling very, very comfortable about things, with a few different sides of it as well when we talk about some of the sticker shock for some of these homes, because they have gotten to absolutely ridiculous levels on some of the new home building. There's no doubt about that.
Yeah, it's funny, you know, speaking of feeling good, I'm sure Tom Lee is feeling pretty good about his call. Remember, he had 4,400, and he thought we were going to hit that in the first half of the year for a lot of the reasons that we've discussed now. So maybe his call is looking even better. Now, 4,400 happens to be the number for the end of the year that J.P. Morgan has put on the stock market. Let's welcome in our headliner, Dubravko Lakos. He is that firm's head of U.S. equity strategy. Dubravko, welcome back. It's nice to see you today.
Thank you. Thank you. Thanks for having me.
Your colleague, Marko Kolanovic, really got us rolling earlier in the week where he said the next leg higher for the rally is likely upon us now. He talked about 4,400. I'm assuming that that's a team call. You and Marco working in concert to come up with a thesis on where you think the markets can go. Are you as bullish as he is?
Yes, I'm definitely on the positive camp. About a month and a half ago, 2 months ago, I did talk a little bit about a potential consolidation, and that was really surrounding potential fear around very, very hot NFP prints and maybe a little bit higher taper risk. But since then, my conviction, if anything, has moved higher. And I think, I heard it earlier in the show talk about, I think from Steve on Goldilocks, basically a situation where growth remains above par. And I think the inflation outlook still remains elevated, but manageable. And I think that bodes very well for risky assets and certainly for equities. And so on a margin, I'm more positive. And I do agree that this summer, I think the market continues to break out.
Wow. I mean, because, right, growth good, rates low. And as Steve Leisman also laid out with us the other day from his new reporting about the extraordinary measures that the Fed was going to go to make sure the market was clear on where it stands and that a taper's not going to happen for a while. And even when it does, it's going to be incremental. And tapering isn't hiking, yada, 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 yada. But you get the picture. It does lay out a scenario where you can make a Goldilocks case, can you not?
Yes, absolutely. And I think, the cyclical side, look, the cyclical side, obviously some areas of cyclicals are more advanced. Some areas are still lagging. So I think one needs to sort of become a little bit more nuanced and differentiated than, say, 6 months ago when all cyclicals were firing on all cylinders. But I think what's interesting is on the value side, I would start to also add some pockets of growth that, to me are looking garpy. And so when you start to get a little bit broader market participation, I think that is a very powerful combination to lift the market higher.
Oh, that's interesting, too, because there is a good debate right now as to whether growth is going to come back in favor. David Kostin, your competitor over at Goldman Sachs, says value is likely to still outperform growth in the near term. But towards the end of this year and into early 2022, growth is going to have its way again. Kathy Wood, of course, the ETF rock star of the ARK funds, was talking about a return to some of those growth stocks as well. So you share that view that maybe now these growth stocks have come in, their valuations aren't as egregious as they may have been, and now they're opportunistic.
Yes, I think the debate here is, growth could get a bit of a bounce given that it hasn't done that well. But I think the big debate is this bounce sustained or not? So in other words, is this bouncing growth tactical and then it gets faded away? Our house view is still one where yields likely move higher, oil prices with high conviction move higher from here. And so that should continue to be supportive of the value trade. Now, I like to think about not just value, but I like to think about some other dynamics. I like to think about a rotation from domestic reopening towards international reopening because this recovery is not synchronized, right? And then I also like to think about areas of like where, goods consumption has really been the hot area so far, but I think service-based consumption has been a big laggard, and that could start to also pick up. And so I would like to think about value also through those angles as well.
Okay, Josh Brown has a question for you, Dubravko.
The technicians that I read are pointing out the fact that cyclical stocks are now slowing down and or rolling over. This isn't definitely a negative because they've been on absolute fire, and many of these stocks have doubled and in some cases tripled. So I don't think a pullback is the end of the world. But when you see industrials, materials, financials cooling off, you see the lack of reaction in the 10-year yields to what can only be interpreted as inflation data running hot. Then you take a look at XHB, housing stocks rolling over, and transports rolling over. And really the only cyclical sectors continuing to make new 52-week highs is energy. And we know that's a very quixotic sector, and we shouldn't hang our hats on that. How much confidence do you have that that price action is just a temporary blip in a bigger rally versus the possibility that we've seen a peak for these cyclical stocks versus the market. And I'm going to give you something from Costin, maybe that you'll react to specifically. He points out that of all of the periods of time where value has outperformed growth, the average length of those rallies is about 9 months, and we're in month 7.
No, that's fair, and I think that's fair if you sort of look at it versus the recent history. But I think what we're going through right now is also something somewhat unprecedented, and so you know, just like we had an overshoot to the downside, we could be exhibiting an overshoot to the upside that is bigger than what we're accustomed to seeing in the prior cycle. So I think that part, it's hard to really call. Now, I did mention earlier the need for becoming more nuanced and differentiating. If you look at our last report, we're still very positive on energy, and that's basically because we're still very positive on oil. And I think oil has some very interesting dynamics that continue to push prices higher. The bank trade, the financial trade, yes, it is more crowded than energy, but I think it still continues to do well in this backdrop. Industrials, however, parts of materials like chemicals, parts of transportation, we didn't know it already a few weeks back, are probably areas where the risk reward is tougher. And so personally, my excitement there is not as high. So that's what I'm saying. I think there is the need to sort of do a little bit more stock picking, a little bit more differentiation. I don't think you just go necessarily buy all beta equally, if that makes sense.
Yeah, it does. And I know Steve Weiss has a question for you, too. Before we do that, though, I got to get to Josh Lipton. He has a market flash for us on Electronic Arts. Josh, what's the story here?
That's right, Scott. We do have some news from EA here. Hackers have broken into EA and stolen game source code and related internal tools. This is according to Motherboard, which says that source code was taken for FIFA 21. They also took source code and tools for the Frostbite engine that powers a number of EA games. And they're advertising this now for sale in various underground hacking forums. I did reach out to EA. I haven't gotten an official comment yet, but they did give one to Motherboard. And let me read that to you. They say, listen, they're investigating this recent incident, but EA is saying here in a statement to Motherboard, no player data was accessed, and we have no reason to believe there's any risk to player privacy. They go on to say they've already made security improvements. They do not expect, they say, an impact on our games or our business. They say they're actively now working with law enforcement. Scott, back to you.
Yeah, Josh Lipton, thanks. Seeing a bit of an impact on shares, down a couple of percentage points on that news. Yet another story about a cyber attack. Josh?
Sorry.
Josh Brown, you want to weigh in on that?
I do. Take a look at FireEye, up 4% plus, rallying on that news. And then take a look at my favorite, CrowdStrike, headed back toward its all-time high, up 4%, almost 9 points today. Clearly, the more headline risk we see for ransomware, which is now a full-blown epidemic, let's not kid ourselves, the more attention that the relatively small handful of cybersecurity stocks will continue to receive.
So, Dubravko, just to button up at this point, is there only individual stock risk to this story? Do you worry about any sort of broad market risk to this spate of cyber attacks that we've seen, either large or small?
I mean, yes, there is. I think at some point, I think this issue could definitely become even bigger and bigger as we become more and more dependent on the Internet of Things, if you will. You know, at this point, yes, it's really sort of happening at an individual company level. But certainly there is the potential of waking up one day and sort of facing this really ugly cloud where, you know, the attacks are sort of more, you know, broadly felt. Yeah, so I think it's a risk. So it's a tough one to put our hands around, but certainly it's something to pay very, very close attention to. So I think the theme that Josh highlights, it's a hot theme. It's not going away. It's secular.
Yeah. Of course, it's hard, if not impossible, to quantify any sort of risk magnitude to the overall market. But certainly, to your point, a good one worth keeping an eye on. Okay, let's get back to the conversation about where your money's going from here. Steve Weiss, I said you had a question for Dubravko. The floor is yours.
Thank you. So, Dubravko, first of all, congratulations. You've had a great call, unwavering in your bullishness to this point. But help us solve the mystery of the 10-year. So I wouldn't have been surprised to see it tick up a little bit today. I wouldn't have been surprised to see the yield flat. But here we have it again with a 1.4 handle on it. So in your conversations, you talk to so many institutional managers. Is everybody just short and covering because they see no fear about inflation, buying into the Fed thesis? Is that what's going on, or is there true value there?
No, look, I don't think it's that straightforward. I think there's a lot of, how should I put it, head scratching taking place. For instance, purely anecdotal, I see still a relatively big dose of disagreement between the macro, the fixed income community, and sort of these macro fixed income investors that I talk to versus equity investors, and especially on the long only side, where one side doesn't necessarily see yields breaking out higher soon this summer, perhaps later in the year. The other side sees, however, continued inflation pressure and yields likely moving higher. So, yeah, I don't think it's that straightforward. There's really sort of two sides to the view, and they're really going at each other. And there is a pretty big dose of disagreement, especially when you sort of look at equity versus macro investors.
Yeah. Hey, Dubravko, it's always good to talk to you. Some wild swings in the market we need to keep our eye on. We'll talk to you again soon. Look forward to doing that. That's Dubravko Lakos over at JP Morgan. So let's do this, Pete, because, we talked about those who think that growth is going to come back in favor. And I mentioned, Cathie Wood making this big call. We discussed that with Jim Cramer yesterday on our show. I want you to hear what Cramer said, then I'll take it from there.
I agree that with the 10-year trading the way it is, that growth is going to be back. But I am going for the barbell.
All right, Pete. So he makes a distinction, does Jim, between going back to growth, but calls these, extraordinarily high multiple stocks, the kind that Cathie Wood, those type stocks, quote, head spinning. So do you need to make a differentiation between growth and very high valuation growth? Because it's not to say that there aren't some in that universe that could still work in this environment that maybe aren't so tied to the pandemic or aren't through the roof in terms of valuation.
Sure. I mean, I absolutely, Scott. I mean, there is a differentiation between there are growth stocks out there that actually trade at some incredible value, quite frankly, and yet there are all of these multiple stocks that we talk about each and every day, where I think that from an investment standpoint, it's just really, really difficult, I think, at least. I think those are tradable stocks. I think that you want to have your risk in place when you're in a lot of these various names with these high multiples. Because of that, I think that's where the derivatives markets really come into play. But it doesn't mean you have to completely avoid them, because in most cases, we're talking about extremely liquid companies in terms of the derivatives markets themselves that give you the opportunity to be a part of these names as well if they're going to move to the upside. But like I say, there are plenty of names out there that really do stand for in the growth category that don't necessarily trade at these incredible multiples. And I think those are the stocks that you're going to want in terms of stocks themselves, as opposed to having to be in the derivatives market.
Okay, so that takes me square to Zoom, Josh. Upgraded to a buy today over at Argus. They established a price target of $440. That's 32% higher from here. It's a name that you obviously own and have talked about on numerous occasions. What do you think about this call? And again, in the context of the kind of conversation we're having about the Cathie Wood, the ARK stocks, ones that have been tied to the pandemic, and whether they're worth really riding from here forward.
I think that Zoom has built a user base and sped up adoption of video calls as a good alternative to in-person meetings for the entire business community worldwide, in such a way that even though we'll see the growth of adoption decelerate, I don't think these enterprises that have signed up with Zoom are just going to say, oh, there's a vaccine, let's stop Zooming. I run a business. I have 41 employees. I don't have people crisscrossing the country on airplanes right now, and I don't think I will 6 months from now either, because of how effective Zoom communications have been for our clients, our partners, our vendors. So it's not that everything's going to be a Zoom all the time. There will be things that go back to in-person, but this opportunity is big enough, I believe, that Zoom's platform, the sheer scale of how many millions of customers it has daily using its services, are now being, I think that potential has been ignored, and I think the pessimism for mobile office is probably gotten carried away. The pendulum swung too far. So I think the stock works here in the mid 300s. I don't know that it's going back to 600, but I'm happy being a shareholder right now.
Yeah. Steve Weiss, another one, Square in focus here, Teladoc, right? And you bought some puts on Teladoc.
Way different story.
I did. I had been short Teladoc in the past. Look, I talked to a lot of docs. Some won't use it because, again, it hits their margin somewhat. On some docs, on other docs, it increases it because they're able to do more visits. But the issue for me is Amazon came out yesterday, and while it's been known that Amazon is in the space and they've been using it for their own employees, they also announced they've got a number of large corporations that are using it as well. So I think they'll be Amazoned. It's not unique to Teladoc what they do. There are other services out there, and some aren't doing so well. So I think I think Teladoc's become commoditized somewhat. So I just can't own it, and I think that the valuation's too high given Amazon coming into the market.
Okay. We are going to take a quick break. When we come back, Pete has a new tech buy you're going to want to hear about. Also straight ahead, a reopening stock. It's up more than 20% in the past 3 months, up 90% in the past year. Now there's a bullish new call saying it's going to double. It's going up double digits from here. We'll debate that next in our call of the day. And a reminder, you can always watch or listen to us live on the go on the CNBC app. We're back in 2 minutes.
The Lexus ES. Every curve, every innovation, every feeling. A product of mastery.
Get 0.9% APR financing on the 2021 ES350.
Experience amazing at your Lexus dealer.
We are all over this developing story that is rocking Wall Street.
There's a tremendous energy in this market.
Some investors ready to pounce, taking off.
Soaring.
The stock surged and sent Wall Street into a frenzy.
Is this a huge opportunity for consumer electronics?
A record-breaking week for markets.
Is this crazy or is this crazy genius?
They're just killing it.
The idea that shareholders not a beneficiary of this is crazy.
Once-in-a-lifetime opportunity.
Are you ready, Ski Daddy?
Okay, so turn left. Take this right. Now pull into that parking space. Now put the car in park. Great, thanks so much. It's my lunch break.
You know you want that smoky, tangy, sweet, and spicy sauced and tossed Wingstop, where flavor gets its wings.
At Westcom Credit Union, we think your bank should be all about you all of the time. So we make it easy for you to do your banking, wherever and whenever you want. You can transfer money, check your account balance, and pay bills all online. Use our mobile app to deposit checks into your account. And through our partnership with Zelle, send money to people you trust, no matter where they bank. Open your account today at Westcom, where it's all you all the time.
It's the app that finds people faster. We show you local pros in your neighborhood and price range, ready to help with pretty much anything. Download Thumbtack today.
Get up, let's go! Stay up, go!
It feels good to breathe, doesn't it?
Soft cycle, welcome home.
I'm Seema Modi, and here's your CNBC News update at this hour. The wife of Mexican drug kingpin El Chapo has pleaded guilty to drug charges. She also admitted that she helped her husband's multi-billion-dollar drug empire. The FDA extending the shelf life of Johnson & Johnson's COVID vaccine from 3 to 4.5 months. The move will be welcome news to health officials in Ohio and other states where hundreds of thousands of doses were nearing their expiration dates. President Biden and UK Prime Minister Johnson meeting for the first time ahead of the G7 summit and seeking to highlight the special relationship between their two nations. Full coverage of their meeting and what Biden hopes to achieve at the G7 meeting tonight on the News with Shepard Smith. And in France, a slap is apparently worth 4 months in jail. That's the sentence handed down to the man who slapped French President Emmanuel Macron in the face. The 28-year-old has acknowledged he struck Macron, but says it was not premeditated. Quite the video, Scott. Back to you.
Okay. Thanks for that, Seema Modi. All right, Pete Najarian, I mentioned you have a new buy, and it is Cisco, the tech company. Talk to me.
I'm busy because of the fact that I was having issues, and now I'm connecting you a different way. But I love Cisco. I've been talking about this name for a while. I think that there's plenty of promise there, and I think that even though it's already had some upside movement this year that's been pretty extraordinary, I think there's a lot more room to run. I love what Chuck Robbins has done with this company. They've done an unbelievable job with acquisition. And when you look at the balance sheet and the fundamental story, it's all in place. And I think the rest of the second half of this year, I think Cisco has plenty of room to continue this move to the upside.
All right, we'll keep our eyes there, up 1.5% on that. All right, let's get to our calls of the day. I'm going to make you wait a second for this stock that's up 90% in a year, because I first want to do one that got double upgraded today, Brenda, by Bank of America. Price target goes to $325, and that is Sherwin-Williams, a stock that you own. Think about this call. Late, but still okay?
Yes, I would agree. It's a little late, but I think it is still okay. I mean, we saw last year, a huge growth coming from consumers buying paint and repainting. It was an easy fix for staying at home. Still think that the investment in homes is not done yet. And with Sherwin-Williams, we should see a shift towards more contractor sales. Certainly the housing starts numbers that we've seen have been supportive of that. So we do continue to think that there is going to be another leg to the story here, perhaps. And, think that as things shake out and we all decide who's actually going to be working from home permanently or not, or how often they're going to be, I think that people's homes are going to be, a continued place of investment. And, paint is an easy place to invest, relatively low cost. So we continue to think this is a great story.
Okay, we will watch that one. And another stock you own is UPS. Pete, you own it too, upgraded to overweight at JP Morgan today. The price target to 243 from 224, 20% upside from here. That is the one that's up 90% in 1 year. Okay, maybe this one's a little bit late too. If you're upgrading it to buy now and you're raising the price target to where you are today, but what do you think about this call?
I think they are a little bit behind on this, Scott, but this is a company that just came off one of the, actually the best earnings report that they've ever had. So it wasn't in the fourth quarter, it wasn't the holiday quarter, and yet they continue to produce. I think that you can look at FedEx, you can look at UPS. There are some differences, there's no doubt about it, but both having an extraordinary year, extraordinary performance, and I think UPS has plenty of more room to the upside. That being said, I do think it's a little bit late, because even though I think there is some room to the upside, when you look at the multiple and you look at the fundamental side of this story, I think that it's got room, but it's not a whole lot of room. As a matter of fact, if it reached up a few more, 10% or more, I think I might have to be out of there.
Oh, okay. All right. You let us know. Steve Weiss, you have a pretty big position in XPO.
I do. And XPO would have been up 10% yesterday, but the UPS analyst day was disappointing. I thought it was fine. XPO is breaking two companies. One is going to be GXO, the other is going to be XPO. And what's good about it is right now it's not investment grade. GXO will immediately be investment grade, and XPO shortly thereafter. One will be the freight side, and GXO will be the logistics side. Two great businesses. They increased their guidance yesterday on both halves. So I think it's a phenomenal story, and the stock should trade towards 200 once the street sees it breaking up.
Okay. All right. Up next, Pete has unusual activity. Plus, as you know, June is Pride Month, and all month long we are spotlighting CNBC contributors, business leaders, and our own CNBC anchors and producers. Here is Goldman Sachs Managing Director of Corporate Communications, Maeve Duval.
The way around stigma is through encouragement and support by those around you. I was very fortunate that when I decided to come out at Goldman Sachs exactly 2 years ago, I had that support from my colleagues. But there was one colleague in particular who sent me flowers on that day. This was a straight cisgender person, and that gesture, knowing that I had the support of somebody at the highest level of the firm, made all the difference to me.
When the future first arrives, we often don't recognize it. Interactive Brokers founder Thomas Petterfy brought the future to the floor of the American Stock Exchange in 1983. The company had fabricated Wall Street's first mobile computer, and it changed finance forever. Today, Interactive Brokers continues to push finance forward by building the latest technology you need to increase your success. Move your account to Interactive Brokers.
Wondering what actually goes into your multivitamin? At New Chapter, it's innovation, organic ingredients, and fermentation.
Fermentation?
Yes, formulated to help your body really, truly absorb the natural goodness. New Chapter, wellness well done.
This is our collective history. Together, it's ours to protect. For new histories to be written, new records shattered, new legacies forged. CrowdStrike. We stop breaches.
My husband Ben and I opened Ben's Chili Bowl the very same year that we were married. That's 1958.
The Chili Bowl really has never closed in our history. When the pandemic hit, we had to pivot. And it's been really helpful to keep people updated on Google. We wouldn't be here without our wonderful customers. And we're really thankful for all of them.
Obsession has many names. This is ours, the Lexus IS. All in on the sports sedan.
Lease the 2021 IS 300 for $379 a month for 36 months.
Experience amazing at your Lexus dealer.
Taco night is heartburn you can plan for, but surprise pizza means heartburn you didn't expect. New Zantac 360 Degrees contains the #1 doctor-recommended medicine approved to both prevent and relieve heartburn and works in as little as 15 minutes. New Zantac 360.
A CNBC exclusive. DraftKings CEO Jason Robbins on NBA playoff action, their FanDuel rivalry, and the outlook for expansion. Squawk Box, 6 a.m. Eastern. Watch Squawk Box anytime on demand.
All right, let's do it. Unusual activity, Pete. What are you seeing today for us?
All right, Scott, I've got two of them for you. First one's going to be U.S. Steel. Now, we've seen this name on multiple occasions. We've talked about materials and energy and the movement to the upside, and U.S. Steel certainly falls into that category. With the stock trading just underneath $28, Scott, we had a buyer of 6,700 of the August, so they're going out a little bit in time, the August 35 calls. They're looking for some nice upside. Those are going for about $1.40. One print of that was 5,500 options, so pretty aggressively bought, very large player involved. I like that. I already own the stock, but I think this is some options that could really prove out to be something very extraordinary if indeed this stock starts moving all the way up towards that 35 level. Walgreens Boots is my next one. Now, this one's been pretty interesting as well. They've gone through the ups and the downs of everything, including what they've had to deal with supposedly the competition coming in from Amazon. All the stock has done is gone a little bit higher and a little bit higher. Today, with the stock trading underneath 55, we got a buyer of the June 56.5 calls in Walgreens, about 4,400 of those. They were only about 15 cents up to about 27 cents. Very inexpensive, and it gives us a great opportunity. I like what we're seeing there. I got one last one. I'm going to update for you guys. Tapestry. We had a nice hit on that last week. They were buying the June 11th expiring. Those are tomorrow. Expiring calls at the 41 strike. That stock moved. Those options flew to the upside. I am now out of that trade, just as an update.
No, appreciate the update. All right, retailer RH posting blowout earnings. Shares are surging. The investment committee gives their take on that next, along with their top consumer plays. There's RH up 15%. Plus, don't miss the CNBC Evolve Global Summit. That's coming up on June 16th. To register, you can go to cnbcevents.com/evolve. We'll be right back.
That building you're trying to buy, you should 10X it.
10X it?
10X is the world's largest online commercial real estate exchange. You see it, you want it, you 10X it. It's that fast. If I could, I'd 10X everything, like these salads. Oh. Or these sandwiches. 10X does the same thing, but with buildings.
Sweet.
Oh, no, he wasn't. Oh, actually, that looks pretty good. See it, want it, 10X it. Yum.
Give me the detonators.
No! You first!
You are in no position to negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Boom! Nothing can stop me!
So that's how you got into crypto?
Yeah, no. I invested with Grayscale. Bitcoin exposure straight from my brokerage account.
Okay. What happened to the guy on the roof?
Investing in Bitcoin begins with GBTC.
Nothing will stop me from blowing up this market.
I love Bitcoin! Whoa, 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 Ross. This is my fantasy. And is your toilet seat up?
Since the day he was born, Michael was unable to hear. Ryan's seizures kept him from driving. Until they came to us. Keck Medicine of USC. Beyond exceptional medicine.
At JP Morgan, the only definition of wealth that matters is yours. It can be a smaller house, but a bigger nest egg, a goal to work toward, or the freedom to walk away. With 200 years of experience, personalized advice, and commission-free trades on an award-winning app, we're working for you. Planning, investing, advice. JP Morgan Wealth Management.
So you can be your strongest. Purchase Tonal today and receive Power Beats Pro wireless earphones from Beats by Dre for Father's Day.
This is what real food looks like. Fresh, real meat and veggies. The food dogs were built to eat. The Farmer's Dog is changing the way we feed our pets. Visit tryfarmersdog.com to see your dog's personalized meal plan.
Shares of RH, we just showed them to you, surging today. Earnings beat expectations. The company raised its outlook. Kramer was raving about it this morning. He loved the quarter. He loved the call. He loves the stores. He says, so far from a store, it's an experience. Now, Josh, nobody owns RH, which maybe you're kicking yourselves that you don't. It's up 178% over a year. It's up 56% year to date. What do you think the story is here with this one?
Well, one of my favorite things about it is that it's a 74 PE ratio, and I think the largest shareholder is Warren Buffett. So I like that idea that even people steeped in the Graham and Dodd traditions about valuation, blah, 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 understand that when you have a pony that can run this fast, ultimately the growth is something that is worth betting on, even at an elevated valuation relative to the overall market. I missed this one. I don't know why I don't own it. I've been to the stores. The stores are sick. The rooftop restaurant in Manhattan is sick. I was at the one in Chicago. Scott, you and I were both in the city at the same time. Ridiculous. I should own this. I don't own it. It is experiential retail at its finest. Every boutique retailer should be trying to copy them right now. And the fetishization of housing just really was like an unexpected tailwind that came into the picture and gave it even another boost above the growth rate we had already been witnessing in 2017, 18, 19. So I love everything about it. I'm not going to buy it here, but I hate myself every time I see it.
all of those reasons, Steve, that Josh just laid out is why you pay up for a stock like this, right? Relative to some other retail plays, these guys have it going on in so many different
I'm gonna
ways.
wait till it goes to 1,000 and then pay up.
No.
Right, Steve, though? I mean, from a valuation standpoint, that's what you have to make a decision on, right? I mean, that is why you are willing to pay a higher valuation for some stocks relative to others. And the market is clearly willing to pay up for this one.
Yeah, no, that's true. And you also have Wayfair that's had equal performance. But I choose to not pay up for those because I think the multiple is still extremely high. And I do think the consumer is going to stay flush for a long time. And against consensus, it's going to be even more flush after the summer when they start going back to work. The ones that have been staying back, been going to the beach, they'll take the summer off. Then you'll see the consumer even more flush. Look, I'm involved in a couple of names, Target being one of them, which I'm sticking with, which has also done quite well, much more reasonably valued. And a small one, which I really haven't talked about, which is Academy Sports, which I've owned for a couple of months, which reported a blowout quarter yesterday, and that's selling at 10 times earnings. The stock's tripled. I haven't been there for the whole ride. It tripled since it launched as an IPO in October of last year. So I think there are other places to have value. Pete, I believe, still owns Lulu. That's been stuck in neutral, but yet they've got a moat there, and I don't think it's unreasonably valued at all. So there are other places where you can get your retail exposure without the nosebleed multiples that at some point, someday, are not going to stay there.
All right, we're getting a look at ASO shares right now making a move. All right, Pete, you finished this segment up by telling us your favorite retail name outside of Target.
Sure. Probably TJ Maxx, quite honestly. That's another one of these names that we've talked about many times on the show, and it's, they've done things right, and they are positioned well, and they still trade at what I would consider to be a decent valuation. One thing I'd say real quick about RH, though, yes, the multiple looks high, but when you look at the forward multiple and you look at the kind of growth that they've had going into this whole thing, the multiple actually is closer into the 30s. So it's a little bit more palatable, I think, when you look at it from that perspective. And I think we all missed this one, unfortunately, because when you look at Restoration Hardware and what they were able to do, it fit perfectly into the conditions that we found ourselves in. And to Josh's point, those roof decks, those are some of the best places to eat you can ever be. So they're doing everything right.
Yeah, they seem to be for certain. All right, Pete, thanks. Ask Halftime's coming up next. Send your questions in by video. We'll play them on the air. Email us, askhalftime@cnbc.com. We'll do it next.
Welcome to my family.
Brendan leaves the house, then enters the office. He signs subtitles.
One of my favorite
parts of working here is not in my job description.
I'm part of a group.
I'm part of a group of people with disabilities. We work together to make sure that everybody has the same opportunities.
Same opportunities.
I want to create a more inclusive and accessible world. Points to his wife and kids. For you and you and you. Amazon logo.
Folks, the world's first fully autonomous vehicle is almost at the finish line. Today we're going to fine-tune the dynamic braking system.
Woo! What a ride! I invested in Invesco QQQ, a fund that invests in the innovators of the NASDAQ 100, like you.
You don't have to be a deep learning engineer to help make the world a smarter place.
Does this come in blue?
Become an agent of innovation with Invesco QQQ.
Digital transformation has failed to take off because it hasn't removed the endless mundane work we all hate. Automation can solve that by taking on repetitive tasks for us. Unleash your potential. UiPath. Reboot work.
It feels so good. It feels so good. It feels so good. Oh, mama, gonna make my move. I'm all in, got nothing to lose. Way up high and take it low. Here I go. Are you ready? Ready to go? Are you ready? Ready for more? Are you ready?
T-Mobile is the leader in 5G.
Experience it now with a powerful iPhone 12 Pro with 5G on us. And with our new Magenta Max plan, you'll get unlimited premium data that can't slow down based on how much smartphone data you use. Plus, taxes and fees are included. That's right, unlimited premium data in the iPhone 12 Pro on us. Only at T-Mobile, the leader in 5G.
The Investment Committee answering your questions. First up, Josh, a video question for you. Let's watch.
Jerry Vance, Las Vegas, Nevada. Your thoughts on European banks such as LYG, DB, and Indian Bank IBN. Thank you.
All right, Josh, what do you think? And I should remind everybody, too, remember how bullish Kramer was yesterday on Santander when we were talking about that massive individual billion-dollar bet in that BlackRock Europe ETF? So there's a lot of talk lately about what's going on in Europe. What do you think, Josh?
I actually, of these three, I like the Indian bank the best. First of all, the entire Indian stock market is on fire. IBN is the third largest bank in the country. I don't know it fundamentally, so I'm going to give you the technicals. Long-term trend looks great, hit an all-time high in February. It's definitely volatile, so if you're a buyer, maybe space out your purchases over time. But this one looks like it's going higher to me, and I like it better than the other two that you mentioned. Thank you for your question.
All right. Yep, thank you very much for the question. Thanks for the answer, too. Brenda, to you, AbbVie or Gilead? That's from Joe in Brick, New Jersey. Better long-term purchase. Which one?
Yeah, I mean, these are two real value plays within the pharmaceutical industry, 4% dividend yields. Our preference would be Gilead. They have nice free cash flow that's coming from the HIV franchise, yet they still should see growth in the future from a string of acquisitions that they've made recently, primarily within the oncology space.
All right, thank you. Steve Weiss, a video question for you.
Hello, this is Tom Shoulders from Rochester, Michigan. I have a question for Stephen Weiss. I bought Ericsson about a month and a half ago. I bought the stock and the 2022 January options. Is this stock going to pay off, or is it time to say goodbye? Thank you.
All right, we appreciate you reaching out, Tom. What do you tell him, Steve?
Yeah, thanks, Tom, for the question. Look, I still own it. I haven't sold a share. I was speaking to and had lunch with one of the top IT people, top technical people of the big three providers, AT&T, T-Mobile, Verizon. I'll let you guess which one. And this is inning one of a long cycle of 5G. And you have Ericsson, you have Nokia. Huawei's out of the picture. So, yes, I think this keeps going, particularly with the small cells that you need for 5G. They'll produce a lot more of the equipment there. So high-quality company, and when Europe gets going, you really see it take off. By that, I mean the stock markets even more so than they are now. So I like Ericsson quite a bit. I'm continuing to be there.
All right, last but not least, Pete, got a video question for you.
In my portfolio, 8% was in shares of IBM. Would you think I should buy more, add to my portfolio, or I should sell some? Have a good day. Thank you, guys. You're doing a fantastic job.
Okay, Pete.
Yeah,
so this
thanks.
is an interesting one. It's not just talking about IBM. It's the fact that it's also an 8% weighting in his portfolio right now. So you have to maybe tackle it two different ways. But what do you think?
Sure, and that's a pretty decent percentage. I can tell you this, I still like this company, and I like it even more than I did probably a couple of years ago because of the changes that have been made. And because of that, I think that the Red Hat influence that's going on in IBM right now is going to be something that's going to be very meaningful over the next couple of years. So I'd either add to it, but I certainly wouldn't want to sell any of the shares.
All right, good stuff. Final trades coming up next.
Sales are down from last quarter, but we're hoping things will pick up by Q3. Yep.
Doug?
Sorry about that. What? It's.
You all right?
Never settle with Power E-Trade. It has powerful, easy-to-use tools to help you find opportunities, 24/7 support when you need answers, plus some of the lowest options and futures contract prices around. Don't get mad. Get E-Trade and start trading today.
Incomparable design makes it beautiful. State-of-the-art technology makes it brilliant. The visionary Lexus NX.
Lease the 2021 NX 300 for $359 a month for 36 months.
Experience amazing at your Lexus dealer.
At Amica, we believe in life's extraordinary experiences. We're an insurance company that delivers an experience that meets the only standards higher than ours. Yours. Experience Amica. Auto, home, and life insurance.
We sit for over 9 hours every single day.
Still working from home?
At Westcom Credit Union, we think your bank should be all about you all of the time. So we make it easy for you to do your banking, wherever and whenever you want. You can transfer money, check your account balance, and pay bills all online. Use our mobile app to deposit checks into your account. And through our partnership with Zelle, send money to people you trust, no matter where they bank. Open your account today at Westcom, where it's all you all the time.
Okay, so turn left. Take this right. Now pull into that parking space. Now put the car in park. Great, thanks so much. It's my lunch break.
You know you want that smoky, tangy, sweet, and spicy sauced and tossed Wingstop, where flavor gets its wings.
Sleep, and activity. The better you sleep, the better you. Get your Oura Ring today.
For whatever the day throws your way, there's Freshly. Chef-made meals delivered fresh, ready in just 3 minutes. Nutritionist designed, full-on delicious. It's an effortless way to eat better. Get started now at freshly.com.
When I was your age, things were different. Getting Shiloh's food was never this easy. Mom's workout class was all the way downtown. I didn't get to design my own room. And now Dad thinks he's a big, fancy chef.
Wow. I wonder what it's gonna be like when I'm your age.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you'll have the freedom to live the retirement you want. This is what an annuity can do. Find the right financial professional to show you how. Learn more at protectedincome.org.
Stay restless with the icon that does the same. The RX, crafted by Lexus.
Get 1.9% APR financing on the 2021 RX 350.
Experience amazing at your Lexus dealer.
Need better sleep? Try Nature's Bounty Sleep 3, a unique tri-layer supplement that calms you, helps you fall asleep faster, and stay asleep longer. Great sleep comes naturally with Sleep 3, only from Nature's Bounty.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
All right, Pete, why don't you start us off with final trades? I hear you got something new.
Absolutely. We're going to do Schlumberger. I've seen some activity in there, Scott. I think this thing is going to continue to move to the upside. I like the beta names and energy.
Okay, well, we're just rubbing it in Josh's face now. All right, Brenda.
So TJ
sticks today, very quietly up 4% on the week, just below a breakout point.
Yep. All right, Weiss, give me a name, please.
Porsche.
All right, the exchange starts now.
Thank you, Scott. Hi, everybody. I'm Kelly Evans. Here's what's ahead this hour. Inflation soars by the most in over a decade, and the monthly increase in CPI was the second biggest since 1981. So why are stocks rallying? Why are bond yields barely budging? I think they're even dropping right now. We're going to explore this seeming disconnect. Plus, another sell-side analyst throws in the towel. B of A downgrading Clover to underperform after its Reddit-fueled run-up, the latest in this tug of war. And Starbucks shortages, consumers behaving badly, and crypto is coming to 401ks. It's all in rapid fire, but we start with the latest state of play in the markets. Dom Chu is back with that. Hi, Dom.
All right, so Kelly, the state of play is generally positive. If you take a look at the markets overall, we're off our session highs, but still, I'm going to put a star next to the S&P 500 because we hit a record high shortly after the opening bell there. But the Dow Industrials, 34,593, up 150 points, 0.5%. Generally speaking, roughly 0.5% advances for the three major indices. So keep an eye on those particular moves in the marketplace. Record highs for the S&P. You mentioned Clover Health. Let's take a look at some of the other meme stocks that we've been talking a lot about. The Kings, the original ones, GameStop and AMC, both down rather sharply, 10% for AMC, down about 22% for GameStop. They could look to sell shares in a secondary offering. But let's look at clean energy fuels, down 15%. Also, Workhorse, the electric vehicle company, a nat gas for vehicles, an electric vehicle company, both names getting some love from meme stock traders and they're now selling off today. By the way, if you want to know more about some of these other meme stocks, Bank of America analysts have put out a new note on what the next meme stocks could be. CNBC Pro subscribers can go on our website and get those details. And then we'll take a look at RH. Those numbers great, still showing signs of life in the home improvement market. We're right near record highs, as you can see here. The records were earlier this year. We're just about $33 away from where those levels were. But still, RH.com, the old restoration hardware. This is upscale furniture and furnishings, Kelly. They're showing that the home improvement market is still alive and well. Those outlook numbers look pretty good. RH, the stock of the day. I'll send things back over to you.
I know you follow that one closely, Dom.
Yes, I do.
Dom Chu. Consumer prices continue to soar, the CPI jumping 5% year over year in May. That's the fastest pace in nearly 13 years. But both stocks and bonds seem to be shrugging off this news. The S&P 500 hitting a new record high today. The 10-year Treasury yield now in the red. It's at 1.47%. What's behind this inflationary disconnect? Joining me now are Mark Smith. He's Senior Vice President and Portfolio Manager at Wells Fargo Advisors, and John Augustine is Chief Investment Officer at Huntington Private Bank. Welcome to you both. Mark, please explain what the heck is going on, especially in the bond market.
Yeah, well, listen, CPI is kind of the news of the day, hitting 5, and, that hasn't been hit since 2008. The disconnect is in 2008, there wasn't as much liquidity as there is right now. You've had trillions of dollars pumped into the economy by the feds, and then you've got more cash on hand in people's checking accounts than you've seen in 30 years. And so that's the disconnect. Even though CPI is going up, folks are still spending money because they need what they want and they got the cash to do it.
Understood. So here's my question. And, investors look at all this, they go, there's cash sloshing around everywhere. But why would people buy bonds with that money? Why buy bonds? I don't understand.
Listen, people are a little afraid of where we are in the market. When I talk to my clients every day, they're looking at every single stock they own in their portfolio at all-time highs. And so when folks think that there's not a lot more to go up, they're going to go into those safety assets like fixed income.
John, what would you add to that? And I would say that the fact that it's happening to me is what's interesting. In other words, we can all sit around here, it doesn't make sense at 1.5, should be up at 2, even if, but it doesn't matter because it continues to persist and it's wreaking havoc at the short end. When the 10 years at 1.5 and T-bills are negative and banks have to park their cash with the Fed instead, there's all sorts of bizarre machinations happening. And I'm just trying to figure out which is the dog and which is the tail, so to speak.
No, Kelly, you're right. The bond market is a conundrum to us. It's confusing to us. It's a mystery. But what we know is there's a lot of foreign buying coming in. We learned that earlier this week with one of the Treasury auctions. Then we also know that the bond market believes the Fed, that this is transitory, that reopening parts of the economy are leading this inflation, which you and Tim were talking about. That's what the bond market sees. And by the way, there could be a more, let's say, spooky component. We're actually seeing small cap stocks down today. Is the bond market thinking that potentially inflation could start to slow the economy.
Exactly.
We haven't thought that one through yet. It's just something
Exactly.
on our mind.
And that's exactly what I want to bring to the surface, Mark, because when people look at price hikes, they go, I'm seeing price hikes everywhere. I'm seeing it's got to be inflation. Well, no, price hikes can be a problem if you can't absorb them, right? The thing that's different this time around is that everyone's sitting on these cash balances and sitting on these stimulus checks, and you go, well, maybe the consumer can absorb it, at least for a time. How do you invest in an environment where the prevailing paradigm for the next 6 to 12 months, after that point where things may look completely different?
You've got to look at sectors that haven't performed well in the last, year or so, and there are quite a few of them. You still see that there's quite a bit of upside in the financial sector compared to many other sectors out there. Folks are talking about energy. There's a lot of sectors out there that people can get into and to try to avoid some of these pitfalls of investing at all-time highs. So I'm telling my clients the value over growth right now. You're going to continue to see these consumer discretionary stocks run. Everyone is out. I just went to Miami this weekend, couldn't get a hotel, couldn't get a restaurant reservation. Flights are over $1,000. Wow. This is Coach. So, people are spending money because they have it. Unfortunately, it's the haves and have-nots. So these inflationary numbers are going to really affect the bottom part of the country and the economic stratosphere. And folks at the top just really don't care. They're spending their money.
No, you're absolutely right. I mean, it's going to create a pinch. Maybe there's a little bit of an offset right now from stimulus checks, but that's going to wane over time. And these prices may or may not wane. I mean, we know when companies raise them, they don't like to then go, you know what, forget it. We'll cut them 20% next year because we can't. No, of course, John, they keep them high. So where do you put money to work in this environment? John, I know you have a lot of ideas both in the bond markets and for, the stock market. Can you give us just a couple of the quickest ones?
Sure. Think about this. Number one, post-recession. Number two, inflation concern. So in March, we started moving inflation concerned. We're doing it again now in June. What that means to us is tips, gold, silver, real estate, more equities than bonds, because we're thinking yields are going up as well. So what's on our mind post-recession, there's $4 trillion being debated to see if this economy actually speeds up or if it slows down. And then we have to take some inflation hedge for our clients at Huntington. That's our job. Guide through recessions, guide through inflations. And right now, headline inflation is up. But we hope the Fed's right, that it's transitory.
Yeah, we'll leave it there with that $4 trillion question hanging in the balance. John Augustine and Mark Smith, thank you both very, very much today. We appreciate it. Let's turn to in-person conferences. They're back, and there's a big energy event in Houston to kick off the reopening right now. The timing is perfect because energy itself has been red hot, and the stock of a nearly 140-year-old company is going up pretty strongly as well. They've gone from taking grease out of restaurants to revolutionizing the fuel industry. Brian Sullivan is down at the Tudor Pickering Hold Energy Conference with the CEO of Darling Ingredients for us. Brian?
Hey, Kelly, thanks very much. You talked about the meme stocks a few minutes ago with Dom. Well, this stock, not a meme stock, but it's taken off like rocket fuel if rocket fuel is powered by renewable diesel, which maybe it will be someday. Randy Stewie is the CEO of Darling Ingredients, DAR. You took over the company decades ago, 65-cent stock. You're one of the hottest stocks in the entire energy space, but a lot of our viewers may not be familiar with you. Restaurants, grease, animal fats, renewable diesel. What's Darling's main business right now?
We process 10% of the world's slaughtered animal byproducts. We convert them into food products. If anybody takes a gel cap every morning, if you're seeing Jennifer Aniston out there on collagen peptides, that's us. Then you move over to the feed sector, pet foods, aquaculture feeds, organic fertilizers, and then you move to the fuel. And that's where we've taken animal fats, the greenest hydrocarbon in the world, and we've cracked it and made a decarbonizing solution that's just ready for today's world.
And you've got a joint venture with Valero, a 50-50 joint venture, obviously on the refining side as well. What is your total addressable market in renewable diesel? And talk to us a little bit about margins, because there's a lot of other companies here and elsewhere that would also like to be in that space.
Yeah, the first thing, Brian, is renewable fuels are just part of a portfolio of solutions that the world needs to both power itself and decarbonize itself. When we went into this in 2010 with Valero, they had already moved into the ethanol space. They're the greenest oil company out there. They're a great partner. We brought serial number 01 of the idea of marrying the Darling supply chain of animal fats, their knowledge of hydrotreating or cracking the molecule. And today we make 275 million gallons. I know it's a miniature drop in the bucket of fuel. Here around fourth quarter, that'll move up to 675, 700 million, and then we got a third plant due online in 23 that'll put us at 1.2 billion gallons, making us one of the largest in the world, or the second, and the largest in North America in making green renewable fuels.
And I was going to ask him, Kelly, because stock has gone from 25 to 75, 77 bucks. If he thought that they've gotten ahead of itself, but then Citigroup yesterday comes out with an initiation, a buy rating, and $110 price. You were a $25, now $110 price target. You're 75 bucks. What is the street? What did they miss before, or what are they just catching on to now?
The street is still trying to understand, is the margin in renewable diesel sustainable? Is the moat that we've built around our St. Charles and our Port Arthur facility, is it defensible? Meaning, we've married a supply chain of the lowest cost, low carbon intensity fuel with great technology, a great partner, and a great downstream. So now they're starting to see the earnings come off of it. And all of a sudden, they're running the model, and it's so simple. We're running margins in excess of $2 a gallon. We're going to produce 700 million gallons here in about 3 months. We'll be at that run rate, marry it to our core business, and it's a real easy multiple valuation. You get into 1.2 to 1.5 billion dollar EBITDA numbers, and then take a multiple times it.
But it is kind of a hard company to understand because you are unique. There's private companies that do kind of what you do, but there's no real big public companies. Do you feel like that's been part of the issue with the stock until recently, that analysts, you're not oil and gas, really. You're kind of in the animal space. You're kind of in the pharmaceutical space. It's hard to understand.
As we say, it's a simple business with a lot of moving parts. There's no public comps out there anywhere in the world. As I said, we process 10% of the world's animal byproducts today. And it's a really unique space, but it's one that also doesn't get a lot of coverage. We've been lucky to bring on a lot of energy analysts this last year. That's assisted us. We're starting to shine, and it's really fun for our employees, our shareholders, our board, everybody to see this thing come together.
Stock has been rocket fuel, and you say you're not getting a lot of coverage. Well, you're getting coverage right now. Randy Stewie, CEO of Darling Ingredients. Thank you.
Thank you.
Our first in-person guest at about 15 months back at a conference, and what better to do it? The stock, Kelly, I don't want to say it's a meme stock, but it's certainly been acting like that as well. But Citigroup says it's got a long way to go. By the way, we've got a long way to go here at the conference. More guests all day long here on CNBC from Houston.
Great stuff, Brian. Thank you so much. Brian Sullivan bringing us an under-the-radar energy play. Coming up, as offices reopen, there's a brewing standoff with employees over returning to work, with large numbers asking to work from home. Why this could be another deflationary trend. Plus, tonight could be a make-or-break moment for Tesla CEO Elon Musk as the company delivers its first plaid version of the Model S. We'll take a look under the hood and what's riding on tonight's big unveiling. We're back in a moment.
This is The Exchange on CNBC.
Okay, at AT&T, everyone gets our best deals on all smartphones. Let me break it down. You got your new customers, they get our best deals. You got your existing customers, they also get our best deals. Everyone gets the deals. Questions?
Got it. But why did you use a permanent marker?
Because I want to make sure you remember. I'm gonna get a new whiteboard.
It's not complicated. Only AT&T gives new and existing customers the same great deals on all smartphones. Get up to $700 off our latest 5G smartphones.
America, start your engines. This is the big race. And it's no walk in the park. The hits, the walls. But we all have a team that helps us stay on track. MoneyLion, America's most powerful financial platform. Here we bank, borrow, invest, and grow. Here we roar.
A CNBC exclusive. DraftKings CEO Jason Robbins on NBA playoff action, their FanDuel rivalry, and the outlook for expansion. Squawk Box, 6 a.m. Eastern. Watch Squawk Box anytime on demand.
The PGA Tour champions are at it again. With hundreds of trophies on their shelves, they compete as if they have none. So tune in every week to the legendary action of the PGA Tour champions, where legends play.
Okay, so turn left. Take this right. Now pull into that parking space. Now put the car in park. Great, thanks so much. It's my lunch break.
You know you want that smoky, tangy, sweet, and spicy sauced and tossed Wingstop, where flavor gets its wings.
At Westcom, we think your bank should be all about you all of the time. That's because we're not a bank at all. We're a credit union, a not-for-profit financial co-op owned by our members throughout Southern California, people just like you. So we're all about finding new ways to make banking easier, better, and more rewarding, all to help you build a better financial future. Bank where it's all you all the time. Open your account today at westcom.org/welcome.
Firms access $16 billion in daily liquidity, saving over $1 billion in combined annual transaction costs. Market access.
We're not saying Daily Harvest will change your life, or that it will be the first of many steps to healthier habits. But we're not saying that. We can say that Daily Harvest takes care of food, so that food can take care of you. Get started today at dailyharvest.com.
Welcome back to The Exchange. The past year plus of remote work has been transformative for society. Our work lives changed overnight, and as the economy now reopens, a standoff is forming between employees who don't want to come back to the office full time and their managers. Morning Consult found that nearly 40% of adults surveyed would consider quitting their jobs if their bosses weren't flexible about remote work. On the other hand, a poll by the Best Practice Institute found that some 83% of CEOs want employees back in the office full time. So what's the future of the workplace? Let's bring in Steve Odland. He's president and CEO of the Conference Board and a CNBC contributor. And Ethan Bernstein is associate professor of business administration at Harvard Business School. Welcome to you both. Ethan, I'll start with you because I know you do a lot of work on office space planning and architecture and best practices and that kind of thing. What are you hearing from, employers right now? How are they going to be changing the way that the office looks?
Thank you, Kelly. So, I actually go back to when we published our HBR, the implications of working without an office last July. Boy, that feels like a long time ago. And we knew at that point, this conversation was coming, and it has come. Back then, white-collar office workers were showing that necessity really was the mother of invention. They were sort of figuring it out. We saw satisfaction, conflict, emotion, engagement, all going in the right direction. And since then, honestly, traditional metrics that we've been tracking every 2 weeks have only gotten better. So in some respects, there's this appreciation for remote work amongst many white-collar workers, captured also by larger data sets like my colleague Tsedal Neely in her new book, Remote Work Revolution. And so all of that sort of leaving executives with two questions. The first is, if all of our traditional workplace metrics look so good, then why are we interested in going back, quote unquote, to offices? And if we're not going back, then what are we going forward to? So that's the conversation they're having right now. And it's all tied up in so many of the different ways that we figured out how to make work over the last 15, 16, 17 months.
Steve Odland, there are major societal implications here because if people don't have to live within a decent driving distance of their office, they can basically live anywhere. So we want to also talk about this sort of deflationary trend that's underpinned here. You could move to a lower cost part of the country and save a lot of money that way, improve your standard of living. The idea that employers don't necessarily have to have a furnished, built-out working space for every employee is also deflationary. I mean, it allows them to save a lot of money on real estate and sort of the functions of being in the office.
Yeah, I think both of those things are true. And, it's a question of where this is going to shake out. If we look at the Conference Board survey a year ago, there are only about half of the HR leaders willing to hire remotely. Now it's nearly 90%. And the reason a year ago was that they didn't think that the productivity was going to be there. Now that we've proven it, they know the productivity is there. So, I think what's going to end up happening is you're going to have probably a fourth of the workforce. Now, we're not talking about in-service, restaurants, retail, but, office style service, that can be done in a setting. It'll be about 25% in person, probably 25% remote, and about 50% hybrid, which still allows that ability to live in low-cost areas and be deflationary. The one thing that's not deflationary is wages. We're not seeing wages. We're not seeing people then go and say, well, because I'm hybrid or because I'm remote, I'm willing to earn less. So that part is not coming.
We've seen, Ethan, a few companies where the pay structure is changing, although sometimes that's correlated to them being headquartered in really high cost parts of the country. So it's not necessarily, hey, you're going to take lower for working out of the office. It's, hey, you're going to take lower because we don't have to pay for you to work in San Francisco. So we're going to match that to whatever, the standard. I've seen companies even looking at COLAs across the cost of living averages across the country to figure out exactly what percentage they should offer people relative to maybe the home base. So, okay, we say people are getting more comfortable with it. It's getting more productive, Ethan. But I wonder, is all of this just for a specific cohort of the workforce? When you talk to younger people, older people whose kids are out of the home, they're more inclined to go mix it up with people in the office. That's a bigger draw, that socialization. Whereas those who are balancing family life with work life obviously they get plenty of so-called socialization at home.
But do remember, it's a great point, but do remember that we've been doing this, for 15 months in some cases? If you have a turnover rate, that means that percentage of your workforce has never been in an office of yours, period. So socialization for them has nothing to do with physical space. And are they more important, or are the people who've been there more? Who's more adjustable? Which way should we go? There is a degree to which socialization, onboarding, figuring out how we work together, figuring out how we network with each other, we've now got two ways of doing it. Either way is going to be a little bit bumpy. And what I find so fascinating, interesting about Steve's numbers, 50% hybrid, that's the one category of work we don't know how to do. It's going to be a very bumpy ride going forward. And I think there's going to be a lot of experimentation in the process, including, quite frankly, with these questions about compensation and how the global talent market, which we've always talked about, never really had.
Yeah.
If we actually have that remotely, it's going to change the way we have to calculate compensation.
It's true, Steve, because we've been talking for decades in this country about outsourcing and all these different things. But you now have a situation where an employer in New Jersey can hire someone in Ohio or Virginia as easily as another New Jerseyan, and the pay structures in those states may be far lower, and therefore allow the company to be more profitable simply because there's no difference in where that employee is. And you wonder if there's actually going to be some kind of regulation. I mean, why not, right? Like if they say, well, wait a minute, that's not fair.
Yeah, it's a really good question, and I think companies are struggling with it. It's interesting, though, on this generational question, because our surveys at the Conference Board pre-pandemic said that the people who wanted remote work and were most equipped for it were the millennials. During the pandemic, it turns out that the millennials were climbing the walls in these small apartments, these studio apartments, and wanted to get out. And the baby boomers were sitting in the suburbs saying, hey, I'm fine out here. And so now the surveys say it's flipped. And so the baby boomer generation is more comfortable. And you're seeing the urban flight out, which is why you're seeing some of the inflation, numbers that you were just talking about, driven by cars and everything else. But this is a change. So the question is, are they going to migrate back? Is that going to flip back again? I think it's going to, recede partially, but there is some permanence here, Kelly.
That's so fascinating. Thanks, guys, both of you, for fleshing this out today with us. Steve Odland, Ethan Bernstein. Big changes happening during the pandemic. Coming up, Wall Street reacting to the Reddit-fueled moves in yet another stock today. Despite taking a little bit of a breather, these shares are up nearly 70% since Monday. We'll tell you the name and the moves that analysts are making. As we head to break, a reminder that June is Pride Month, and all month long, CNBC is spotlighting contributors, business leaders, and our own on-air anchors and producers. Here's Kevin Flynn.
Here's my advice for the next generation. Be proud of who you are. Be true to yourself. Never be something you are not to please someone else. Your identity gives you power. Use it. Help others with it. Be fearless. Be a leader. Always stand up for what's right. Your sense of pride in yourself is going to tear down walls and build a future that's more equitable and inclusive. Go fight for it.
How can entrepreneurs reframe our future? EY has gathered the best of these unstoppables from across the globe. From education to health, sustainability to technology, they are revolutionizing the world. In South Africa, Altron is helping to unleash the next generation of digital disruptors. Ireland's Life Scientific is empowering farmers with the latest in biotechnology. From Hong Kong, Green Monday is tackling food sustainability by helping millions to go meatless on Mondays. And in the US, healthcare startup RareMed Solutions is giving hope to patients with the rarest of diseases. These are just some of our class of 2021. Discover how they can reframe your future. Find out who will win the ultimate competition for entrepreneurs, live on June 10th.
Give me the detonators.
No! You first!
You are in no position to negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Boom! Nothing can stop me!
So that's how you got into crypto?
Yeah, no. I invested with Grayscale. Bitcoin exposure straight from my brokerage account.
Okay. What happened to the guy in the roof?
Investing in Bitcoin begins with GBTC.
My husband Ben and I opened Ben's Chili Bowl the very same year that we were married. That's 1958.
The Chili Bowl really has never closed in our history. When the pandemic hit, we had to pivot, and it's been really helpful to keep people updated on Google. We wouldn't be here without our wonderful customers. We're really thankful for all of them.
We are thrilled. We finally found our dream home in the mountains.
Views are great, the air is fresh. It is bear country, though.
Hey, boo-boo, we hit the jackpot.
Bear.
Look, corn on the cob.
Ooh, chicken. Don't mind if I do.
You're hungry.
T-bone. That's what I call a smorgasbord.
At least Geico makes bundling our home and car insurance easy.
They do save us a ton of money.
We'll take the cobbler to go.
Good idea, Yogi.
Now I'm smarter than the average bear.
They're gone, Dad.
For bundling made easy, go to geico.com.
Welcome back to the exchange. Markets are off their highs. The Dow was up almost 300 points earlier, especially after that CPI report. It's up 134 right now, and it's the underperformer with a 0.3% gain. The S&P's up 0.5%. We're watching record high close here, just about this level at 42.42. The Nasdaq Composite adding more than 0.2%. In terms of some of the individual movers, we're watching the whole healthcare space as the best performing sector today and for the week. Biogen moving higher today, nearly 4%. It's up more than 50% after approval for its FDA approval for its Alzheimer's drug this week. Again, you can see the positive momentum carrying over to the session today, where even Eli Lilly is up almost 4% to a new all-time high. Elsewhere, shares of the original Bark company are higher as Jefferies initiates it with a buy and a $14 price target, citing strong subscription growth. I said, what's the original Bark company? It's BarkBox. Remember them? They began trading last week under the new name after merging with the SPAC company. They're up 20% so far this week, 5% today. And shares of GameStop are sinking despite a revenue beat and naming 2 Amazon executives as its new CEO and CFO. But the retailer didn't give guidance, leading Baird to say its turnaround plan remains a mystery. They predict a 90% decline in the stock price. GameStop is down 20% today to $241 and change. For more on the Baird call, head over to cnbc.com/pro. And crypto for retirement. Good luck at Starbucks these days and the corporate response to bad behavior. It's all coming up in rapid fire right after this.
Give me the detonators.
No! You first!
You are in no position to negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Boom! Nothing can stop me!
So that's how you got into crypto?
Yeah, no. I invested with Grayscale. Bitcoin exposure straight from my brokerage account.
Okay. What happened to the guy in the roof?
Investing in Bitcoin begins with GBTC.
You see sales forecasts based on guesses. We see a robotic system getting a firmware update, a typhoon clearing in the South China Sea. Clean energy is trending on social media, and we see a 38% increase in demand for solar panels. See how C3 AI CRM for manufacturing analyzes thousands of data sources to make hyper-accurate revenue forecasts. C3 AI. This is Enterprise AI.
This is more than just a building. It's an AI-powered investment firm with billion-dollar views.
Since the day he was born, Michael was unable to hear. Ryan's seizures kept him from driving. Until they came to us. Keck Medicine of USC. Beyond exceptional medicine.
We show you local pros in your neighborhood and price range, ready to help with pretty much anything. Download Thumbtack today.
For dogs who really, 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 really love to play, we make Super Chewer. A monthly box of tough toys, meaty chews, and all natural treats. Get free shipping today at superchewer.com.
Never forget that the floor is ultimately a supermarket, with the merchandise being stocks. Except unlike an actual supermarket, the NYSE is more of a caveat emptor institution. Buyer beware. Watch or listen live on the CNBC app.
Welcome back, everybody. Let's catch you up on several stories that should be on your radar right now. It is time for Rapid Fire. Here to break down the headlines, Kate Rogers, Bob Bassani, and Contessa Brewer all join me. Welcome, one and all. And our first topic today, cryptos could soon be heading to your retirement fund. 401k provider For Us All is teaming up with Coinbase to introduce the Alt 401k plan. Enrolled members can transfer up to 5% of their 401k balance into a secure account with exposure to a list of 50 cryptocurrencies. While the Bitcoin boom has cooled off lately, Ether and Dogecoin have still been to the moon this year. Bob Bassani, is this the single most irresponsible thing you've ever heard?
So what's an asset class? An asset class is stocks and bonds and cash. I guess you could say real estate is an asset class, commodities maybe. And what's the purpose of an asset class? It's to diversify your portfolio. That's why you have different asset classes. So, for example, how about collectibles, coins, stamps, rock posters? If they diversify your asset base, yes, okay, I consider them. So here's the problem with Bitcoin. Could it diversify as your investments? Could it serve as a diversifier? It certainly could. The problem is the volatility is so crazy that most people would advise you to stay away from it. That's why they're putting that 5% limit in there, and they're acting very paranoid about making sure people aren't going to go over that 5% limit. Personally, I would tell people to stay away from it, but I can see why people are interested in the possibility of getting more people involved in their retirement funds.
Kate Rogers, what are your thoughts?
So to Bob's last point there, getting more people and younger people in particular interested and involved with their retirement fund. I believe the company mentioned 20 and 30-year-olds, their interest in all of these alternative asset classes and Bitcoin in particular. So if it gets you more engaged with your 401k at a younger age, that could be a good deal. But the 5% guardrail does seem smart, as Bob also mentioned, considering all the volatility that's going on, as a way to kind of protect your broader 401k and all of that investing and time you're putting into it. I don't know that I'd want to risk it all on something like that.
Contessa.
Well, I think that the democratic access to vehicles for speculation ought to be available to all. Democratic access to all.
I feel like that's a stump speech or something. Like you want to.
I'm working on it.
Yeah, it's not bad, but I guess, Contessa, here's the thing. It's not like people are saying you can't invest in crypto. It's the question is whether a 401k fund should be harder to put something like that. It's not just that it's speculative, it's still so new. I mean, a lot of these are truly untested.
That's true, but they also argue that it's a hedge against inflation. And because we're watching CPI come in and we're watching the cost of things go up, if you're a young person and you're wondering how fast your money has to grow to keep up with inflation, a hedge against inflation seems like a good idea. The fact that they're capping at 5%, to Kate's point, is the way to keep things safe for the 401k managers. You know, it'll be interesting to see whether we see other big 401k platforms following suit.
Yeah, I absolutely think this is a marketing move. I wanted to pick all of your brains before we pick the brain of the company itself. We're going to be talking to them next hour during our special crypto hour, the Crypto Craze in Power Lunch today, the CEO of that 401k provider. All right, let's move along, talk about our next topic here, which is Starbucks. Kate Rogers, the Journal is reporting that it's running short on everything from syrups to oat milk, even to cups. They're actually even pausing production on some less popular items right now, concentrating on only the biggest sellers and blaming these shortages on suppliers amid the pandemic. Kate, they're saying it's just a temporary problem that varies from store to store, but I guess this is an unusual phenomenon for Starbucks because they're supposed to have the most leverage out there in the market. They should be everybody's best customer who gets all the, the stuff first off the line, right?
So, Kelly, I think there's a few different things at play here. As you mentioned, the company won't confirm specifics in terms of cake pops or cups on what specifically is being shorted across the country. But I know on my own app, I've gotten shortage notices on things like certain iced teas that I've tried to order. Oat milk, Oatly, remember they've teamed up with that company, which recently went public. There have been some shortages with that. Ongoing supply chain issues. Business is really booming at Starbucks because the country's reopening, people are going back in and they're really buying a lot there. So that's one good thing. But there are also some labor challenges in the supply chain. As you mentioned, Starbucks is huge. It should be everyone's biggest customer. But I don't think anyone is safe from the ongoing labor challenges that are being felt everywhere across the board. Starbucks isn't the only company that's brought this up. We've also heard it from places like Papa John's and their supply chain. Wingstop mentioned it with the chicken wing shortage that's been going on. So I think that this is being felt particularly hard in the restaurant industry right now, but it's really widespread and we continue to talk about it on the air.
Contessa, what are your thoughts?
Well, I think if you look at a place like Buffalo Wild Wings in Las Vegas had to post a sign saying, we're out of wings because of a wing shortage. We're going to close tonight at midnight. If you have to close early, if you can't give people the core product to what your business does, it is going to affect the bottom line. And furthermore, I think that I think some of these retailers could risk losing customers for the long haul if they go and sample other competitors across the street because of these supply chain disruptions. Yeah. I think that this is a real warning sign that this could hit the bottom line.
And Bob, I want to give you a quick word on this quickly.
The cups will return. The little ketchup things will return. Don't panic. This is a good moment to look at reusable objects. They use 7 billion cups a year. 7 billion cups a year. Reusable cups, they're allowing them back in. I think it's great. I'm not necessarily carrying around a reusable cup, but a lot of people I see walking in Starbucks have the little metal reusable cups that they have. I think it's a great idea to start looking at that. I know I'm throwing in a little point here, but it's a good moment.
As long as they're not reusing the cake pops, you know what I'm saying? I mean, you can do it with some parts of but you can't do it with everything else. Kind of speaking of the supply chain, JP Morgan left the UPS Investor Day yesterday with a little bit different impression than everybody else. They said they're impressed. They upgraded shares of UPS to overweight today, saying the new mantra of being better, not bigger, and concentrating on more lucrative deliveries should lead shares higher over time. They also like the pricing power, improving efficiency, and the dividend yield. They upped their price target to $243 a share. That's $40 above where we are now. Bob, after the shares got hammered today because people didn't like, for the most part, what they heard. So a different point of view here from JPM.
I have to say, I was totally confused on what the messaging was on this. Here's the one thing that I did take away. I'm a big dividend guy. UPS pays $4 a year right now. That's a 2% dividend. Believe it or not, that's a really good dividend. The S&P only pays 1.3%. It's terrible these days, the dividends. So they talked about the idea of perhaps going up 80 basis points, paying out more of their cash flow to the dividend. Could go to 2.8%. 2.8% dividend, believe it or not, is top 20%, top 100 in the S&P 500. You're just below the food companies, the utilities, the REITs. That could be very, very attractive to the dividend people. That's the one thing that I took away that I thought was kind of interesting.
I think some investors go, well, is that really the best use of cash? You know, you're up against Amazon, you're up against FedEx, and granted, they've been outperforming FedEx this year, Contessa, but they go, maybe you want to invest that in taking on that, you're taking on Amazon. That's a tough competitor.
But I think the real key here is pricing power. If you have figured out how to execute prices that are going to cover the costs, then that's key. And they said that the cost efficiencies that UPS is finding can drive margins higher here. I think that's worth noting. I think the price is key.
Okay, in a rebound for UPS today, as we mentioned, tough session yesterday, today adding a little bit north of 1%. And finally, a year and a half stuck at home is apparently causing some pent-up anger amongst the public, and it's now spilling into public. Fistfights over mask wearing and seats on planes, fans spitting on NBA players, a rise in hate crimes across the country. It's now forcing businesses to play babysitter to help protect their bottom lines. Contessa Brewer, what is going on?
The numbers back this up. The FAA says it has seen a marked increase in the number of instances of reported unruly passengers. We know that Southwest and American Airlines have refused to reinstitute alcohol service on the planes because of this rise. In fact, a flight attendant got her teeth knocked out by an unruly passenger. Masks at the center of some of this, but not all. For instance, Target and Walmart had to start limiting sales of Pokemon cards because of fights by grown men over getting these. Here's one in Walmart, as you can see, where they're fighting over access to these trading cards. Target has just reinstituted Pokemon, but not the sport trading cards, they say, because of the safety of their employees and their customers is paramount. We know it takes effect on the roads that last year, while driving overall was down, fatalities were way, way up because of excessive speed, because people on their phones, and because of impaired driving. And then I did talk to a psychologist about how you can change this around, because the retailers are desperate. Their frontline people are getting attacked on the basis of gender identity and their race and their disabilities. And the psychologist said there is a marked increase in bad behavior. It's because of stress and frustration leading to aggression. It's because of bad role models, that the people we admire are behaving badly, and then we see it playing out. And they say to turn it around, what you need is a lot of empathy and going back to that golden rule. So Gap, for one, and other retailers have joined in on an initiative to get customers to pledge that they will support these frontline workers and not let this bad behavior take over.
Kate Rogers?
I am appalled at all of the bad behavior. Particularly, can we just take a moment to talk about grown men fist fighting over Pokemon cards? Like, what in the world is going on? I think, personally, just in covering restaurants and small business over the last year, these frontline workers that interface with consumers have been through so much, as of their parent companies, over the last year. I think you really need to, as Contessa noted, have empathy and be patient and kind to people who have worked throughout this entire pandemic and, put their health and safety on the line. I don't know how you re-enter society and treat people like this. It's really disappointing.
Bob will give you the last word here.
Well, there's two ways to look at this. One is the incident level is still fairly small, so don't get that concerned about it. The other way to look at it, I think the right way, and I agree with Contessa, is even a small number of incidents is alarming. So the question is, did suddenly we all forget how to behave in public because of COVID, or did this actually start long before that as a result of, as Contessa noted, bad role models or really disgraceful behavior on social media in general? I tend to think it started well before that, and blaming COVID is probably not the right way to look at it. But I'm with Contessa. Better role models, calling people out on it, and empathy is definitely what we need more of.
Actually, Contessa, let's put a button on it. I'm just curious for your response to all that.
Well, I'm all for, I honestly think that when you look at the experts on this and they are gauging the bad behavior because they're seeing it increasing across industries, it's true we have a problem. They do say the pandemic, being cooped up, homeschooling kids, being sick, the frustration has exacerbated what may have been a problem even before the pandemic. So the problem is real. And the trick is, as you say, put yourself in somebody else's shoes. Would you want somebody else to tailgate you? Do you want somebody else to yell and spit at you, throw water bottles? It's just not nice.
I'm rethinking my drive-in this morning. I'm sorry, everybody. Anyway, I liked it better when all the bad behavior was just on Twitter, not in the real world. Thank you all very much today. Contessa Brewer, Kate Rogers, and our Bob Pisani. Still ahead, another analyst has changed coverage thanks to the Reddit-fueled moves in this company's stock. The name is up 70% this week, and those details are next.
That building you're trying to buy, you should 10X it. 10X is the world's largest online commercial real estate exchange, and it's fast. If I could, I'd 10X everything, like our lunch. Amazing. See it, want it, 10X it.
Nothing will stop me from blowing up this market.
I love Bitcoin! Whoa, Ross. This is my fantasy. And is your toilet seat up?
Investing in Bitcoin begins with GBTC.
Digital transformation has failed to take off because it hasn't removed the endless mundane work we all hate. Automation can solve that by taking on repetitive tasks for us. Unleash your potential. UiPath. Reboot work.
A president who promised to bring us together should not be pushing agendas that tear us apart. Our best future will not come from Washington schemes or socialist dreams. It will come from you, the American people. We are not adversaries. We are family. I am confident that our finest hour is yet to come.
The Republican National Committee is responsible for the content of this advertising.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from a resume database. Claim your $75 credit when you post your first job at Indeed.com/home.
Welcome back to The Exchange. I'm Tyler Matheson. Here's what's happening at this hour. Houston hospital workers aren't the only ones protesting mandatory COVID vaccination. Some of Maryland's biggest hospitals are also telling workers they must get their shots if they want to keep their jobs, and in some quarters it's not going over well. Tonight on the news, the growing fight over mandates and what else is being done to persuade people to get vaccinated. In Russia, health measures are being stepped up to halt a new rise in COVID infections. New confirmed cases topped 11,000 today, a level not seen since March. Russian media showing bus riders getting tickets for not wearing face masks. And in Uganda, hospitals say they are overwhelmed with COVID patients. The country's been reporting some of its highest daily cases totals of the pandemic in recent weeks. Travel restrictions have been imposed and vaccine doses have been recalled from rural areas to fight outbreaks in big cities. Kelly, I'll see you in a few minutes. Meantime, back to you.
Can't wait, Tyler. Thank you. We've got another instance of Reddit traders forcing the street's hand. Shares of Clover Health might be lower today, but they are up 70% over the past week, and that's causing Bank of America to downgrade Clover to underperform, saying their valuation is no longer supported by fundamentals. The analysts are maintaining their $10 price target. Clover's at $15. They think Clover services provide value and the company will continue to outpace the broader Medicare insurance market. But the current growth path, they say, doesn't support the current valuation. This is after Bank of America pulled coverage of GameStop and decided Bed Bath & Beyond a no rating last week. Coming up, Tesla's Plaid Plus Model S might have been canceled, but the regular Plaid is still a go and it will be unveiled tonight. The details and what it means for Elon Musk are next.
This is wealth. This is worth. That takes wealth. But this is worth. And that's actually worth more than you think. Don't open that. Wealth is important, and we can help you build it. But it's what you do with it that makes life worth living. Principal, for all it's worth.
Hey, you want to get out of here? We've got you. During Expedia Travel Week, save 20% or more on thousands of hotels. Expedia. It matters who you travel with.
If you're looking for a different type of financial partner, discover Baird. Our recognition as a great place to work means we attract top talent to give.
At Westcom Credit Union, we think your bank should be all about you all of the time. So we make it easy for you to do your banking, wherever and whenever you want. You can transfer money, check your account balance, and pay bills all online. Use our mobile app to deposit checks into your account. And through our partnership with Zelle, send money to people you trust, no matter where they bank. Open your account today at Westcom, where it's all you all the time.
Okay, so turn left. Take this right. Now pull into that parking space. Now put the car in park. Great, thanks so much. It's my lunch break.
You know you want that smoky, tangy, sweet, and spicy sauced and tossed Wingstop, where flavor gets its wings.
The entire process, every step. You want to have the best agents, but you want to get the best deal. Using Ideal Agent with both properties, I've saved over $30,000.
Our service is free, available nationwide, and there's zero obligation. Call us today or visit idealagent.com.
Welcome back. Elon Musk is set to deliver the first Plaid Model S, featuring a gussied-up interior. We'll tell you about what to expect for this unveil tonight. There's a lot riding on the event. Phil LeBeau is here with all the details for us. Phil?
Kelly, the exterior of the Tesla Model S Plaid the first delivery is taking place tonight out in Fremont, California. It's not a whole lot different than the other Tesla Model S's that are currently being sold. Where you really notice the difference? Under the hood with the battery and the acceleration, as well as in terms of the interior. 0 to 60 in under 2 seconds is what they're promising. 1,025 horsepower. You've got adequate range at a price tag of just under $130,000. And then there is the interior. Now, this is getting a fair amount of attention. They have improved it by adding, look at that, a yoke. The steering yoke will have a lot of people talking, saying, look, I feel like I'm in the cockpit flying this thing. They also have enhanced infotainment options that include karaoke. So if you were to buy one, Kelly, you could do karaoke within your Tesla Model S Plaid. As you take a look at shares of Tesla, remember, we have not seen an Elon Musk event streamed like this in some time. I think the Cybertruck might have been the last one. There might have been another one since then. These are the types of events typically that really get Tesla fans going, in part because A, they hear from Elon Musk, and B, there is always an energy at these events that no other automaker has been able to match. And we'll see if that's the case tonight when they do the delivery event for the Tesla Model S Plaid.
Sounds like a fun party, a karaoke party in the new car, Phil. But I actually wanted to ask about that steering wheel. I just assumed it was a federal requirement for them all to be round. I mean, there must literally be, hey, they have to be this many inches by this many inches and allow you to grip in this many locations. There are a lot of regulations. Could we see this come to all car models in the future?
Well, it depends. Do people want it? I mean, look, we are headed towards a future where you will theoretically see vehicles with no steering wheel, though that is a regulation that will have to be ultimately approved by federal authorities. So I wouldn't be surprised if you see an evolution when it comes to steering wheels. And I think that people are looking at this and they're saying, is it for me? Yeah, maybe for a lot of people it's not. But I think for those people who are attracted to that yoke, I think they cannot wait to get a chance to get in and drive the Plaid, because it's not just the yoke, Kelly. It's that 0 to 60 in under 2 seconds.
Yes, fair enough. Although I usually drive with my hands in that kind of lower position, but it's the turn that I can't quite wrap my head around. Maybe I'll get a chance to try it out one day. Phil, thank you so much, sir. Phil LeBeau with the latest on Tesla. That does it for us. Stick around for a very special edition of Power Lunch next, the crypto craze. We'll hear from everyone from Block Tower to former NASDAQ CEO Bob Greifeld on regulation coming to the space. We're back in just a moment.
Okay, at AT&T, everyone gets our best deals on all smartphones. Let me break it down. You got your new customers, they get our best deals. You got your existing customers, they also get our best deals. Everyone gets the deals. Questions?
Got it. But why did you use a permanent marker?
Because I want to make sure you remember. I'm gonna get a new whiteboard.
It's not complicated. Only AT&T gives new and existing customers the same great deals on all smartphones. Get up to $700 off our latest 5G smartphones.
We made USAA insurance for veterans like Martin. When a hailstorm hit, he needed his insurance to get it done right away. USAA. What you're made of, we're made for.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL Seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
America, start your engines. This is the big race. And it's no walk in the park. The hits, the walls. But we all have a team that helps us stay on track. MoneyLion, America's most powerful financial platform. Here we bank, borrow, invest, and grow. Here we roar.
Do you struggle with occasional nerve aches, weakness, or discomfort in your hands or feet?
Introducing Nervive Nerve Relief from the world's #1 selling nerve care company.
As we age, natural changes to our nerves occur, which can lead to occasional discomfort.
Nervive contains B-complex vitamins that nourish nerves, build nerve insulation, and enhance nerve communication, and alpha-lipoic acid, which relieves occasional nerve aches, weakness, and discomfort.
Live your life with less nerve discomfort with Nervive Nerve Relief.
There's interest you accrue and interests you pursue. Plans for the long term and plans for a long weekend. Assets you allocate and ones you hold tight. At Thrivent, we believe money is a tool, not a goal. And with the right guidance, you can get the financial clarity you need and live a life rich in meaning and gratitude. To learn more, text THRIVE to 444-555 or visit Thrivent.com.
Strategy at the market's crucial moments.
Let's trade the close.
We're going inside the market zone to bring you uninterrupted coverage of the final minutes of trade.
Commercial-free coverage and closing bell. Sponsored by E-Trade. Trade commission free today with no account minimums.
Good afternoon, everyone. Hello, welcome to a very special Power Lunch, the Crypto Craze. I'm Tyler Matheson along with Kelly Evans, and for the next hour, we're going to look at all sides of the growing popularity of cryptocurrencies, the risks, the opportunities. Now, most people aren't just using crypto as a currency, they're investing long term. But what about those wild swings, the volatility of crypto? And cryptos are very popular among you-know-who, criminals, including hackers demanding ransom in Bitcoin. And we're going to look at the security and the regulation that lots of people are calling for. Plus, the sudden popularity has created a new industry around mining, trading, payments, and more. And we will explore the crypto ecosystem, and it all starts right now.
Thank you very much, Tyler. Hi, everybody. I'm Kelly Evans, and we begin this hour by asking the very simple question, where and how did this all begin? How did Bitcoin go from a line of code to $1 trillion digital currency? Kate Rooney explains.
The idea for an alternative currency started 13 years ago during the financial crisis. Invented by an anonymous cryptographer using the name Satoshi Nakamoto, Bitcoin started attracting attention in online forums. By 2009, the first group of Bitcoins, known as the Genesis block, were created, and in order to trade Bitcoin, the first exchange was launched. A few months later, the first real-world transaction in Bitcoin happened. 2 pizzas, which at today's prices cost more than $300 million. Bitcoin exchange Mt. Gox put the cryptocurrency on the map, but not how some had hoped. It launched in 2010 and went through a series of hacks. It eventually shut down and filed for bankruptcy protection. Dark web marketplace Silk Road was another mark on Bitcoin's reputation. U.S. law enforcement officials shut it down after finding it facilitated transactions for guns, drugs, and other illicit goods. But around that same time, a few companies popped up that became key in Bitcoin's evolution. Crypto exchange Coinbase brought Bitcoin investing to the everyday trader, and BitPay allowed companies to start accepting crypto for goods and services. By the start of 2017, Bitcoin was trading around $1,000, and it rose to almost $20,000 by the end of that year. Much of those gains were erased in 2018 in what is now called crypto winter. In the past 3 years, Bitcoin has gained more acceptance on Wall Street, with billionaire investors including Stan Druckenmiller and Ray Dalio embracing Bitcoin as a hedge against inflation. Square, Tesla, and some other companies now hold crypto on their balance sheets. And earlier this year, the entire cryptocurrency market cap hit $2 trillion. And while Bitcoin was the first cryptocurrency, some competitors have popped up in the past decade. Bitcoin's dominance and share of the entire market has fallen in the past year thanks to some of these smaller tokens like Ethereum. Kelly and Tyler.
Are those cryptos, we got the universe of cryptos, are those cryptos increasingly going to be the ones that are used by criminals and hackers? Because, as we've seen, Bitcoin can be traced.
So all of these, in some ways, if you're trading them on an exchange, can be traced. Bitcoin has been the most popular by far, and I think therefore it has become the most popular for criminals. Although the stats recently from this year show that overall criminal activity was less than 2% of the entire market. Ransomware, though, was much higher. So much as the Bitcoin market grows, its share for sort of criminal activity has fallen, but people compare it to the early days of the internet. You know, hackers can be smart, they can be crafty, they're usually the first ones to find out about things like this. So as Bitcoin sort of matures, the idea is that it's becoming more institutionalized, safer. It is traceable, as we saw in the colonial pipeline.
And criminal or not, what all of these cryptocurrencies have in common is that they are using blockchain. Not the same blockchain, but blockchains, which are basically ledgers, correct?
Exactly. So they all use the same technology. And I learned this early on. I said, oh, the blockchain. And at a conference, someone said, no. There are issues people have talked about in recent years.
Kate, thanks so much. Kate Rooney. All righty, now to one of the aspects of the crypto universe that a lot of investors worry about. That would be the extreme volatility. And while most assets go through volatile periods, not many are influenced by forces that have no connection to the asset's actual value. In fact, tweets can result in big moves. For example, when Elon Musk announced that Tesla wouldn't accept payment in Bitcoin because of energy concerns, it triggered a double-digit drop in that crypto. There you see the tweet from Elon Musk. And yes, even emojis can move this market. Musk mentioned Bitcoin with an emoji and a meme. Yes, there's that word again, hinting at a breakup, sending Bitcoin down by 3%. So how worried should investors be about volatile swings in crypto? Anthony Pompliano is founder and partner of Pomp Investments, and Brian Kelly, founder of Brian Kelly Capital and a Fast Money contributor. Welcome to both of you, and Kelly will jump in here because I know she wants to cross-examine. Anthony, you say one of the things that you're concerned about is, quote, the U.S. dollar is guaranteed to lose value every year. That's my concern. But Bitcoin can lose half its value in a day, a week, an instant. That's my concern if I'm an investor. What do you say?
Well, Bitcoin didn't lose its value in Bitcoin terms, right? So 1 Bitcoin equals 1 Bitcoin, just like $1 equals $1. But it's all about purchasing power. That's the big difference here. And what we've seen over time is that Bitcoin's purchasing power increases. The cost of goods and services around you goes down. But if you hold dollars, the cost of goods and services around you goes up. We're seeing some of those numbers being reported here over the last couple of days. And so ultimately, when you look at Bitcoin in dollar terms, what you see is Bitcoin's up about 300% over the last 12 months. Its compound annual growth rate over the last decade is about 200%. And so volatility is not good or bad. Volatility is a thing, right? Amazon stock is volatile. Tesla stock is volatile. Every asset has volatility. It's only bad when it goes against you. And people who have been long Bitcoin over a long period of time, that volatility has worked in their favor, and they're very, very happy. They actually want more volatility to the upside. And I think that's the big difference here. Volatility is not a bad thing when it goes in your favor.
No, oh, absolutely not. When it goes in your favor. Brian, let me get your reaction to what Anthony just said and maybe narrow the questioning a little bit here. If Bitcoin's value is denominated in either dollars or euro or yuan or whatever, isn't that really the measure of whether it has purchasing power or not? How much you can use it to transact?
Right. That ultimately is the end goal of Bitcoin, is to be a full-fledged currency. We're not there yet. That's why we're seeing this volatility. I would suggest that we're probably more in the speculative commodity phase of this cycle, which we're starting to transition into the full-fledged currency phase. So what I would say to investors are, it's very, very important to size your position in cryptocurrencies and Bitcoin appropriately. Don't put in, stuff that's going to keep you up at night, but you should have exposure to this, in my opinion. And, you're going to have to stomach some volatility. If we look at the U.S. dollar in the early 1800s, that volatility was unbelievable. You would have said, hey, by the way, this is never going to be a store of value. We can't use it as a currency. But as it evolves, as it grows, and as it gets used for more things than just speculation, the volatility will die down. Guys like me will be bored with trading it, but it'll actually be a very useful asset.
But Brian, I don't think you want it to be used as money. I mean, if you held $1 in 1800, it'd be worth nothing today.
Well, right, but that's the nature of the U.S. dollar and the way that the Federal Reserve does work. The monetary policy of Bitcoin is a very different type of thing. I would like to see Bitcoin used as a currency globally. I think it would create a lot of good. It would be very efficient for companies to be able to move money around. But as a trader, as a volatility junkie, obviously I want volatility. But ultimately, for Bitcoin to succeed, the volatility does have to die down.
Either way, the IRS, Anthony, says it's property. It's not a currency, and that would have to change in this country. Otherwise, people are going to be taxed every time they use it as currency, and that just makes everything that they're buying more expensive. Let me ask you about something completely different, though, because I know you're both fundamentally bullish on the price of Bitcoin here. JP Morgan yesterday came out, said, look, it's in backwardation, hasn't been like that since 2018. That's like Kate was talking about off the top when we last saw the crypto winter. They think both Bitcoin and Ether are in this situation. Tell me why we shouldn't expect bearish trades, bearish moves, bearish price behavior for these cryptos for, a good portion of this year.
Short-term price doesn't matter. We're talking about the greatest wealth transfer in history. We're literally watching everyone from individuals to corporations to financial institutions to now countries decide that they want a transparent, programmatic, certain monetary policy. It flies in the face of the existing system. We don't know what the next thing that's going to happen in the existing system is, and therefore that uncertainty leads to fear. And so what ultimately happens is that you are seeing people around the world, over 100 million individuals, now all the way up to countries, say, we need something that has certainty in the monetary policy. And when you have a fixed supply asset and there is ever increasing demand, and over long periods of time, more and more people, companies, corporations, financial institutions, and countries come in and start to adopt it, the US dollar price has to go up to accommodate everyone. It's the only thing that can happen if you believe in supply and demand economics.
Let me get your final thought here, and I'll bring Brian back in as well. Anthony, you just mentioned something that's very key here. There's fear. There's fear, and you ascribe the fear to the concern about what monetary policy is going to be. But my guess is that there is also fear on behalf of the central bankers who govern monetary policy, on behalf of treasury secretaries or finance secretaries who are concerned that crypto is a threat to the traditional monetary system, and therefore they will step in to try and regulate it or do away with it. What do you say?
The Bitcoin is one of the most regulated currencies in the United States today, right? It is harder to start a Bitcoin company in the state of New York than it is to start a traditional financial company. You actually have to get more licenses. You have to get more regulation approvals to start that Bitcoin company rather than a traditional financial company. Also, on top of that, we already described, it's taxed more aggressively than any other currency in the United States. If I want to go spend Bitcoin, I have to pay capital gains tax to actually spend it, yet people are still adopting it. And so I think that's ultimately what people should be paying attention to here. Despite all of the obstacles, all of the friction, people still want this. I don't think it's going away anytime soon.
Brian, are governments likely to quash crypto?
Well, they haven't yet, and what we've seen really is a move towards, thoughtful regulation. And if you look at what's happened here in the U.S., I mean, they could have squashed it a long time ago, and they haven't. And I think that's because part of this isn't just about, hey, let's, a currency innovation. There is actually a lot of stuff being built on it, Tyler, as you guys mentioned in the beginning, on these smart contracts, stuff like decentralized finance. This is a pretty big industry right now. So I think thoughtful regulation is where we're going to. We do have regulation. I'm an SEC registered investment advisor. I have to comply with all those rules. So the idea that Bitcoin is unregulated is really a misnomer. It is regulated. That being said, I certainly understand why central bankers might get concerned.
Right.
And I'll give you breaking news. Turkeys don't like Thanksgiving either.
Fair enough. Anthony Pompliano, Brian Kelly, thank you very much. And I am very grateful that I didn't say quash crypto, okay? I said it right. All right, thanks, guys.
Thank you both. Coming up, we look at another big threat, regulation. Too much? Is it the wrong kind? Plus, security concerns as hackers continue to demand payment in Bitcoin. But it's not all bad. We're also going to look at the opportunities this new industry has created. Our Power Lunch Crypto Craze special continues after this.
Jason, did you know Geico could save you hundreds on car insurance and a whole lot more?
Cool.
So what are you waiting for? Michaela Maroney to get your Frisbee off the roof?
I'll get it.
Whoa.
Here you go.
Thank you, Michaela.
Dude, get it. I'm not getting it. You get it. You threw it. It's your Frisbee.
Geico. Switch today and see all the ways you could save.
Interested in Ethereum? Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more about Grayscale Ethereum Trust at grayscale.com.
Stop the madness.
There's only one Mr. Wonderful.
You are going to get crushed.
And only one Shark Tank.
And that is how you do a deal.
Shark Tank. Tonight's
additional crypto to avoid us from selling your collateral. Or if the price moves down and you don't post additional crypto, we can actually sell a portion of the Bitcoin that guarantees the loan and lower your loan's LTV. So therefore, there's never a default on the loan.
It's a good answer because the question harks back a little bit to the housing bubble that predated the 2007 great financial crisis. Back then, people took money out of their homes because home prices had never fallen in value. They wanted to tap that equity because prices kept going up. It was unusual when home prices finally did decline. It tanked the whole economy. In this case, obviously, Bitcoin's much smaller than housing was, but it's also much more volatile. So we're now entering an environment the past few months where I guess you're probably getting a little bit of a test of this model, right?
Yes, and we've been tested multiple times. We've been lending since 2018. So as you recall, in March of last year, the crypto markets fell overnight 50%. And we were actively lending at that time as we were in the most recent dip in May. And the nice thing is that most of our retail users are actually quite used to the volatility. So people actually have some Bitcoin stored in the BlockFi interest account, which allows them to easily sweep assets to meet any margin calls on those loans. But we're well tenured when it comes to volatility. And actually, May was one of the strongest months in terms of performance in BlockFi's history, despite Bitcoin being down 36%.
Flory, what's the interest rate on these loans and how is it determined?
So the interest rate is based on our cost of capital. So basically, what is the US dollar availability on the balance sheet? And then what we look to do is lend it out at rates that start in the 10 to 11%, and they actually go all the way down to 4.5%. And the way that it works is the more collateral you post to guarantee the loan, the lower your interest rate. And what I love about this product, as we talk about global inequality, is the fact that the US dollar lending product is actually available overseas. So for example, we have clients in Costa Rica who can access 4.5% US dollar interest rates, which if you compare it to other products that's available to clients in that country, it usually costs around 20 to 25% to borrow US dollars. So the thing I love about our platform is that we really focus on one price for all, regardless of your country, demographic, or where you are in the world. And that's all enabled by crypto.
Quick question, quick answer. We've been talking earlier this hour about know your customer rules. Do you know your customers?
Absolutely. The first hire that we made at BlockFi 4 years ago was our chief compliance officer. And I truly believe that if you're going to build financial products, you need to pay attention to regulations, not only what they are today, but what they could be in the future, especially for a new asset class like crypto. So we have best BSA and AML policies, and we've had that since the beginning. Many companies try to add compliance on later on in their history. And the thing that we did at BlockFi was build it right from the beginning.
Flory, more of an observation, I guess, but you guys potentially face a cascading effect where the more that, like you said, if people have to post more crypto, if you have to take crypto in order to make these, let's call it margin calls, it could force downward pressure on the price of crypto. So if we get into a situation where, let's say your customer has an average price point that the crypto sinks below, does that cause a cascading selling effect? And do you do anything to try to offset that?
Absolutely. So we do have a risk model in place that tries to prevent us from one-off client liquidation. So we look at the portfolio risk in general to avoid that. It is true that any downward price movement is going to take leverage out of the crypto or Bitcoin price in general, which ultimately you could argue, talking about 2007 and 2008, less leverage in the price is actually healthier for the market in the long term.
Yeah, no, absolutely. Flory, thanks for your time today. Flory Marquez of BlockFi, she said.
All right, fantastic. Let's stay with the investment theme for now. This week, Block Tower announced the acquisition of another crypto-focused firm, Gamma Point Capital, in an effort to offer what they call market-neutral crypto investments. In the past few years, we've seen acquisitions of at least $100 million in the crypto space as companies like Coinbase and Binance try to keep their edge. As the industry continues to grow, will we see even more and bigger deals? My guess is yes. Matthew Getz is CEO and co-founder of Block Tower Capital, and he joins us now. Matthew, there are a lot of names in this field that are not familiar to us. They're not exactly Goldman Sachs or J.P. Morgan, but they're out there. And I have to guess that over time, some of these companies, whether it's Coinbase or others, are going to become as familiar to us and as profitable, perhaps, as some of those other names I mentioned?
Yeah, I think you're hitting the nail on the head. Good to be with you guys. I mean, when I left Goldman Sachs 4 years ago now, that was kind of the thesis, and we're seeing that playing out. We're seeing these companies go more mainstream. We're seeing more capital markets activity. We're seeing their names pop up in large rounds of financing or SPAC talk or whatever it might be. And I think that's only going to continue to ramp up across all the categories, not only kind of in the asset management investment fund part of the world where we live, but you're seeing it, as you mentioned, in custody, in lending with BlockFi, in all of these different segments of the market.
And obviously, new generation of millionaires will be minted as a result of that. Do you see this pyramid of investment narrowing over the next decade or so that there are not more, but ultimately fewer dominant players, and that consolidation and getting out of the initial positions that entrepreneurs have is going to be the dominant theme here?
100%. I was just going to use that same word, consolidation. You've already seen it in some parts of the market in a more pronounced way than others. So like the exchanges, for example, it was rampant, 3-4 years ago in the last crypto bull market. There was a new exchange popping up every day, whether it was in the US or outside of the US. And the most obvious thing in the world was going to say, that's going to consolidate, and lo and behold, it has. And you've had certain players gain more share. You've had others who kind of built on that success, like Coinbase, tap the public markets. So I think you're going to start to see a pattern follow, where whether it's in data analytics providers or people who evaluate blockchain data, who help people like the government agencies track and triangulate where cryptocurrencies are moving, or lending platforms, or in our world, in investment funds, there's a lot of talent that comes from non-obvious places. This isn't, the HBSs of the world churning out equity research analysts and investment bankers. The people who truly understand crypto and who know it fundamentally and know how to think about the markets, the market structure, and investing, they come from kind of less traditional paths, and it's our job to find them, which is why we did the acquisition.
Let me sneak in one more question before Kelly jumps in here. Is it, I don't mean to overstate this, but is it going to take a big company like a JP Morgan, a Goldman, a Bank of America to come in and buy one of these exchanges, one of these central players, to, quote, legitimize the market in a way that perhaps right now the market feels kind of fuzzy and a little bit sketchy, a little bit da-da-da-da-da. And you say you left Goldman. Are they embracing this?
Yeah, they are. I mean, I've been back to Goldman Sachs 15 times since I left, helping them across kind of all their parts of the business think about this space and kind of educate them on it. And they've started. They've launched a trading desk, and things are happening. And each of these traditional players that you mentioned, they're at different kind of like legs of the horse race, if you will. So I think two things are going to happen. One, you're exactly right. There is going to be that legitimizing rubber stamp where, State Street acquires
somebody
Gemini
comes in. Yeah.
But at the same time, there's going to be enduring franchises that are built, like Coinbase, that supplant or leapfrog some of these traditional players, because they know how to build the tech, the engineering that interfaces and interacts with this new market and this new technology.
Matthew, my question was simply going to be, what is it that your hedge fund does primarily? Where are the opportunities across the entire crypto space? Is it arbitrage, but in the futures market, for instance, we mentioned at the top of the hour, the backwardation that's going on right there, which many take as a bearish sign. Is it traditional kind of long short sort of stuff? I mean, is it quote unquote stock picking and kind of knowing which crypto might come out of a tough patch as the one that has the most momentum behind it?
Yeah, I mean, that's really, you put it really well, because there's so many opportunities. So particularly 4 years ago when we launched, it was, okay, how best do we capture this full opportunity set while navigating everything that's evolving and managing the risks? And it was really a combination of thinking about a lot of different investment strategies and applying them in a professional sense, depending on what kind of market regime are we in. Are we in a hyperbolic bull market? Are we in sort of a sideways, neutral, choppy market? Are we in a bear market? And how best to compound wealth, preserve capital, and capture opportunities in those regimes. This most recent acquisition, I think, speaks well to your point, because one thing that I think is really important and is a function of how this market has matured and institutionalized over the last 4 years is because the market structure now exists where there are very attractive market neutral opportunities. So these are strategies that they're agnostic as to whether the underlying market, Bitcoin, Ethereum, crypto, is going up or down, zigging or zagging. These are strategies that are seeking to profit regardless of what part of the cycle you're in. And there's some institutions and investors who don't necessarily want that. I'm not saying everyone's been waiting for that. There are some who've said, we believe in the technology, we think it's going to be valuable over the long term, and we're willing to ride the waves and the roller coaster to get there. But not everybody, right? Particularly if you're a large organization with a board and a committee and governance.
Right. You might want arbitrage. You might say, I don't want exposure to crypto. I want you guys to arbitrage what's going on between Bitcoin and Ether or the futures or whatever it is for me, and I'll just take that alpha. We got to go, Matthew.
Exactly.
So describe to me, what are we in? Are we in a bear market for crypto?
So we're not. We are still solidly, in my view, solidly in a kind of structural bull market. The recent volatility is par for the course. It's easy to garner a lot of attention, but the reality is, with an asset that has the vol of Bitcoin and crypto, it's totally normal even within the context of a bull market. So I offer this very humbly. I don't know if we've got 6 months to go or 12 or 18 months, but I think we're in something like the bottom of the 7th inning of this crypto bull market. And part of the reason something like market neutral is important is because when and if those cycles come, if you can continue to compound wealth, the nature of compounding is very powerful. You guys know that better than most people I talk to.
Yeah, we try.
All right, Matthew, thank you very much. We appreciate your time. We'll have you back.
Yeah.
Kelly, what I was thinking about there was my little world of investing. I've invested largely in mutual funds. My mutual funds may not make money, but the company always makes money.
Yeah.
The mutual fund company always makes money. And I wonder in crypto whether that is going to be one of the lessons, one of the stories, is that individual owners of the asset may not make as much money as the providers and the infrastructure players and so forth.
Here's a question I'll pose to you. There's been nothing but fee compression across the traditional asset management and investment space. If you're in crypto, do you actually capture more fees? And if so, that's how you're making the money. My guess is somebody who's doing a crypto hedge fund probably has a better fee structure than a traditional one. Just a guess.
Fascinating stuff.
We'll ask him. After the break, we'll take a deeper dive into the crypto ecosystem, the whole ecosystem. We'll talk about the process behind mining Bitcoin. We'll talk about the environmental costs, which are getting more and more scrutiny. Stay with us. We're back in a moment.
So we see a lot of red today. We saw Wish here hitting a low of around 10.20. Trying to rally back up. It went back up about almost $1 and not cooling off for the rest of the day. So it's 1 day away from Friday's expiration. I feel like right now markets are just setting up. This is consolidation. So now we have a full day of consolidation. Most stocks are slightly lower or flat. So I feel like tomorrow is going to be a better day. If tomorrow continues to consolidate, then we need to wait for the following week. But Clover Health here slowly just continuing to melt away. It still needs about another like $3 for it to go back to the gap fill. Wendy's basically gave away those gains. It's almost back to its trading range. It's about $1 away, $1.20 away from its normal price point. AMC going below 50 here, making new lows in the past 3-4 days. So now we're a little bit lower. This is lower lows. Also GameStop going down to 222.90. And let's look at the daily here. So on the daily, GameStop is breaking down below my 10-day moving average. And now it's looking a little weaker at this area. Sundial also giving up the gains here. It's at 106, still higher. Overall, the stocks are higher from 2 weeks ago when they started to run. So they're still up there. Workhorse here squeezing. It's still at $15. This held pretty strong. It's here holding above $15. That looks pretty good. And Go EV here pulling back. 950, coming back down to its 10-day moving average trading range. I also saw, I don't know if you guys saw, I had up MUX. This is a gold mining company. We see a lot of options activity for November. We see options activity for MUX, MUX. It's a gold mining company. It's currently at 160. We saw it do a nice run today from about 146 to 160. And if you continue to see the days pass, it's trending up right now. For the past 2 months, it's up about 60 cents from $1.
Crypto craze special, and now we turn our attention to Bitcoin mining. That's the process of unlocking new tokens at 36,000 per coin. You know this process can be very lucrative if you get one. It's given rise to crypto miners such as Riot Blockchain and Marathon Digital, which are publicly traded, and Cypher Mining, which plans to go public via SPAC in the coming weeks. But the digital gold rush has raised some red flags about the impact to the environment. China is even threatening to crack down on mining operations. And joining us to discuss this and cyber mining generally is CEO Tyler Page. Tyler, welcome. Good to have you with us.
Thanks for having me. A lot of Tylers in here.
Yeah, a lot of Tylers, but that's a good thing, right? I want to, just for people to play a little bit of catch up here, what does it mean to mine a Bitcoin? We understand that there are a fixed number of these Bitcoins that exist as part of an algorithm, I suppose. How do you mine it? What does that mean? And if you find one, what do you get?
Yeah, so good question. So it's really a pretty straightforward business. We operate data centers. And so it looks very similar to other more traditional data center businesses. The difference is we have our computers effectively sell their output to the Bitcoin network. We provide that infrastructure and validate transactions. And we are rewarded by doing that through the Bitcoin software with both newly minted Bitcoins as well as transaction fees. But from a business perspective, it's very similar. It's just that we're compensated in Bitcoins.
Yeah, we're sitting here in a set with the images of coins all around us, gold coins. I mean, where they can take a shot of it. There is no such thing as a Bitcoin physical like you're seeing behind me now. It is all a destination on some ledger. Is that right? And why the hell does it take so much energy to mine one?
Well, what I'd say is it's a natively digital asset, and it's truly a global open source network to transmit and store value. And that's a real breakthrough with all kinds of repercussions that frankly can be really good for humanity. The way that ledger and that network is protected and made secure is through the process of mining. And that does use energy to conduct the business. It's very similar to other industries that use a lot of power to protect their industries. I mean, if you think about it this way, it's a disruptive technology. And the incumbent technologies are the financial services industry, gold mining. There are others. They all use lots of power, and so does Bitcoin mining.
Tyler, here's my question. As each marginal Bitcoin requires more energy to mine, we're seeing people bring coal plants back online, try to make them more renewable. They're employing people. They're using these massive energy centers. I mean, Niagara Falls could be next at this rate. What's it going to take to get to 21 million Bitcoin? How much energy and mining are we talking?
Well, I think there's an important nuance in this debate, and it's really great that it's now happening at the highest levels because I think it's an important milepost on the way to Bitcoin acceptance and broader use of the network. But I think there's an important nuance everyone needs to understand, that there's a difference between the amount of power used and the environmental impact of that power. And I think here is where the Bitcoin mining industry specifically has a really good story to tell. It generally has a higher penetration through the use of renewables, like you suggest, than other industries. It has more renewables use on a percentage basis than the US power grid. And so as we look forward and think about ESG priorities across the whole world, this is an industry that actually has a good story to tell on the use of renewables and green power. And furthermore, unlike other uses of power that need to be located near population centers and therefore limit the use of renewables, Bitcoin mining is mobile. So it can go to the waterfall.
From one Tyler to another, thanks. Tyler Page, we appreciate your time.
Thank you so much.
And still ahead, before we finish out our special, our final thoughts, some key lessons from today on this crypto craze.
So I just threw in Cleveland Cliffs, CLF. This one's also been on a tear lately. Cleveland Cliffs here pulling back. Went higher today, so still slightly on the green amongst all these red stocks, but pretty much flat in comparison to yesterday. And then UWMC also seeing some opportunity here. Mortgage company also pulling back here. UWMC along with Rocket companies. So another mortgage company. So pulling back just like the rest of the market. So the volume today on Wish is 84 million shares traded with an average of 77 million shares traded in the past 10 days. So slightly higher than average, but nothing explosive. And we can see here the bars down here on the 5-minute chart. It's a lot less. We see a lot less volume here comparison to yesterday. Very slow moves.
You know, Kelly, as we wrap up this special hour, and I've really enjoyed it, I've learned a lot.
Same.
We look here at the chart of Bitcoin over this year. We began the year at roughly 30,000. It wasn't much before that it was in the 20, 15,000, and it went up to 60,000. Close your eyes and wake up in April and you're at 60,000. Now you're back at 36,000. The volatility of this asset is still the worrisome part, I think. The other thing that I thought was interesting, it's going to be very interesting to see which of the major institutions in finance becomes the first to totally embrace it, to go out and buy the asset, but can also be a risk mitigation technique, I suppose.
Evidently.
Been a fun hour.
So
Enjoyed
much
it.
fun. Thanks for tuning in, everybody.
And thanks for watching Power Lunch. Closing bell starts right now.
It certainly does. Thank you, Tyler. And Kelly, welcome to the Closing Bell, everyone. I'm Wilfred Frost, along with Morgan Brennan today, who's in for Sarah Eisen. Stocks shaking off the rising inflation situation, moving higher in today's session, though off their best levels as we head into the final hour of trade. Let's have a look at what is driving the action today. May consumer prices rose at the fastest pace since the Great Recession, up 5% year over year, with an outsized jump for used car prices and plane tickets. Meantime, jobless claims continue to head in the right direction, hitting a pandemic-era low last week of 376,000. And the meme trade is cooling off following GameStop's earnings and executive shakeups. That name down double digit. AMC, Clover Health, Workhouse, and others are pulling back as well. 59 minutes left to go, and you guessed it, we're on record close watch once again for the S&P 500.
We sure are. Well, coming up on today's show, Liz Ann Saunders from Charles Schwab joins us with what today's inflation data means for the market and for your money. Plus, diamond hands for jewelry investors. Get it? Shares of Signet are popping today after the company reported a blowout quarter. We're going to speak with the CEO about those numbers and a big shift in consumer spending that the company is predicting for the back half of the year. And we're going in the heights. That's right. Director John Chu joins us to talk about taking Lin-Manuel Miranda's Tony Award-winning musical to the big screen. We got a big 2 hours ahead. You don't want to miss it. But let's focus in on the big stories we're watching today. Steve Leisman has more on today's red-hot inflation reading, and Mike Santoli has a look at the market response. But Steve, kick it off for us.
Thanks, Morgan. Yeah, a blockbuster inflation number that investors seem to think is either peaking or has already peaked, but providing details that do fuel the debate about whether this price surge is temporary or maybe something more lasting. Here are the numbers: up 5% year on year, highest since 2008. Ex food and energy up 3.8, highest since 1992. Month over month, these are big numbers, 0.6 and 0.7 ex energy. Looking at the details, used cars up 7.3%. Airline fares up 7%. Let me tell you, they're 6% below where they were before the pandemic, so maybe more room to run. Natural gas utilities up 1.7%, apparel and food. It doesn't look like much in context, but that's still a lot for food to rise, 0.4%. The hot take from economists shows there's a robust debate about whether this is all going to go away in the months ahead or if high inflation numbers are here to stay. HFE Rubila Faruqi says, quote, the pace should stabilize and moderate as reopening effects fade and once supply catches up. That's not the view at Morgan Stanley, where Ellen Zentner writes, the more persistent components like rents and OER, that's owner equivalent rent, firmed up as well much more than expected, pointing to a firmer source of foundation for the inflation data as the transitory factors begin to fall out of the figures. And Ian Shepardson with the best line of the day from Pantheon saying, the Fed better be right about bottlenecks. If it isn't, the risk is a speedier turnaround in policy that is now baked into expectations. Wilf, Morgan?
Well, I guess, Steve, my question is not just a speedier turnaround might be necessary, but even say if this is transitory, the question is how big a tightening you're going to need if it's not, to put it that way round. I mean, these last 2 months are so pronounced in terms of the size. 5% expectation was 4.6%, that if they're wrong, they're going to be painfully, painfully wrong.
I think you're asking the right question, Wolf, and the medicine is relative to the problem that's out there. So you can probably say the problem the Fed doesn't have to deal with is 5%. Some of that's going to go away just because of the base effect. The most pessimistic people I talk to would say what's going to linger around is something above 3% if it stays around. So I don't know how much you need, but it wouldn't take, I would think, a huge amount of tightening if you had sustained inflation above 3%. But remember, at the moment, Fed policy is to aim for inflation above its 2% target. So at least for some time, it's not going to see that as a problem and address it at all, Wilf.
Steve, thanks so much for that. Much appreciated as always. Let's bring in Mike Santoli for a look at what it all means for the market, Mike, which somehow is not very much.
Yeah, pretty unfazed, really, investors are with that number. It could be that sometimes when there's so much outsized focus on an individual data release, just getting it behind us and making sure that other people are not panicked about it means you can kind of release the market toward the probing the upper end of this range. Now, we are at a record high right now. It's absolutely not escape velocity. You have a lot of stocks that are down, offsetting the strong ones. Actually, it's the deflationary sectors that are working right now, things like software, not like energy at the moment. So you see 42.38 was the prior intraday high May 9th. Here we are, 42.39 at the moment. So sure, it looks like either we're just going to the top of that box right there or it's about to break through. I think sentiment has moderated, but it's not as if there's a lot of energy that's necessarily built up to the upside. That's why we're sort of waffling a little bit. Certainly not a bearish picture, but one that's not necessarily persuading you that it's up and away from here. Globally, let's take a look here. Europe, we've pointed to a couple of times as being an outperformer very recently. And in fact, at the ECB meeting this morning, they're going to keep doing QE. And you see the Eurostock 600 has pulled ahead on a on a year-to-date basis here against the S&P 500. Although EFA, this is more developed markets, has actually turned the other way. Things like Hong Kong and Latin America have actually had a little bit of a rough patch more recently. Take a look at something called the Rule of 20. It's an old Wall Street rule of thumb that says that the PE multiple of the S&P plus CPI inflation It should be about 20 if the market is fairly valued. There's no real precision to this. It was very much a broad rule, but as you see, it doesn't spend a lot of time at 20. But for the most part, 20 has been the separation between what you might call an expensive market and an undervalued market. We were mostly below that threshold for the bull market that came after the great financial crisis, obviously the late 90s, way above it for a couple of years. Obviously, if there's upside persistence to the CPI, people who think in this mode will say, you know, we're going to have to pay less for each dollar of earnings, even though companies do benefit from higher nominal growth, from pricing power, and things like that. So something to keep an eye on, another way that it filters into equities, guys.
Yeah, the 2020 vision. I like the little title there on that chart. Mike, just to go back to the deflationary sectors and the fact that some of these growth names, for example, have been working in recent days again. I mean, we've certainly been getting that commentary about the rotation back into growth from a number of investors and high-profile portfolio managers. Does it speak to the maybe perhaps emerging debate that peak inflation is already priced into this market?
It certainly speaks to that, Morgan, and actually yields have been the beacon when it comes to the value versus growth equation. When yields were rising, that was the clearance for value to accelerate higher against growth. Since yields have been capped and now that they've trended lower, you've had more of a bid in growth. I don't think it's necessarily about the old growth leaders are really going to reassert their dominance again. It doesn't necessarily seem, but we're in a 3 to 5 or 6% pullback in things like consumer discretionary, industrials, transport. So obviously the market is kind of not quite sure where the incremental dollar should be going in that context. I also want to draw a quick distinction. The big NASDAQ stocks, I view them as more quality and stability as opposed to just pure growth. So that sometimes swings the indexes around too.
Mike, thanks so much for that. As always, we are up, 0.5% on the S&P, still a couple of points away from where we need to be to have a record closing high. After the break, Apple unveiling changes to restrict companies from tracking user data at this week's developers conference. And that could have major impact on the digital ad market. We'll discuss with longtime advertising executive Sir Martin Sorrell. That's next. You're watching Closing Bell on CNBC.
Hey, chicken stock. Yeah, it's setting up right now. Wish is consolidating, and we could have another snooze fest tomorrow. Continue to consolidate, but on the positive note, it's holding above $10. So this is very bullish. It just there's no telling exactly when it's going to break out of here and go back up to like 15. I drew the support line here on the 5-minute chart. And you can see here it's been respecting. Well, I mean, I'm drawing it based on the activity. It's making lower highs, and the lows are stabilizing. So we're getting this consolidation. It's condensing here, and this is going to make a move once it gets out of this range. We're going to see a move either higher or lower, but it's holding above $10 very nicely. So I'm a little bit more optimistic. We have about 50 more minutes before the close, and yeah, I have long-term options on it, so I'm just holding it, and yeah, very optimistic for this to hit 20 plus sometime this year for sure. I mean, I'm giving it this year, but the way things move, it could be next week. So let's see what else is going on here. Clover Health. I mean, it's a red day. It's a red day. AMC making lower lows. This is a little concerning here. But it's hovering around $50 plus or minus $5. And as long as it stays there, it's a good sign. But yeah, this is the lowest it's been in the past about 5 days. Also, if we look at the 10-year bond, big snooze fest. Nothing happened. Sometimes this is concerning as well. When you get bad numbers and the market doesn't react to it, you'll see a reaction out of the market like 2-3 days later. So just because right now bonds are down and the market's doing nothing in comparison to that, the S&P 500 is still all-time highs, basically. Let's take a look here. Let's take a look at the daily here. Holding strong here, basically at all-time highs right now, S&P 500. So it's a little tricky right now. It's tricky.
We are in fact set for a record closing high on the S&P 500 if we stay here, up 0.5% with 50 minutes left in the session. Apple's new privacy features are causing worry among some advertisers. Ad tech firms telling the Wall Street Journal the features could vastly damage the advertising industry and make it hard to know if their ads are actually being effective. Despite concerns, digital advertising and marketing services company S4 Capital still feeling bullish on the industry. The company boosting its Q2 net revenue guidance this week to 35% from last month's forecast of 30%. Joining us now in a Closing Bell exclusive, Sir Martin Sorrell, founder and executive chairman of S4 Capital. Sir Martin, very good afternoon to you. Thanks for joining us.
Good evening from London, Wilfred.
Indeed, indeed. So let's hit this Apple change in policy, on privacy policy first, if we can, Sir Martin. I mean, is that something that concerns you as an ad executive, that it's going to change all those gains that you've made in the last decade by getting more data on people?
No, I think if you look at, if there was a marketing industry VIX index, which there isn't, but if there was, the sort of things we've seen, not just what you're referring to in relation to Apple today, in relation to IDs, but also in relation to IDFA before, and Google's decision to deprecate, if that's the right word, third-party cookies. All of that adds to the uncertainty surrounding advertising and marketing, and actually makes the sort of things that we do. We're not an ad tech or martech firm. We're not dependent on one technology or the other. What we do is gauge the relative importance of all. And if you look at the underlying growth, if you look at Q1, for example, this year, you see Google moving from probably about 180 billion to 240 billion in terms of ad revenues this year. Facebook about 80 to 110. Amazon maybe 20, run rate to 35. That's an extra 100 billion that would be pumped into digital advertising this year on the back of the pandemic, driven by the GDP rebound that you've been talking about a few minutes ago. I mean, 5 to 6% this year in the world, and 4 to 5% the forecast for next year. These are unprecedented 2 years. I have to go back to the 1980s when we had far greater inflation, so the real rate of GDP growth was much lower. Mm-hmm. So there are two things driving S4 in our industry. One is digital transformation, the secular trend. The other is the bounce back in GDP from the post-pandemic, or the pandemic levels.
We'll get into some more micro stuff in a moment, Sir Martin. On the macro front, G7 meeting kicking off over the next couple of days. It's expected that President Biden's going to try and corral more support from other world leaders to join him in a tougher stance on China. What is your view on that at the moment as to whether that's the right move? Is it likely to go down that route, or do you think we will see easier tensions in due course?
Well, as you talk to somebody who's trying to build a global company, we have, 5,500 people in 31 countries. We started really 2 3/4 years ago. And market cap now is just under $5 billion. I mean, China for us is a really important market. It will be the largest market in the world by, 2028. Maybe that makes certain countries in the West uncomfortable, but the facts of life are it will be the biggest. Not on a per capita basis, but bigger. I do worry about climate change. I do worry about diversity and inclusion and equity. I do worry about Brexit. I do worry about the pandemic. I do worry about inequality. But, what top of the worries, I think, or close to the top, if not the top, is US-China relations. And finding a way where we can constructively coexist instead of what is effectively a Cold War I think, is a key issue. So, I mean, I saw a squib today about the first trade negotiations between the Chinese and the new American administration, Biden administration, and it was slightly positive. Maybe there's some things happening. A lot of this is for public consumption because not nobody, but U.S. business, when it started with President Obama, developed with President Trump, and has continued so far under President Biden, I don't think the U.S. business community was troubled by it until the friction started to hit their businesses in what is currently the second largest market in the world, but we will be the largest. So finding, I think it was Hank Paulson's speech, 2 years ago in Singapore, which referred to the Cold War, finding a solution, a constructive solution between the U.S. and China is key. If you
just wanted to talk over this. I just got an alert earlier. Someone's buying this dip on IAA. They're buying October contracts. They're doing a spread. It looks like a call spread. They're buying the 55, selling the 60s. So they're doing a call spread here on IAA on this massive dip. So that's something to think about. It's a longer term play, and they're playing it with the spreads.
Such as yours can actually yield data to continue to target consumers and the like in a very specific way?
Well, all the changes that have taken place result in certainly uncertainty in the short term, but two medium to long-term trends. Firstly, the growing importance of first-party data. This is consented consumer data that clients own. There's a lot of confusion, with all due respect, in the media and amongst analysts, as we had an analyst call today, and there's a lot of confusion about what first-party data is. Let's be under no misapprehension. First-party data is client-owned data which consumers have consented to. So that's one sort of bucket. The other bucket is the signals you can get from the platforms. So everything that has happened to date, and I think also in the context of the Apple changes or proposed changes today, will drive our clients somewhat reluctantly, I have to say, if I listen to them over the last sort of 18 months, because Google's decision to deprecate and eliminate third-party cookies actually was made in January of 2020 before the pandemic. And clients were starting to talk then about what they had to do to develop their first-party data sources, pull data, the data lakes as they're called, make sure they flowed into one another, whatever the right analogy, in a constructive and effective way, and use the signals from the platforms in the West, Google, Facebook, Amazon, in the East, Alibaba, Tencent, and TikTok. Ensure that you use the signals in an effective way. So all this does, and ironically, is force our clients, to make sure that their data is pooled in the most effective way and their systems work. Because a lot of these companies, a lot of our clients have grown organically without common systems, or they've grown through acquisition where they've acquired different systems. So it means a lot of re-education and reformulation and retabulation of data into coherent form and then using the signals. So it drives it back to the platforms, ironically. So what you're going to see is a strengthening of those platforms, the big six being the key ones. Twitter, Pinterest, Snap are all important. We have important relationships with them and work with them. But in terms of size, I mean, Snap last year was, $2.5 billion of ad revenues? Even if it grows at 50% per annum in accordance with the Capital Markets Day, it will still be relatively less than the figures that I gave you in relation to Google, Facebook, and Amazon.
Sir Martin, great to see you. Thanks so much for stopping by.
Thank you, Wilfred. Thank you, Morgan.
Sir Martin Sorrell of S4 Capital there.
Well, up next, you may have to alter your go-to Starbucks order soon as the company faces a shortage of some key products. We're going to tell you what's behind that supply crunch next. And as we head to break, check out some of today's top searched tickers on CNBC.com. The 10-year yield is back on top, followed by, perhaps not surprisingly, AMC, GameStop, Clover Health, and clean energy fuels, the so-called meme stocks. We'll be right back.
APXT here popping up, huh? Little pop. I'm gonna see here. Let's see if there's some trending stocks right now. Let's see here. Let's see what is trending. HTBX. I'm sure we're super late on this one. HTBX getting squeezed today very nicely here. It's at 650-ish, going up all the way to 950 and cooling off now. This is Heat Biologics. This is trending right now. Let's see what else do we have here. CMMB. CMMB. This one's trending right now. Not much of a move today, but it's been it's up there. I mean, it's a 9% move more or less. 8.29. CMMB, another ticker symbol. SITH is another one. Let's see what that's doing. SITH popping up here to around $13 from $9. Big move, $4 move right now. And it's coming back down 1077. This is ticker symbol CYTH, Cyclotherapeutics. Sorry about that. ORPH. I don't know what the hell happened with this one. This one just went from $5 to $56. ORPH. Wow, this is just bananas. 1,000%, over 1,000%. And is there any news for this? Let me look this one up. ORPH. ORPH stock. I don't see any news. I don't see anything on this. It's a very low market cap stock. 178 at these prices. So this was around $17 million. Right now it's $178 million. I'm trying to go to their website and it's not loading. This is what you called a pump and dump, ladies and gentlemen.
To a shortage of some fan favorite items at Starbucks. Kate Rogers has that story for us. Kate.
Hey there, Morgan. Well, there are reports on shortages of everything from cups to cake pops at different Starbucks locations around the country. Now, while Starbucks wouldn't confirm specific items being out of stock or in short supply, it did tell CNBC in a statement, quote, "We are experiencing temporary supply shortages of some of our products. Specific items will vary by market and store, and some stores will experience outages of various items at the same time. We apologize for the inconvenience, and we are working quickly and closely with our supply chain vendors to restock items as soon as possible." The company also noted some issues of labor in the supply chain that are trickling down, of course, and then impacting the availability of some of these products. Now, I know personally on the Starbucks app, I've gotten out of stock or out of season messages on certain tea drinks that I've tried to order. Also, Oatly, they got me hooked on this oat milk, but there's also been out of stock messages for that in certain areas of the country. And that's a supply chain issue on the Oatly side that I know that that company's also working to correct. But I think the common thread here is the labor issue is touching every part of the business, not just Starbucks. We've also heard it from companies like Papa John's and Wingstop, noting issues and hiccups in their supply chain, particularly around the chicken wing shortage. So a lot of this going around right now. Back over to you.
Yeah. Oh, man, but not the oat milk. I'm right there with you with the oat milk and the coffee. Kate, I am curious, is this an opportunity for Dunkin' or another competitor to swoop in and take some market share, or are they also experiencing issues?
You know, Dunkin' hasn't come out and publicly said anything. And remember, they were taken private by Inspire Brand. So a little bit of a different business operation there. At this moment, they're also a bit smaller. Starbucks is the leader. They are everywhere. So the footprint is just larger, but potentially an opportunity, particularly as Dunkin' continues to expand across the country and into the West Coast as well.
Rogers, thanks so much for that. There's so many different types of milk these days. So I don't even know really where to start.
What's your favorite?
Black coffee, simple.
Oh,
occasionally a drop of skim milk.
I have a black coffee right here, actually, myself. I'm right there with you. Other than oat milk in the morning.
The Thursday afternoon requirement for sure. Right, Kate Rogers, thank you very much for that. Still to come, the energy sector up 50% this year, and driller Denbury's outpacing those lofty gains. The CEO will join us.
All right, so we have the last 30 minutes here, power hour, and let's see if we see some volume here. We have Wish here, volume slightly dead. Let's see if in the last 30 minutes here we see some volume picking up and we see a nice setup going until tomorrow. So Wish here trading around 1031, held pretty strong today. I know it was a little slow. I know it melted away throughout the day, but it held above $10. So Wish looking very good here. Possibly potential for a nice move tomorrow, and performing very well amongst all the other names. Let's take a look at Clover Health. Clover Health here going down, gap filling, and it's going down to back to $12. It's currently trading at $14, and it's down almost $3 today, and it's not looking good for Clover Health for the short term. Wendy's also back down, almost back to its original trading range and giving up all those gains. So we're seeing a red day across the board. Most of these stocks, high flyers, short squeezes, are coming back down. Surprisingly, also, AMC was holding up around $50 for a few days. It's coming back down to $42. It could be a mini squeeze within the overall bigger squeeze. Potential squeeze coming back and jumping up around $35. That's my price target for the pullback to load up and buy some more if you're bullish on AMC. Also, let's take a look at GameStop. Big red candle here on GameStop, 213. So we're seeing a lot of these high flyer stocks that were going up. We see a lot of these pulling back in the past 2 days. Sundial Growers also right here holding at 106. Rallied up to 150. Now it's down to 106, holding above $1. And, you know, when there's big moves, big volatile moves, this could be just a pullback setting up for a bigger move higher for the following days. We have Workhorse at 1526 right now, holding above $15, which is a good sign. Go EV here at 957, pulling back, looking for it to consolidate around $9. And GTT giving up those gains and gap filling here at 266. BlackBerry also coming back down. BlackBerry coming back down to 1381. Potential area of support here around 1250. So we'll see how that pans out tomorrow. Tilray also giving away some gains here at 2005. We have Bed Bath & Beyond here coming back down. So a lot of the high flyers, a lot of the squeezes coming back down, consolidating. Potential for for buy the dip if you're still bullish, want to play that game, or lock in some gains if you're concerned. Rocket Companies here at 2063. Palantir it's been sideways at 24 for a few months now, so Palantir going a little bit of nowhere. Clean Energy gave up those gains here. I did a shout out on my Discord when it was around $9, $9.50, and I had these boxes here of support and resistance. Hit my box, got rejected, not coming back down. That was a nice trade there. I will admit I missed it. We have Nvidia here popping up 698 here. Nvidia popping up slightly, and we have Lordstown Motors here at 1066.
Over, shall we? Shares of Cheesecake Factory plunging today after announcing plans for a convertible note and stock offering. That stock falling sharply. It's putting pressure on its restaurant peers as well. So you can see Cheesecake Factory's down 8%, but Bloomin' Brands, Texas Roadhouse, Dine Brands are all lower as well. Meantime, Goldman Sachs adding ServiceNow to its conviction buy list. And the firm cites improving near-term fundamentals and the potential for subscription acceleration next year. That stock is up more than 5% right now. But as I mentioned, we've got just 30 minutes or a half hour until the closing bell. And here is where we stand. The S&P is at 4238, or up about half a percentage point. The Dow really hugging the flat line right now, and the NASDAQ is the outperformer, as we've seen some of those tech and healthcare names really leading the charge in today's trading session. Meantime, shares of Signet jumping on a blowout quarter. Same-store sales more than doubling from a year ago. Really sparkling results right there. Up next, we're going to break down the numbers and what products are driving growth with the company's CEO. Plus, CNBC's Evolve Global Summit is coming up on June 16th. Leaders and innovators from around the world join us to share strategies for adapting in this new era of business. Learn more. Register at cnbcevents.com/evolve. It is an all-star lineup.
Hey, Dad.
Hey, son.
So Wish here at 1027. Also, Mux looking good. Mux is a gold play for inflation. Although we saw the CPI numbers go up and we don't see interest rates and bonds. We don't see bonds going down. Mux is a gold mining company, and a lot of institutions own this one. This looks like a good company. If you think of inflation coming our way for the next few months or possibly years, this is a stock that can easily go to $10 under the right conditions. So Mux, big player here under inflationary conditions. Back in the crash in 2008, 2009, following that, leading up to it, and then after it, we saw big moves on Mux from 50 cents to $10. This time, it could go much higher. There's a lot more market participation, and we can see a nice rally on Mux right now, currently trading at 163, and this could be a play for a few months or years. This is not a short-term play. So Wish here holding at 1034. We're getting a little pop-up here on Wish. We're getting a little pop on Wish here. This article is just out. Wells Fargo could break free from sideways trading price action. So here on the 40-day moving average, Wells Fargo looks like it's setting up for a run. We'll take a look at the charts in a bit.
It's 5 points comfort at the moment, up about 18 points or nearly 0.5%. The Nasdaq up a healthy 0.7%. Here's a check-in on shares of GameStop, sitting at session lows, down 30%. The company reported an earnings and revenue beat yesterday after the close and announced a new CEO and CFO, both coming over from Amazon. GameStop also said it received a request from the SEC for information surrounding the recent trading frenzy. The stock, as you can see, steady slide throughout the session, down about 27%. Time now for a CNBC News update. Tyler Matheson has it for us. Hi, Ty.
Hi, Wilf. How are you? Let's tell you what's happening at this hour. Get ready for more college football playoff games. A plan is reportedly being considered to triple, yes, triple the number of teams in the playoffs from 4 to 12. League commissioners expected to discuss the possible change next week. Lots of people have been calling for that. California's Attorney General filing an appeal to keep the state's ban on assault weapons. A federal judge overturned the 32-year-old ban last week, but gave the state 30 days to appeal. And near Philadelphia, at least 3 homes going up in flames today. At least 1 explosion also reported. Smoke from the fires visible now from miles away, and 2 nearby schools have been locked down. And in India, thousands of unreported COVID deaths have been discovered in that country. One state has raised its pandemic death toll by 4,000, nearly double the previous total. The discovery raises suspicions that COVID deaths have been vastly undercounted across India. Folks, back to you.
Tyler Matheson, thank you. Well, shares of Signet are soaring today on the back of a strong Q1 earnings report. The company raising revenue guidance for the year, despite the jeweler expecting consumers to shift spending to experiences. Joining us now is Signet CEO Gina Drosos. Gina, thanks for being with us today.
Thanks for having me.
All right, so really strong numbers, as we just mentioned right there. And I realize you did raise your guidance, but overall, as you look out into the coming months, how sustainable is that strength? Is that growth that you've been seeing? How much of this is pent-up demand from consumers that have amassed a war chest of savings and stimulus money versus just, I guess, reflection of the company and the fact that you're targeting consumers overall?
Well, I'm really proud of our Signet team. They delivered an excellent first quarter. We continued the momentum that we had at holiday through a strong Valentine's Day and a Mother's Day. As you say, we did exceed our Q1 numbers and raised our guidance for the year. We also reflected guidance for a strong Q2. We're really investing to try to get more than our fair share of the market demand right now. The jewelry category is up, some tailwinds definitely from stimulus and tax refunds, but at Signet, our transformation plan is working. We're seeing great results behind our connected commerce strategy, our banner differentiation, our acceleration into service, and we're really leading digital commerce in the jewelry category.
Yeah, e-commerce growth up more than 110% year over year as well. I know that's something you doubled down on in the pandemic. How much of that continues to stay versus people going into malls, going into stores, and increases in brick and mortar foot traffic?
Well, I think the pandemic has changed customer shopping behavior forever. We're seeing a lot more customers come to us online, even if not to purchase, to look at selection, to become educated. We added during the pandemic more than 700 virtual jewelry consultants. We now have Google Chat, Apple Chat. Those are new capabilities within the quarter. We're improving our websites rapidly, more than 100 new features added during the first quarter. So we think we have a unique opportunity and a competitive advantage as we create a superior online experience connected to our scaled store footprint.
Experience being the key word there. I mean, we've been talking about this on a macro level as we see a shift emerging right now from consumer spending on goods to services as the economy continues to reopen. How are you planning on that, and how do you continue to get people to come in and buy your jewelry if that is now a competitor for some of those dollars?
Well, we did guide conservatively for the back half, anticipating that the customer demand for travel, for experiences, for going out to dinner, that kind of thing would increase. But we do also have some tailwinds. Engagements have been very strong for us. More weddings are happening now. That's always a good bellwether for more engagements to come. And people are celebrating those that they love more than ever before. I think one of the most endearing statistics from the quarter is that 53% of jewelry category customers bought a Valentine's Day gift for their spouse, and that was up 16 points versus a year ago. So people are really celebrating those who are most important to them.
That's fascinating, too, the idea of engagements as a bellwether. Diamond prices, we've seen them moving higher, starting to see reports out there about the possibility of looming shortages. What are you experiencing?
Well, we have a very strong vendor network, strong strategic partners. And so we've been working with them to ensure that all of our banners, Kay, Zales, Jared, will definitely have the diamond supply that we need. We also have a pretty long purchase cycle. And so we don't tend to see any kind of an immediate impact from inflation or shortages. And we also have found that both metals like gold and diamonds are elastic, and that we're typically able to price for any increases that we see.
Walk me through jewelry rental subscriptions and who you target with that.
Well, it's a very new service that we're offering. We just acquired Roxbox. They're the nation's leader in jewelry rentals and subscription. And we're really helping to build their awareness. We did a fascinating program on Jared in the last month where we invited customers who bought from Jared to get a free couple of months subscription to Roxbox. And when they activated that, we gave them a bounce back to come back into a Jared. So we're using the very high awareness of our other banners to help build awareness of this new subscription and rental service. We think we can, over time, become a winner in the circular economy. And of course, this is very important to Gen Z customers who are the heart of our engagement target audience.
Jenna, thanks for joining us today.
Thank you.
Well, Wilf, we could say diamonds are a girl's best friend, but maybe diamonds are an investor's best friend, with the shares up 16% right now.
Well, exactly right, exactly right. Signet stock is really the best gift of all, perhaps. Straight ahead, RH soars on a big earnings beat, and a new REIT stock gets caught up in the meme mania. Those stories and many more in the Market Zone next. And don't forget, you can watch or listen to us live on the go on the CNBC app. We'll be right back.
Little bit of the hysteria that we've had about this being permanent rise in inflation has calmed down. And you can see this in inflation expectations data. Doesn't mean that inflation won't strengthen on a trend basis. The Federal Reserve is trying to achieve that. But it is a very, very big component of this is really about the shock to the economy. And that part of it we can get over with. I suppose most importantly for markets, the bond market's reaction. The Federal Reserve is not going to clobber the economy, trying to knock it down to tame inflation. It couldn't if it wanted to tame price increases right now. So the main issue is we're not going to have dramatic increases in interest rates to force the economy down. And so therefore, the reaction quite benign in equities.
Stephen, can we talk about the Federal Reserve for a minute? I read a note this morning from BlackRock's Rick Reeder and saying that pursuing inflation merely for inflation's sake poses a very real problem. The problem is that inflation in daily necessities disproportionately hurts lower income cohorts. Are we doing the right thing?
Well, it's been called the cruelest tax for a reason. There are several issues here. I mean, for one, the overall stability of the economy, achieving stable prices and maximum employment might not actually be easy to achieve when we have very strong asset price inflation. So, again, going back to the issues of COVID and the reopening, those are not really the problem. But ultimately, I think the Federal Reserve knows that having unbound inflation rise, we have an economy that's just always outstripping demand, and it can be destabilizing, it can be quite unhealthy. So that's an issue, but it's an issue for the future, and that's quite simply, I think the Federal Reserve's interest rate outlook, its forecast will become more credible. As a very credible economic forecast, it will start to pull forward monetary tightening. It will do it very slow and gradually, but that's enough. That's enough to change the situation from being one of unbound inflation.
All right. Of course, on the market, looking ahead, of course, to next week's Fed meeting, and of course, that Jackson Hole conference in August. Stephen Wyden, he's sticking with us. So, of course, as we count you down to the close, we do need to take a quick commercial break here. But let's first check in on where we stand in the markets. 42.37, just a smidge above that record high for the S&P 500, as we're just about 15 minutes away here from the close, Caroline.
Meanwhile, I mean, the action once again in this time small caps on the downside, but really it's all about Taylor's favorite.
Unbelievable. That is yield lower, everyone. On a CPI day, that is not yield higher by 4 basis points. That is yield lower. We're at 145 on the 10-year, Romaine.
Yeah, we should point out dollar weakness on this day. Commodities getting a nice little pop, particularly in the oil space. When we come back, Taylor's going to explain Death Cross to us, Golden Cross, the Millie Rock, the WAP, everything else, and in between from New York.
Maybe Margaritaville.
This is Bloomberg.
Related sectors, right? Banks and industrials and transports, they're just a little bit on their heels. And I don't think that's a complete change of tide, but it shows you that there's a rethink going on in terms of the pacing of everything. But yes, market holding near highs is generally bullish. It's just it's doing it in a very listless way with low volumes.
Stephanie, is that how you see it? A rethink, especially as we do see both the equity market and the bond market shrug off that hot CPI number this morning?
I don't think it's a rethink about the growth and the recovery of the economy. What I think is happening is you've had a massive outperformance in value over growth by 10 percentage points year to date. And if you think about some of the components, Maureen, you know this just as well as I do. The XLF is up 26% year to date. The XLE is up 46% year to date. The XME is up 50% year to date. So the cyclicals have had a nice run. Oh, well, by the way, include industrials in that too, in double digits. But so cyclicals have had a nice run. Value has had a nice run. I don't know if this rotation is going to last. It will last if you think growth is slowing massively back to trend, that we have zero inflation and that all the inflation is transitory, and if interest rates stay low. That's a recipe for growth outperforming value. And then the reverse is true if you think the opposite. And I kind of think we're somewhere in the middle. And so I've continued to have a barbell. I do lean cyclical because I do think there's a lot of operating leverage left. I lean also on reopen. I think the earnings on the services side have yet to really inflect. But at the same time, you can't ignore some of these high quality technology companies that have pulled back quite a bit. Now, they're not cheap, but they're cheaper.
Yeah, I realize that, you know, a lot can happen over the next, I don't know, whatever it is, 6 months, 7 months. But where do you think we end the year in terms of the 10-year yield?
Well, I mean, I'm in the camp that all the stimulus will lead to above trend line growth in GDP. That will lead to better earnings. And I think that you will see the cyclicals continue to rally. That means if you think that you have a little bit more inflation and inflation isn't all transitory, and I don't think it is. I think wage pressures are a real thing. It's good for the consumer, but it does worry me from a corporate profits point of view. But I do believe you have better growth in GDP. You have a little bit more inflation and a little bit higher interest rates. Maybe you can get to 2%. That's really all we need. And oh, by the way, that's still kind of Goldilocks scenario.
Well, shares of Ashford Hospitality are lower today, but the name has been a huge meme stock winner over the last month, and Seema Modi has those details for us.
And Morgan, I'm sure you saw the stock actually turned lower after our conversation with the CEO. This is a hotel operator with a storied past and a controversial business structure, yet catching the attention of retail traders, resulting in a 130% surge in shares this year. CEO Rob Hayes, who recently joined Twitter to have a direct conversation with his new investor base, says he totally plans to embrace the meme trader.
Once you see it as a CEO in this modern era of communication, you either choose to embrace it and use it for the sake of the company and the shareholders and our employees, or you become a silent CEO. And I chose to lean into it a little bit, and we'll see what happens.
One way he's leaning into it, issuing a number of stock sales this year. So far, he's raised about $100 million. Keep in mind, this is a company that's sitting on a lot of debt, approximately $4 billion, guys. Back to you.
Seema, thanks so much for that. Mike, in meme stock world today, quite a lot of selling and steady throughout the session, getting worse for the likes of GameStop, down 30% now.
Yeah, I mean, obviously, it requires waves and waves of new money at higher prices to keep these things going. Most of the stocks that have moved a lot this week on these stories have not been genuine short squeezes where there legitimately were shorts forced to be big buyers in these names just because the volumes were swamping the short positions all along. So you do have a reset here. And it also is not as much of the intensity of the chatter and even of the options trading was not quite yet matching what was in January. So, yeah, I mean, obviously they're still dealing with being up big from a few weeks ago or even more recently, but pretty steady give back today. And by the way, you have these big movers up on earnings today, like Signet, like RH, that it's like, you know, stuff's moving on its own merits as opposed to just because someone said something online.
Yeah, Stephanie, I want to get your thoughts on the fact that we're seeing pressure on some of these high-flying names as of recently. I mean, is it profit-taking? Is it part of the bigger rotation, at least maybe mini rotation this week that we're seeing in the market conversation we're having?
Well, the meme stocks make no sense to me, to be honest. There's a certain kind of investor that invests in these things. And I actually would say they're more traders. They could be hedge funds, but the point of it is that these people are nimble and they can accept volatility for sure, because there's a lot of volatility. They're not really trading on fundamentals. I don't know why the SEC isn't more aggressive. I know they're starting to kind of pick into the whole situation, but they should be really aggressive on this to get to the bottom of some of these moves, right? So I think out of all the memes, if you want a name, and I don't even think it is really a meme because it's only 4% short interest, is Wendy's. They actually have a story to tell. They actually have EBITDA growth in the low single digits. They have store growth. They have international expansion. And I think they're a reopen name. And as I mentioned before, services is really a big part of my theme in my portfolio for the remainder of the year. And so if I had to pick a name, that would be it. The rest, I just don't understand.
Boeing is higher amid reports of a potential jet deal with United. Phil LeBeau's got those details for us. Hey, Phil.
Hey, well, two pieces of news involving United Airlines. You mentioned Boeing as a possible sale of 737 MAXs to United. Well, according to reports, it's not just Boeing. It could also be an order that involves Airbus as well. According to Reuters, they are looking at buying 100 Boeing 737 MAX 8s and then also dozens of Airbus A321 Neo jets. Now, for Boeing and Airbus, this is what they need. They need these orders to pick up. They have been moving and accelerating, although for Airbus, they're still at negative 31 planes on the order book this year, so they needed a little bit more than Airbus. Take a look at shares of United. The other piece of news from United this morning, the company announced on Squawk Box that it is forming a venture capital fund. They've already done 3 deals in the last 7 months, and according to the person in charge, guys, they have $200 million, and more deals are on the way. Back to you.
Phil LeBeau, thanks so much for that. A321s, of course, not A312s. There's not a new plane out. Steph, come to you on this and what your takeaway is. It's a stock you've been into and out of at different times. Where do you stand on it at the moment?
Yeah, I own Boeing. It's my largest industrial position. It's up 16% year to date, so it's had a good year, but it's still down 40% from its highs, old highs. But this is like a reopening, right? As air traffic continues to recover, the TSA checkpoints are really very solid, and they are improving sequentially. There's a replacement cycle in this story as well, as 21% of their wide bodies are 20 years or older. So you have a replacement cycle story. I thought the Airbus news a couple of weeks ago about increasing production and deliveries bodes well for Boeing, because that could add 450 new planes for Boeing as well if the demand continues. And so, and by the way, you do have a catalyst in terms of China potentially recertifying, maybe second half of the year. And this story trades on free cash flow, Wilf, and it's improving. And we're going to see a swing from a negative $2 billion. It could go as high as $16 billion over the coming years.
Yeah.
I want to get some breaking news. Sorry, just quickly on Didi, of course. Chinese ride-sharing company. Leslie Picker's got the details on that. Leslie.
Hey, Wilf, that's right. Didi filing for its F1 for an IPO this year. It's been reported that it's seeking a valuation of more than $100 billion. So the first F1 disclosing some details about its financials and prospective listing is now here. Going through that now with regard to its financials, the company reported about $6 billion in China mobility revenue, total revenue of $6.4 billion for the first 3 months of the year. The company, in terms of profitability, it is still reporting losses, although very, very, very close to profitability, at least in the first quarter of the year. On an annual basis, though, it does not appear to have had a profitable year thus far. With regard to the IPO, it will be underwritten by Goldman Sachs, Morgan Stanley, JP Morgan. And we also know a little bit more now about the investors, the principal shareholders in this IPO. You've got SoftBank holding about 21.5% of the company, Uber 12.8%, Tencent 6.8%. So some very big backers. This is likely to be one of the biggest, if not the biggest listing in the U.S. $100 billion valuation is what others have reported for this company. So it's definitely going to be one to watch with a listing expected sometime this summer, guys.
Yeah.
And that was $6 billion revenue for the past quarter.
For the past quarter alone, exactly. It was $20 billion. Let me get actually the exact number there. It was $21.6 billion in 2020 for the full year.
Yeah. Leslie, it's going to be a really busy summer for IPOs as well. And the Journal did a write-up on this, I think, just this morning, that IPOs could raise some $40 billion over the summer months, which would be the most ever on record. And then you take that and you couple it with the fact that we are still seeing, it might be more of a drip rather than the voracious flow of SPAC deals as well. And you have more and more companies that are coming to market right now.
Absolutely. It is. I know what Journal article you were talking about from this morning. They're certainly starting to see a resurgence of IPOs. Of course, you do still get the SPAC deals that are announced as well, although actual issuance of SPACs is definitely down from the first quarter of the year.
Yeah.
But it is interesting to see some of these bigger deals test the public markets this summer.
Leslie, thanks so much for that. And Mike, just dwelling on that revenue number, so $6 billion for the last quarter. That Uber's was about $3 billion, so it gives you a indication there of the relative size. And of course, this was a market in ride-sharing that was fiercely competitive until everyone decided to sort of focus on their core markets and step back, and Didi, the very clear player there.
Yeah, and you wonder exactly how you'd work them against one another if you were, trying to figure out what the economics are, if they're different over there in terms of now, prices going up here with Uber, very difficult to find drivers. So a lot of the dynamics are probably going to be different. Also, there was a little bit of a chill in terms of very large IPOs of Chinese companies in the U.S. We'll see if that is something that's gone past, or if this is a unique situation because it is huge and has so many diverse owners right now.
Yeah, that's such a key point, Mike. Well, we've got 2 minutes to go, or a little more than 2 minutes to go in the trading day, and you have more on the market internals, she said, Mike.
Yeah, Morgan, it's been a little bit slippery under the surface here. Not necessarily a negative day, but given that we hit all-time highs and for a while we're up more than 0.5% on the indexes and even more on the NASDAQ, it has been a little bit mixed under the surface. New York Stock Exchange advancing versus declining stocks. Give a look at that now. It's been modestly to the upside all day. It still is 1,777 advances, almost 1,600 decliners at this point. Take a look. We were talking earlier about pullbacks in some of the cyclical sectors. Take a look week to date of the industrial sector against software. Software really is really the deflationary kind of secular growth sector. Obviously, if you looked at it on a year-to-date basis, industrials are trouncing them, but it is a little bit of a mean reversion trade going on right now. The volatility index talked yesterday about how it is sort of clenched up a little bit. There was a bid to it with the meme stock volatility as well as the CPI number coming out, and that's really giving way, down almost to 16. You would imagine that it's got a downward bias here. We got a summer Friday coming up. Yes, a Fed meeting next week, but it would seem, given the very calm levels of absolute volatility in this market, somewhere around 5 or 6% on the VIX scale, you would imagine that it would have a little bit of a downside bias, which would be bullish if it continued. Well,
just under 1 minute left in the session. We are set for a record closing high on the S&P 500, which is up 0.5% today, and about 3 or 4 points of breathing space there to get that record closing high, which we are set to have. The last one, of course, coming about a month and 4 days ago. The Dow's up just fractionally 20 points or so. It was up 290 points at the high of the session, so well off the highs for the Dow. The Nasdaq still holding on to 0.8.
All right, and that wraps it up for today. So we saw a slow bleeding on a lot of the stocks. Wish held up nicely above $10. That keeps me bullish for the short term. Long term, overall, I'm bullish regardless. But I'm feeling confident here for tomorrow. So Wish here holding up at $10. Clover Health melted away. It's holding around $14 and potentially setting up for tomorrow. Let me pull up Clover Health after hours numbers. After hours, Clover Health is up 35 cents. I'm not sure why it's showing post $18. It's not. It's actually up 35 cents. It's right now $14.39 Clover Health. Let's take a look at Wish. Let me see what. I'm not sure why it's saying $11 here, but it's not $11. Let me take a look here at Wish. Wish is currently up 47 cents right now after hours. It's at 10.74. I'm sorry. It's up 5 cents and it's 10.74. So Wish holding up very nicely. Most of the day was a slow burn. Not too much excitement going on. We've had a lot of excitement in the past 3 days of trading days. So this is just some consolidation and taking a breather. We'll know within the next 3 to 4 days if we're going to go higher, and there's just some profit taking here for us to go higher in the next following days and weeks. CPI numbers were bad, and bonds are actually going down. So comparison to last month, this was negative news. This is something that would affect the market, but it's not affecting the market. We still want to go be cautious going into tomorrow and the weekend. And I'm basically waiting. I have some cash on hand right now on the sidelines. I'm waiting for the weekend to be over. I'm pretty exposed right now for going into tomorrow, and I'm not trusting this weekend. Usually you see moves happen over the weekends, and I don't want to be surprised coming in Monday being all in if markets want to go lower. So I'm just going to stay with my positions. I took some intraday day trades, very short day trades. They didn't work out. So maybe I come tomorrow with a day trade here and there. But basically waiting for me to size up and put a bigger position until Monday if markets are looking good. The S&P 500 is at all-time highs basically, and the VIX is going down. So we'll see what happens until tomorrow. I appreciate it, guys. Tomorrow I'll do a short stream, maybe for the opening, and I'll probably do one for the closing. I'm not going to be on all day. I have some things to do during the day, but I might do one for the morning, for the open, and one for the close. So I appreciate it, guys. If you guys can subscribe and hit the like button, I appreciate that. And I hope to bring a lot more daily streams here, as many as I can, and just to get some live feed of news and activity. Thank you very much, guys, and I will catch you guys tomorrow morning.